Hey, peace and love, everybody. How you guys doing out there this evening? I'm chilling. I'm just leaving the flea market, and I said, you know what? Let me go and do some practice on some charts because I have been out of the loop, and I need to really brush up on what I'm doing. So, peace, power, and profit to everyone out there. And I just want to make sure I tell you all to like and subscribe. Like and subscribe. Okay? Let's see. I want to practice some charts today. Practice my technical and my fundamental analysis. Yep, that's what I'm gonna do. So if anybody wants to get on the panel, let me know. That's what I want to do on this evening. Uh-oh. Onique's in the building. Hey, peace, power, and profit, Onique. What you doing? What you got going on?
Oh my gosh, I'm here. Oh my God, learning this forex market,
Ah,
learning learning how to do some binary options trading.
really? You gonna have to show me how to do some call you. I'm live. You gotta wait till I get off the live. I just went live. Oh, you gonna have to teach me something. I'm gonna do some chart. I'm gonna do some charting. I need to practice. I need to brush up because in class I was like, oh my gosh, I've been out of the loop. I need to get back in the game. I did good
hmm
last year. I have 6 months to make it happen. To make me some dollars, and I need to get it. So I ain't gonna be talking all day because I want to get in and plot, do some support and resistance. I want to do some practice on that. And then we could talk about some binary options. I'm not sure how much time you have today, but I'm chilling on my recliner and
Oh
and I'm gonna
yeah,
go ahead.
no, that's I'm actually on Trading View right now, looking at some trades, some
Oh,
trades, some trade alerts that was on Friday. Just kind of like marking it up now to see what happens on Monday when the market opens up.
oh,
On
you,
Sunday, actually.
you want to share your screen?
I don't. Well, I'm just looking. I'm just looking. Give me 5 minutes. Me to set it up.
Okay, I'll do mine while you do that. What is this? Ever since I put this thing on my screen, I don't know how to get it off. This
What
Fibonacci.
are you on? Were you on Trading
I'm
View?
on
What is
Trading
this?
View right now.
Okay, you on Trading View. Okay.
Mm-hmm. I'm gonna chart.
Yeah, I was just looking at. I missed the market yesterday, so I was looking to see what came out.
Yeah, I'm gonna so this was let's do it like this. What's this? Oh, this is a big deal. I'm gonna bring it in. So for those of you out here, I'm just practicing my technical analysis. So you guys, want to tune in, you can. I need to look at my display, look at my charts. What do I got on this screen? I need to get back into it. I really do. Mess around with my indicators. How do I get this off? This said Fibonacci, but I don't know how to. Somebody will tell me. Let's see. I don't want to. I don't need to. All right, y'all. I don't know what I got going on my screen. I need to move that. I need to get amounts. All right.
Oh yeah, I gotta get one of those.
You need amounts.
Yeah, makes it easy.
Oh my God. I did the Fibonacci and I don't even know how to. Let me trash this thing. I can't talk to you guys about Fibonacci because I don't I don't know how to do it myself. Let me see if I can delete this one. I tried to get it off the screen. I don't even remember how I got that thing on there. Okay, maybe I could how do I get it off? All right, so I'm gonna go here to my little gear appearance. What do I have in this background? Goodness gracious. You guys, I got a solid background. It must be from the Fibonacci. Them lines, them color lines must be from the Fibonacci. All right, so I'm gonna try to do some plotting right here. So what do I want to do? I'm gonna draw some support and some resistance. Let's see. Get some practice in because I really need to step my game up. I need to get back in it. Get some practice in. What's up, Chris?
What's going on?
Can you tell me how to get this right here off my screen?
What is that?
I think it's a Fibonacci deal that I did a while ago.
Right click.
Well, you know I ain't got the mounts. I'm gonna need to go get it. I'm gonna tell my nephew to come bring it to me.
You ain't got no mouse on your laptop?
I do. I just don't like to use it.
Yeah, just hit the right click button, man.
I'm gonna move it. Let me see if I can move it. I'll move it up here. All right. All right. So I just came live because I want to practice my charting.
Oh, have a good night.
He said, have a good night. So you don't want to help me? He rolled out?
What?
I said, what you saying? You're not gonna help me? You don't want to help me learn?
What's wrong with you?
Ah.
What? What you trying to do?
I'll just go practice.
Support and resistance lines?
Yeah, I'm going to practice.
Oh, okay. You know what to do already. Why are you saying help you?
I know. I do know what to do.
How about you been out the game for a while? You've been out the game for about a year, the whole 2021.
You see the whole 2021?
You just kicked option trading to the side. That's okay. I done took up your shares, so it's all good.
Did. You really did. You kicking butt too.
I got my ass kicked this week. I know I lost a good $1,000, $1,200.
Well, that's because you did that space, ain't it?
Well, space, and then Goldman Sachs had earnings, and it did good, and then with the news that came, interest rates, inflation, jobs data, CPI numbers, all that stuff, it just went bad. It went bad. So it's all good.
You had made that you had made. Go ahead. Which color?
They beat earnings. They beat on earnings. Stock jumped up. The next day because they had earnings before the market opened, and Goldman Sachs.
Okay.
So I played Goldman Sachs. I played J.P. Morgan. I played Morgan Stanley. I played Pepsi. Pepsi, I made about $400 on. I still got my J.P. Morgan call. I still got my Morgan Stanley call. But Goldman Sachs, I played it into, to Friday. And, it shot up and then it went down. I got to do better with that, man. I be trying to hold it, until, the option expire.
Yeah.
To see, if it's going to, roll over or, go back up. I should have just sold it with all the, news and stuff that came out. I should have sold it early because it just kept going down. Space, it was just a lost cause. I was about a rumor seller news event. So it jumped up market too, but you know, we can't sell pre-market. So, you know, I got better at, just leaving some of these plays as a lost cause because you know they ain't just don't it ain't gonna go back up. So
Right.
that's the only thing about options. You know, you buy it into, you buy it a week, get a week option, call or put, and it's been a couple of days and it's going down, and you think you might have a chance for it to go back up, so you don't really know when to pull the trigger. So,
Well, that's why I just so you don't do the percentage.
what do you
I
mean?
got two hands on this damn thing. You
What?
don't do um like a
Fibonacci?
risk. No, just a percentage of what you think or a dollar amount that once you hit that dollar amount, you just watch it to see if you could get more.
I mean, I do. I mean, like I said, my goal is like, if I can get 150 per trade, I'm good with that. But if it don't get it that day, I don't sell. You know what I'm saying?
Oh
Especially
yeah,
like,
yeah.
you know what I'm saying? If I got the option for a week, why would I sell it on the first day because it don't hit that target? But
Right.
that could be an Achilles heel too. So as we just seen, so space that was $600 going down the toilet. Same thing with Goldman Sachs, another 600. That's a lot of money.
Mm,
Yeah, that's $1,200. And then
right.
I made some of it back on space. So because I did a put too. I did a couple puts on it. And I lost on 2 SPY calls as well. So
You went. I had a one that was I had one spot call, and I should have done that put, and I got interrupted.
you
But
got interrupted.
yeah, because I was doing my analysis, and I was, how you just people just like to call your name. Goodness gracious. And I'm like, man, I'm trying to. That's why it's like, I'm about to get back in it. Where don't need to go? She left us. She better come back. I want to see them. She gotta show me something. Okay, so everybody should have. If y'all did those calls when it was Thursday after class, everybody hit that the mark twice.
Well, no, I had a 438 call that I lost on, and then 436.
It went up to 436. What happened?
No, I
Oh,
went.
that's Monday. I'm sorry.
Yeah,
That's
it
Monday.
went.
Oh no,
Mhm.
it went to four. Oh, only 26 cents over. Yeah, it dipped.
Mhm.
So basically, it it hit the 34. Everybody said the 35. They did the 435, 436, but you had a 438. You
Yeah,
was
but
out of the money a little bit.
yeah, previously around like 437,
But
40, 50 something.
right, it came and tried to fill that gap a little bit. It
Yeah,
went.
I think I was just doing too much. Um,
It get larger. It did fill the gap. It came back and filled the gap right here.
it double top right.
Go back. We're right here.
Hmm. Yeah, you know, it got 438, and then it went down back down. So
Yeah.
some learn. I got to make that up.
Double tops. Yep. It did do that.
Uh,
You say you gotta make it up. Yep.
yeah, well, I still
So
got
you got You got some plays coming up, huh?
Yeah, I still got 3 call options out.
3
Uh,
call options
yeah.
for a SPY.
No. Starbucks, Morgan Stanley, and J.P. Morgan, and Apple.
This definitely a This got that. Hold up, let me get this off. I gotta learn this again.
How much? $154 there, $69 there.
Yeah, I don't think the SPY is about to got that mushroom effect going on.
Yeah.
When the RSI is, that's the hourly chart. The RSI is way down though, so it could possibly.
It's just a bunch of manipulation going on.
Yep. Yeah. Let's see. Let me go down.
Bunch of bullshit.
That's the hourly chart. Oh, look at this volume. That's crazy. That's what it was feeling like in pre-market.
Mm-hmm.
And then, just what else?
Too much red.
Too much. And even this right here, this on volume counter right here, and then it did that. Look at that. It's way down. They dumped. What's going on? That's the what's going on Friday? What's going on Forward News Friday?
You had jobless claims
on Friday.
Yeah. Let me see. Friday, yeah.
It's U.S. stock market ended a seesaw week with a sell-off. Yep. Sending investors into the mid-summer weekend with renewed worries over the amount infections of the COVID. Yeah, that new, the little new variant, huh? That Delta variant, and persistent inflation concerns. All 3 indexes, which began the week with record closing highs, skeleton past the finish line to the end below last Friday's close. Each of them snapping 3-week winnings. Yep, they showed pull back.
Yeah, and Jerome Powell was testifying too. So for those last 2 days, for Thursday and Friday, and then you had core retail sales, retail control, and all that. It's just a bunch of everything was down, So
You say what was the other company you said you did?
What, Goldman Sachs?
Goldman Sachs. What was that gold? You had an option on it?
Yeah, I had a call option, but they had earnings on
this one, GS?
Yeah.
Eesh. The hell is going on here?
How goes cooking?
So you had puts?
No, I had
call?
a 382.50 call going into earnings. It shot up and then it didn't go back up no more.
When was earnings?
Earnings was Monday, I believe.
Okay, that's what. Okay, so you didn't sell it. Oh, it ain't nothing to sell. You had you had 382.50. Yeah, you should have made a couple bucks.
No, that was pre-market though.
9:30. Yeah.
Well, not. Yeah, well, not. But see, it went
right
up there
at the bell.
Yeah, but it pulled back. I was hoping it was gonna go up a little bit more because they beat everything on earnings. Their numbers was too good, matter of fact. And that shit went down. I was like, what the hell?
Let me see the hourly.
Yeah.
Ugh.
Yeah. See that? These motherfuckers cost me some money.
And Monday, look at it. Look at that volume right down here.
Hold on, when is that?
That was Monday. This
June.
It did what you said. It went up. It went up.
Yeah.
This is 13. And then it in pre-market, and then it just say boop. And then it went, and then it oh it didn't hit no 382. You're right. It didn't even go back. Undecisiveness all up in here.
Yeah, and I probably should have pulled. That's why I got to get better.
And then because you could have pulled, but you also you probably what should have did a spread with the one
credit
put one
spread.
call, one put one call.
Yeah, but I didn't want to do it on. When I play earnings, I don't
Shit,
spread.
yeah.
Yeah.
But you the broke bread though. Look at that. Look at that big dip.
Yeah.
Mm.
So what it hit up there? It hit 385.
It hit 380. It hit 385.22.
Yep. See, I would have made. Yeah, matter of fact, when it opened, I was up about $200.
Oh, I would have.
But that was only for a few seconds. It was only for a few seconds.
Yeah, I see. Because that didn't last long at all.
Yeah.
And look at those two institutions, big dumps. Look at that. Look at that.
Yeah. I'm like, what the?
They white. Whoever put all that money in right here, they came back and got all that.
Well, I'm like, man, they had excellent numbers. They beat on everything. I'm like, how the hell this shit just dump and sell off like that? And then it never went back up. And I'm like, okay, well, inflation and, all this other stuff. CPI numbers was terrible. I mean, there was nothing that could be done.
Yeah, because that was crazy. Let me go to let me look at its fundamentals. Ooh, his ATR is 9.78.
Mm-hmm. And then look at the
look at his
at the analyst. Look at the analyst
on the bottom.
Yeah. What the analysts have to say. Trust me, I did all my due diligence. I just got screwed by, economic numbers. That's all it was.
Yeah.
Look at that. Buy 391, buy 450.
Mm-hmm.
That was June and July.
July, the 391.
Yeah.
And then at the top there, the
target price 403.80. So
yes, the target price is 403.80, and the performance is looking good. I mean, you took a good.
So I didn't just go based off their earnings numbers. I went to FanViz first, then I went to Barchart, and I did my due diligence. Any other time, I would have made at least $1,000 off that trade any other time, because that was supposed to go up at least $10 more.
Yeah.
But whatever.
Yeah. Let's look at the monthly one on it. Shit, still, yeah. I mean, yeah. Look at the draw right there.
Mm-hmm.
That wasn't a bad call, and I'd like to invest in it. Look at the dividend.
Mm-hmm.
Look at his return on asset equity investment.
Oh yeah, I'm long term in it too. I got a share of it too.
Let me see. Let's see. I want to look at Moderna. Hold on. I'm live now, messing with stocks. All right.
Yeah, Moderna crazy.
Yeah, my portfolio looking good in the stash account. Ooh, what do you think?
Donate.
Yeah. Look at this gap though.
Mm-hmm. Gonna be a part of the S&P 500 on Tuesday.
Ooh. And Robinhood IPO, didn't it? Or did I see something wrong?
No, they haven't IPO yet.
I see some came across my thing. Oh, somebody else must be IPO'd on Robinhood. Some came across. Look, it is right here. Oh, okay. Outbrain. That it was telling me somebody else. It was
Right.
showing me somebody else. IPO'd at $16.94 Couple of people. Yeah. So let's look at this right here. Look at Moderna. I ain't never even tried to play no options on Moderna because I got it for long term.
Moderna.
Mm-hmm. Let's see what the numbers looking like. So I'm gonna practice. I want to practice. Of
That's
course,
cool.
look
I'm
at it.
glad you getting back in the game. It's about time.
I know, playing in the streets.
You was about to get moved out the group.
You was gonna boot me out?
I was just saying.
They gonna give me the boot. Look at them numbers, Chris. God, Lee.
Yeah, I know.
I need to work for them. They get the government, man. Somebody must be working on the board or something. Somebody in Congress must be on the board of Moderna or must be a family member. Because, boy, look at these numbers.
Yeah, they numbers crazy.
Look at the sales, Chris. Look at this 24,000
Yeah, that's crazy.
in sales quarter over quarter.
Be a fool not to invest in it. I'll tell you that much.
Dang. OMG. Look at the gross margin. 92%. Man, they exceeded their target price by far.
Yep. What is it, like 290 something?
Yeah. They exceeded their target by far. By far. Crazy. Yeah, man. Let me go back. Let's see.
Yeah.
What else we got to do? Huh? Let me look at
we got some more earnings this week.
Oh, let me go to the earnings. Hold on. Let's look at our earnings. All right, you guys. So we're just sharing our experiences. We're looking at our charts, having a conversation amongst each other. We're not giving you any advice. We're definitely not telling you what to invest in. Do your due diligence. It's all up to you. We're just having a little fun and just showing our financial experience and how we are learning to be our own lender. All right, so this is Earning Whispers, and you go to Earnings Whispers, you can click on the calendar, and you can see in the very beginning, you can see Monday through Friday's charts, and it'll show you, how many people before the market and how many after hours have their earnings calls, right? And if you invested in any of these companies, you should get emails. If you want to listen in, you're privy to listen in. All right, so we can scroll down. You have the chart. So this is everybody who have earnings. Anybody in particular, Chris, that you?
We got
this all pre-market.
Huh? Let me see what you
all pre-market. Pre-market.
Sonny,
ain't you at a wedding? How you gonna be trading at the wedding?
Pre-market. Okay.
Sonny, let me see how sharp you are.
That's Monday.
Yeah, this Monday. Hold on, let me see.
Oh, it ain't no.
Which one did you?
I care about. Be honest. That don't mean I won't play it.
He said, no, yeah, this the
Well, you fired.
What did I do?
Everything.
It's about to get booted out the group.
Steel Dynamics.
Let's look at Steel's Dynamic. They say they expected Expected revenue growth, huh?
Expected revenue growth.
Yeah, 100%.
Okay.
Let's look at them. STLD. Did I see that flying across on the top gains list? STLD. Oof. Come on, one. It's a 1 hour chart. This is a fallen flag. Um, they're gonna have to make a believe out of somebody.
Put it on 5 minute.
5 minute. So I guess after this dump, they're gonna bring it back.
Okay,
Bring it
go to Finviz.
Okay.
Let's see what the analyst say.
Yeah, D. We need to go to what is it? Tip ranks too, right?
Yeah.
STLD. Okay, let's see. See what y'all working with. Well, 2.3 ATR. They got overweight. Oh, let me come down some.
$33 to 107.
107.
That was back in June.
Mm-hmm. And April 49 to 61.
Okay,
Bank
neutral.
of America by 57 goes in April. So everybody seemed to not have a pretty good end on it. Let's see what they got some monies. They not in the red, they're in the black. Performance over the year, and they got a price target at $74.22.
What's the price on it right now?
I'm going to deal at 60. I think it's 60 something. 59. $59.94. 59.
We're kind of late.
Yep.
We ain't gonna be able to play this, but I mean you can if you want, but I ain't. Monday, unless they earn it.
Start way down, so it's probably going to do a little something.
What is it?
15-minute chart. Look at that R side. It's way down there. It's going. I think it's going to trend up. Huh?
It's oversold.
Yeah, about far. Man, look at Sunny. Sunny sharp. Sunny going to a wedding. Let's see something here. Let me draw this in a little bit.
How you guys doing? I wanted to ask some questions before I do go in. When you guys
Oh, okay, go ahead. Go ahead.
When you do look at the stock, right? Are you looking for the day for days, or are you looking through weeks, or are you looking through ticks?
You know, I've been putting mine, and Chris can answer. I've been looking at the hourly chart, and I think the hourly chart gives me 1, 2, 3. The hourly chart give me like almost a month. Yeah, a month, 2 months. 2 months of data, and that's the furthest I'll be going, unless I want to go back and look at what is done maybe the previous years, if I'm trying to compare performance, or if you're looking at earning, if I'm doing earnings, then I look at the previous quarters. What you do, Chris?
Look at everything.
Yeah, you go through a little bit of everything.
Yeah, but you definitely should look at previous quarters if you're looking at earnings. I mean, this stuff is. I mean, if you get real good at it, should take you 30 minutes.
Because I think I've gotten good with the I'm cheap, so I think I got good with the cheap stuff. Like looking at the small stocks that's under $1 or under $2, looking at the history, and then looking at what they're doing from week to week, and basing on that. Because most of the time, if I do the stock, the options, I'm doing them for the 34-day or the 58, something like that.
Oh, okay, yeah, that's smart. Get them out further out. On the mature. That's another thing too. The closer your expiration, you know, that delta start going down, and then you know if you're already down, it's just screwed. So
Yeah.
further out you get your
Mm.
Wait, oh, go ahead.
No, go ahead, Sonny.
Now I was gonna say, majority of time when I do my options, unless the only way that it's been working for me fast is like doing the SPY, but everything else,
Yeah.
like it seems like it doesn't work for me fast. It always works for me like within another couple weeks or within another month. So I start looking at the patterns of what I'm looking for, and I start looking at what matches with my routine. All right, thank you.
Okay. I like that because I started doing some leap options. Well, I only got one, but um yeah, and then yeah, I can make some short turns based off of doing my support and resistance like this. And I'll put up my Bollinger Bands and I'll see where the stop falls. So if I'm looking at my options, I'll I'll look at my bands. That middle one is a 20-day moving average, and I look at the top, right? And I won't only play options in between my Bollinger Bands, but that's me. That's how, you know, because I'm comfortable with those and knowing, it moving up or down.
Are you guys good at you know how when you do go to options, you can switch it. Like you can go to Concord, or you can go to I think a strategy. You can go to different ones, right? Do you guys go through that, or you just go with the standard basis?
Oh, me, I've been doing the reg what do they call it? Um Hold on, let me go to bar chart. So I just naked calls and naked puts. I've just been doing naked calls and naked puts. What am I looking at? STL. That's what I do, which is straight up. I'm learning. So you talking about these right here, right? You looking at these different ones, the cover calls, naked naked calls, naked puts,
Yeah,
credit
yeah.
debit spreads. Oh, I haven't gotten into that. I know Marquise. Let's see if he's busy. Marquise been doing those, and he's been doing real well on them.
Yeah, I had did it by accident, and even though I broke even, I figured out what I did by accident, and that's what opened me up to what those are.
Okay, so talk about it.
Okay, I went through
So,
SPY, right?
okay,
And
wait, let me put it up. So you went to Spot. Did you use bar chart, or you just put it up on Webull or something like that?
it was on Webull.
Okay.
I only do my stock through Webull. I was going through everybody else, but Webull is easier and it gives you more promotions.
Yeah, that's true.
I'm trying to figure out a way right now. Me and my girl been talking about it. I really want to figure out a way where I can create a business, not only doing constellation, but actually like doing what we do, but within a local basis
You
versus
can.
going on the internet.
You can.
Yeah, that's why I deal with the professionals like you guys, so I can get better.
Yep, you can. Um, Let me see if I could. I don't know if I could pull up option up. Let me see without logging in.
Can you imagine this time next year if you would have showed me any of this stuff? It looked like Chinese.
It did. Like, remember last year we looked at it. Remember you looked at Chinese. Now you speaking a little lingo and everything. Here we go. Options. All right, here we go right here, Sonny. Let me see if I can bring this up. See if I can hide the chart. Oh, did the wrong thing. Show. Okay, let me see. Trying to see if I can. Okay, maximize. All right. So I got it up. I'm on Webull. Where you go?
I see it. Okay. I think it was go to Concord.
Go to
When you
where?
go all the way at the bottom.
Wait, go where?
Go all the way to the bottom. It should show you. Let me see.
I'm on a desktop. So which ones, huh?
Oh yeah, because I do it on the phone, so it might be at the top there. Settings. Yeah, press settings.
Oh, I'm gonna go. I got you. Oh, go to settings. Let's see. Weeklies. Oh, here. Oh, I only got calls and puts. I don't have extra stuff.
Oh.
So I don't know how. Let me see this right here.
Wait, go to settings and then go to layout of options.
Layout of options. Okay.
Yes. Go to settings and then go to layout of options.
Layout. I only got list view and type. You mean to go to list view, maybe?
That's it.
I don't know. I only got two options: tab to view and list view.
All right. All right. Because on my phone, it has like 8 different ones. I'm trying to figure out if I could put it on the screen.
Oh, you want to share your screen?
I'm trying to think if I could do it, but my battery's kind of low. That's why I was hoping that you could do it. But anyway, basically, I'll just explain it. It had it had 3 different sets of what it can hit, and I'm not for sure in what actually happened because I thought that I was going to reach a strike price of 30, what was it at the time? It was like 30, and so I had reached it and it had dropped. But when it had dropped, it basically I had closed and it gave me my money right back. So I was trying to figure out what that was.
Wait, repeat it one more time.
Okay, it was a set of 3 different numbers, right? It was like 435, 400. I think it went to 438 or something like that. And my initial was supposed to be, my strike price was 46 and some change. It had dropped, but it hit the 40, what was it, 436 and some change. But when I closed out, I basically closed out before I could before I could go all the way under. And I still don't know exactly what it was. That's why I was asking you guys if you knew what that was.
Hold on. Let me copy this link real quick.
Oh, is that me?
It's me. I'm sorry. I was trying to get the link to put it in the chat. All right. So I'm not sure, Sonny, without let me stop sharing and you share so I can see what you see. No, you know what? It's gonna open up your account. You don't want to do that.
Yeah.
I'm gonna look on my phone real quick. Let me go to the spot. Let me go to options. Now, where you say I need to click? Okay, single option. Oh, okay, cover. Which one did you click?
Yeah, it has different ones.
Yeah, I see.
Single option. It had
Yeah, which one did you select?
I think it was Concord or something like that.
Okay, Condor.
Condor, something.
Oh,
it was something
like I see.
I don't. It was an accident when I pressed it, so I don't know.
Now this one. Okay, let me see if I can find it on here now, so I'll see what you see now.
Oh, they almost.
Okay, let me see if I can get it on here. I'd have to. No, let me stop sharing, and I'd have to log in. Let me see. Option. It's under options. and then it's on the bottom. So where's that Brandon when you need him? Okay, check this right here.
You're not finna use Brandon like that.
Yes, I am.
In fact, I'm gonna tell him you said that too.
Brandon, no, we cool. Stop playing. You here instigating.
You be
because of Brandon, I've been practicing one trade a day. Whereas before I would try to just go everywhere all at one time. I try to have patience and only focus on one trade a day.
See? Secrets with your peanut head. Trying to tell.
This got on me too about doing my due diligence.
Yeah, because you be you be getting it. Hold on. Okay, I don't what is this? Okay, this is the so this is the let me check around here. Settings. Trades. This is the practice version, so but I do see it on my phone what you're talking about. Oh, you know what? I wonder if did it just trade like that on my phone? Did it do it like that because I did that on my phone? I don't know. What's this about? Oh, maybe it's the break even. Oh, break even dollar points, maybe. I wonder. I would like to see that though. Because now I see it on my phone. I was never even thinking about that. Okay. And I don't want to. Because if I don't want
Guys,
to.
I might have to tap in another 30 or 40 minutes. The low riders are coming in. You know, it's a California weather.
Uh-oh. You gotta let us see.
What? Let me see.
Hold on, let me stop sharing so I can see. Let me stop sharing. Who get married?
My girl's cousin.
Okay. Sonny got a beard now.
It won't turn it on.
Sonny got his grown man status.
These are well, I don't know if you can see all the way to the back.
Oh, I see the cars. That's what you meant.
Yeah, they just started dropping in, so everybody's going in right now.
Okay, well, you better get you a seat.
Yeah, I'm probably gonna sit in the back.
All right, no big deal.
All right,
what's up, man? All right, Manson Nagas, what's up, man? You got some questions? You say you wanted to know how to start. I can't hear you. Your mic is open, but I can't hear you. Okay, so what do you want to do? Long-term investing? You want to do you're interested in if you're interested in trading, I recommend you reaching out to Brother African Emporium and getting in this mentorship class. Do you want to know some day trading, a little bit of everything? I'm gonna just share with you where I started. I started with Stash. And so we got a few accounts. Webull has a built-in scanner. So this is Webull. Chris, post your links in the Zoom chat. Okay, let's see. All right, so here's some websites that you need to get in on. Are you trying to?
You started being cheap, Mo. Let's be truthful.
He didn't ask you that. What's up, brother AE? Over African Emporium in the building. Chris.
Peace, power, and profit. What's going on, everybody? How you guys doing this afternoon or this evening?
Peace, power, profit over AE.
It's
hot.
Congrats to the to the scholarship winners first and foremost, because that's great. Because again, you're building, right? You're
Yes.
setting futures up for success. You're giving them motivation, and they're getting it from people who obviously favor them. So there's hope still left in the community when it comes to Black empowerment. All right. And the same with the stock information. Obviously, you and Oprah Chris, dropping gems. I kind of was moving by. I saw the link in there. I said, I got a hot minute. I was studying and going over some other stuff. So let me jump on with the family, because I know you've been on fire with the scholarship. So I was just like, man, this sister on fire as always, getting it in, loving that. Haven't been on Facebook in a while. So yeah.
Right. We gave out 14. Blessed a young man from Batesburg, South Carolina. And he was so humble, young man. And then matter of fact, someone called me. They have some two iPads that they want me to give away to 2 young adults. So they've been working out pretty good. I got some donations in for those, those shirts. If you buy a shirt, they $20. You buy a shirt, I use the money towards scholarships. I'm tasked to raise about $1,000 for my alumni association, my HBCU, Voorhees College, by August the 15th. So I've been out there on the grind. Got to help the students. Help the students out and get them on the way. Okay, what's his name? Mance. What's up, Sway? Okay, so you guys jumped on the panel. You guys got some beginner questions. Say it again. I'm sorry.
Hello, Monica?
Yes, I'm here.
You can hear me?
Yep.
All right, that's great. I wanted to ask a question.
Yes.
Do you guys look over any indexes like NAS or US 30?
So Chris, that's your lane. Brother AE lane. Marquise, Camille, they do.
Okay. I have a very unique way of looking about things, so I wanted to bounce ideas. And if you don't mind me sharing my screen.
Yes, you can share your screen. Make sure that because this is our first time with you. You're gonna share charts, right? Don't
yeah, that's it. This chart.
All right. All right. Make sure.
That's what we on here for. So that's it.
Yep.
I've never done this before. So
all right. You can go ahead. You can share.
All right. Can y'all see my screen?
It's coming. Yep. We can see your chart.
All right. So let's see. Move y'all out of the way. Now let's see my screen. All right. So I have a unique way of looking at things. The way I trade is I trade breakouts. Just only ascending and descending channel breakout. And the only indicator I use is the MACD, and that's it. So the way I use it's kind of complex to just me. For me to teach somebody, it's very, very complex. But I spend hours trying to perfect this strategy. And what I do is, let's see what move we had this week. All right, we can do this one.
This in Forex, right?
Well, it's Forex, but I mainly focus on the indexes. So I look at NAS.
Okay.
Get 3 things. NAS.
Yeah, he's trading the NASDAQ, NASDAQ 100. So basically, it's the tech sector. So the QQQs or the NDX, of course, if you want to use that perspective, or the XLK.
Okay.
Yeah. So I basically only look at it during the opening bell. So I try not to look at the market before that. So I usually try to look at it between 9:30 and 10:30. And I notice after that time, it doesn't do anything after that. So what I'll do is I'll just back test this piece here. Let me see.
Back test is when you let it run back.
Correct. Yeah. Okay. So I paid extra for an account with TradingView.
Right.
And that's what really took my trading to the next. It helped me get a lot better. So what I'm looking for is some kind of ascending or descending channel. And here we have one here. I wait for the first candle right here to open up above. You see how this candle open above here?
Right.
This is a 1030 candle. So what I'll do now, I'll go to the 1 hour time frame and I want to see strong volume here, which you see at the bottom here. Then I go to the 4 hour and it's a little bit red. Then I go to the daily and now it's green. So if I get 2 out of the 3 candles in the direction that I wanted to do, it tells me now I know I have a strong trend. If it was all 3 of them, then I know it's really, really strong. And I'm expecting price to go in that direction to the next level so I could ride it all the way up somewhere up to here. So what I'll do now is once I see the first candle open above here, and I have strong green volume at the bottom here, it's a 1030, then I just walk down the pair. So I scale down to the 5 minute, then I have 1040 here. This is the first candle here to open up above, right here, open above the previous candle. Then I'll go down one more time. Same thing here. But I want the volume here to be the strongest volume prior before. So I'll fast forward a little bit. Then you see price in the channel here also. I do it one more time. This candle here, as you can see, it never opened up above. So I wouldn't look at it until the first candle opened up above. So this candle here, which I already marked it with a horizontal line, is the first candle to open up above. And as you can see, the volume is higher than the previous volume here. Then this candle here, it's 1051. So I'm always going to get it on the first minute of the first 3 minute time frame here. The first minute, so 1051. Then I scale down to the 1 minute. And 1051 would be here. So I'll delete this part. So I'll get in the market on this candle here. So once I have a sideways channel, I can't get in no more than 3 candles to break out, because if it breaks out too much, you're gonna get in a pullback. Because how the market work is, as you can see, the market is going in a direction for a period of time. And it's only a matter of time before a pullback is gonna come, right? So if you wait too long, you may get on a pullback when price is reversing. Because even if you're right in this trade where it's going in the buy, so I'm gonna hit play, the bar replay play. So the way I try to trade is anytime I get in the market, my stop loss would be below the structure here, the previous low here. So if this candle that I got in on here, if price was to ever come here, I would get out, so it give me a short stop loss. So this would be like, this is 10 points. So let's get roughly about 10. So it's like a 10-to-1 risk to reward. So even if I lose a whole bunch of time, I'll still, once I catch it in my favor, it would go in my favor. So if I hit the bar replay,
it went in your favor.
Right. So the way my strategy work is, all I needed just one candle to go against me and I'm out to trade. That means I did something wrong, but it's more complex than that. So I study like the MACD and the volume, because what happened is when you have too much indicators on your chart, you make yourself look at too many things. So what I would do is I would go on Word. So anytime I make a mistake, I would write it down. And then I would just back test it. So I would literally back test for 10, 12 hours a day. Just back testing. I'm opening up Word right now. And that's what kind of helped me. Prior before, I would take a trade and then I wouldn't know what happened. And then I'll just keep trying to trade. So what I'll do is, I think this would help you guys. I would screenshot. Give me a second. So what I try to do, I try to train my eyes to see the same pattern over and over. So anytime I make a mistake or I miss a trade, so these right here is my rule based on what I'm expecting. It's complicated for you to be able to go through all these rules before you take a trade. So I have a strategy based on the MACD, the only indicator that I use. And then what I would do is also, I would take screenshots. Let's see.
And mark them.
Yeah, so I'll go on TradingView and I take a screenshot. So these are all entries that I have. missed or that I took in. And I'll compare and contrast over and over to find a pattern. Because what I found out with trading is, like I was watching you live before, how you would go on different websites.
Yeah.
See what you expect the market to do. But I do the opposite. Like for me, I feel like from looking at the market, it tells you a story and it can tell you what's going to happen before it happens. You know, so I try to use like they would call it like price action type trading.
Mm-hmm.
So what I'll do is then I'll just click on one of these.
Where'd you click in? I don't know if, oh, there it goes.
Okay, so
you
this
screenshot it, right?
Yeah, screenshot it on trading. So I screenshot the patterns. And then what I'll do, I'll compare when I got too much stuff. And then I'll just compare the patterns over and over. So that's how interesting.
Something happened to your volume.
Pardon?
Something happened to your volume. Is it me or did something happen to this volume? Did you go low?
Okay, I'm sorry. Can you hear me now?
Yeah, it's better.
What I'll do, I'll take screenshots, right? So anytime I take a trade, I want to know why was I wrong? What did I do wrong? Because I always feel like there's something that can be corrected. I do the same thing over and over for, this will be the 1 hour and the 4 hour here. And then I'll label it like, okay, this is for NAS. And then I'll do the same thing for gold here and US 30. I have.
Wait a minute. What are you labeling? I don't see. Are you?
Okay, you see the name here, the label. I label the name of the particular chart that I screenshot. Or you can't see my screen.
I can see it. What's the screenshot that you have up? I see Sway 91 published. I see that.
Okay, y'all seen something. I have Microsoft Word up.
I'll look in the back chat.
You got a Word up?
Yeah, I had Microsoft Word up. So maybe.
Oh no, I see the. Oh yeah. I got you.
Can you see my screen now?
Yeah, I'm looking. I was looking for your cursor, but I see it now.
Okay, so what I'll do is I'll screenshot. So this is you. So what I try to do is I try to collect as much data as possible on the particular instrument that I'm trading. So I'll collect data for over, as far as the trading view can let me go back. I just collect it over and over. And I'll collect it for here, as you can see, the 1 hour and the 4 hour, and that dated. And then I'll go back now and do the same thing for gold. And I do the same thing for NAS. So what I'm realizing, they have a certain patterns that they follow. And if you, like you said, you was talking about taking, I heard somebody talk about just taking one trade a day.
Yeah, it was sunny.
Trading, right. I make all the mistakes that you can think of. And that's what really helped me a lot. Just back testing. Everything is in the chart. So that's what I try to do. And I follow the same pattern over and over. What I notice is the market do the same thing over and over. Let me see. Let me go in the daily. So like, for example, I break down. Yeah, my chart is really messy because I mark it up a lot. It looks crazy, but yeah. So let me do 1 hour. Let's do another part. So this is a pattern I was talking about here. You see how you have the descending channel here? Right. Then price goes sideways, right? Then price will break out. So the same pattern you see on the 1 hour, it's the same pattern it's going to be on the 15, 5 minute, the 3 minute, the 1 minute. It's the same pattern. It's the same thing here. If I mark this part up, you have an ascending channel here. There's a pattern moving wave. Price breakout, price goes sideways and then break out. Same thing here. Ascending channel here, and price breakout to the downside. Descending channel here, price smaller one here. Descending channel here. If I cut this off here, you see the same thing. I just cut it off. And I go to the 15 minute. So you can see more details. So you see price descend, go sideways, and then go the other, and then go up. So the problem that I was getting, when you see price going down, you think it's going to be a sell. So how do you know it's not going to go down and not go up? So that's why I use a volume. So if I get 3 of the volume going the same direction, 2 out of the 3 here, 1 on the 4 hour now. This is still red. So I want on the daily now to be green. So that's why I would buy it. And I'll do the same thing over and over for US 30 in gold. But the market been very slow the past 2 weeks. I only seen one move based on the way I trade for a NAS. Today is the 17th. So the week started on the 12th. So start here. That's the 8th. So I know something's gonna happen in the market soon because it's just been consolidating almost for the past 2 weeks. So this is 12 here. So as you can see here, there's no pattern. So I'm looking at the market at the same time. So this is gold now. And I look at gold a little bit earlier at 8 o'clock. As you can see, there's no pattern here. So I look from between 8 and 10. There's nothing here. The 13th, nothing here. So it kind of whipsaw both directions. You haven't given an indication. It gives something right here. Same pattern, descending channel here. Price went sideways and break out. If I slide down to the 15 minute, you can see more details of that same pattern. So what I try to do, I try to make sure the volume is the same strength in all the time frames. If I cut this part off here, you see the volume, I don't want it to be like here, how it's pale. That's telling me that the volume getting weaker. So what I found out is once that line up on all the time frame, the market have a strong direction and going in the favor that you want it to be. See, you want the last volume here to be stronger than all the previous screen volume here. And the key is to try to catch it soon as it break out of the channel. So I have a lot of screenshots on the 1 minute time frame. If I can find it on Word. Can you see can y'all see my chart? My screen?
Yes.
Okay. 3 minute entries. Okay.
Your volume went out.
I'm not speaking. I'm not speaking.
Okay, just want to make sure. Cool.
Right now, what I'm doing is I'm showing some of the data that I collected. This is 3 minute time that I screenshotted.
Yeah, and just looking at it, yeah, I'm sitting there listening to you, Bill. I love it because again, this is a part of in terms of what we talk about a lot when it comes to investing. Becoming a student of the game, right? You have to put in what we call, that legwork, right? You got to put in,
Exactly.
that observation time, so to speak. So again, screenshots,
Yeah, eyes.
pattern,
Yes. Yeah, eyes. Yeah.
Pattern recognition,
all
trend channels, the
Yeah.
whole nine, and eventually what happens is you'll culminate, or it'll culminate into the idea of you understand literally. Again, like I like to say, the market is one big pattern, one big trend. And once you learn how to dissect it in a micromanagement perspective, you can trade, i.e. trade, not necessarily even just invest, but learn how to capture profit in real-time intraday value. And so again, basically what I'm seeing here, I see you've got a lot of, we call them falling wedges or rising wedges or descending angles or ascending angles. They all are still, in perpetuity to the ideal that where you have fleeting sellers or increase in buying, especially during moments of what they call, accumulation, consolidation, then you had that kind of breakout.
Yeah.
And trading the indices are really good because you're dealing with, basically assets that have pretty decent, volume flow on average. Of course, they're the big indices for a reason.
Like,
So you're always going to have liquidity. You're not going to have liquidity issues unless, there's just something crazy going on in the market. But of course, volatility is the key answer per all things in terms of a trade. You need expansion, right? You need some expansion that you're going to trade, a condor or a butterfly. You just trade neutrality at that point. And so, yeah, you got some really informative diagrams in place where you're learning how to, again, compartmentalize the market. I love seeing traders, again, put the market, what they call on pause. I call it putting the market on pause. That's the best thing you can do. It's like Neo in the Matrix. I use that analogous a lot when I do my training. When you realize exactly how money flow works, how liquidity, moves markets, you can literally figure out and see when the institutions are coming in or the big money is coming in, and you just ride that wave right along with them, right? It's a no-brainer once you realize that, the worst thing you could do is try to fight the market. When we say fight the market, you mean you're fighting institutional money, right? Your money can never compete with theirs. And so you're getting on their, you're getting on their back, and you just riding that wave until, the musical chairs stop for that moment, or they pull some of their liquid out and they wait for the next downtrend to catch that next wave up. Right? And for us, we might be fighting for a point, a basis point, 3 basis point, whatever. To them, they get 30 cents is a lot to them when you got $100 million on the trade. Right. And so even when in that moment, again, if you're savvy, of course, you've been able to display that with a lot of your diagrams. You learn how to, again, to really put the market into a view or a vantage point where you can capture alpha. And consistently, again, once you learn how to spot those moments of weaknesses or strength, breakouts. And so that's awesome. Shout out to you, Sway.
So what I wanted to show you was, I wanted to show you how the market does the same thing over and over. So this is something.
Yeah, one big pattern, one big trend.
Yeah, this is a 3-minute time frame, but the same pattern that you've seen. Can y'all see my screen, right? My mouse? Can y'all see?
It's still showing. It's still showing. You still good.
Okay, I just want to make sure. All right. So y'all see this pattern, the same pattern that y'all see right here, the same exact pattern, the daily, 4 hour, the 1 hour, the 3, every single time frame. It's just that it's inside of the daily. So once you start chopping down the time frame and get to a smaller time frame, you start seeing the details in that pattern. So even if you see this here and it's saying something opposite on a daily, it's not gonna go in your favor. It's almost like the stars gotta align. So this move, all these moves that you see I'm showing you, these are well over 200 points move. So I'm only looking for those bigger moves. So the issue that I'm having now is just being disciplined, because I'm a very aggressive trader, because I study so much that I feel like I'm supposed to be right every time. That's how much work I put in. So I'm gonna show y'all a pattern. If you look at the bottom here, you see the volume, you see how strong the volume here is. So we have the ascending channel here, price goes sideways, and this small little side, this too small here, this on a 1 minute time frame where price was going sideways, and then this is the first candle to break out the channel. And I'm gonna show y'all another one. So this here, the same thing. No, that's the wrong time. This is the 1 hour. Let's remove that one. Remove that. Okay, this is another example. You have the ascending channel here, you have the sideways channel here, and then the price breakout. And then you have fresh volume here. Same pattern. Same thing here. Ascending channel, price goes sideways, price breakout, fresh volume here. So you're getting on the strongest volume, strongest red volume. Same pattern here, same thing. You have the ascending channel here. Another small one here, price went sideways, breakout.
And not just speaking, this is something we spoke about before, Sister Monica. I know you sounded looking like confused, like Sister Monica.
Well, no.
Like, what's I was you should know this, because all it is the same thing you hear when you see Sister Camille when she say the order blocks. When you hear us go through the channel break, the channel breakdown, this is kind of exactly it. You've learned how to, again, condense the area of opportunity within the trade. And from there,
I hear y'all talking about order blocks, but I didn't, because when y'all say that, I have no idea what y'all was talking about.
It's the same thing basically what you're doing when you condense a trade into the zone, the zone, be it a channel or accumulation spot. And from there, you're just waiting for volume confirmation, right? If it's already been back tested, that means it's already been there before. So that means your support is already in play. And this is strictly when you're going long. Now, obviously, it's the opposite if you're going short. So it's always good. I have this thing I call, you bake, you obviously plot your channel, then you split it down the middle, right? Your plus minus ratio always going to give you the opportunity to, again, to get your cash based upon the, direction of bias once it obviously unfolds, right? especially if it's a well-known pattern, right? We know patterns enough to know that, okay, that thing descending wedge, you know what's going to happen next, right? They're going to stop the brakes on it, snap it at the support point, you know that thing going to break, break back to the upside. Then they had to just take out that old high, if it's going to show strength. If not, it's going to hit weakness and get rejected. And so it's really good. Again, and this is key because you dropped some good gems and jewels for everybody in the back chat that's listening.
Okay.
And a lot of stuff, like I said, we've covered, but it's great because you need confirmation. Okay. And so in doing so, again, you have to have I would say the wherewithal. Exactly what Brother Sway is doing is he's mastering his craft of perfecting exactly how his eyes are trained to what? Price action.
Market, right? Price action.
And the patterns and trends become universal once you've seen them enough. It just like riding the bicycle. You know the rising wedge, you know the falling wedge, you know the descending, a bear flag, bull flag, pennants. So we can go down the road, and then it gets minutia when you break down the candles, right? Okay, evening star, morning star, right? This doji. That's when it gets down to the minutia when you trade on smaller time frame. That's when those candles really matter.
Yeah, right? And the wicks don't lie. The wicks and support.
Wicks, shadows, wicks, indecisiveness. Yep.
Yeah, so it's easy now for me to find where price breaks. So like if I was taking this trade here, once break below this here, I'm gonna get out. It allows me to have a shorter stop loss, so there's no guess in there. So if price going the opposite way, once I put my stop loss here, and it wakes it, I'm out. So I don't even gotta hold it. But what I do is I try to be disciplined enough to where I don't actually place the stop loss in the trade. I literally watch.
Well, that's what you call a hard stop. Old school is a hard stop. We call it a hard stop back in the day.
Yeah, hard stop. I don't use I use my eyeball because what happens is when you trade NAS and US 30 and gold, sometimes it can wick. Sometimes you maybe because what happened.
Well, you know what that is, right? That's a liquidity run.
Yeah, or sometimes
the institutions and banks doing a liquidity run to stop people out because they know they're sitting there with limit orders on the books and they see it. And so if you already know you within your in the aspect of a defined trend and you're just waiting for volume to catch up with the anticipation of the move that's already started to break out, you got to assess exactly, what are you willing to give within that trade before you say, okay, well, this is enough. But obviously you already know that your trend is still kind of intact from wasting the volume that's coming in. You got to sit through it, right? So a part of that is discipline. Like you said, if you're dealing with disciplinary thing, disciplinary, I'm not gonna call them issue, but disciplinary values where you're trying to make sure that you stay patient.
That's one of the hardest things with trading.
Yeah, a rule of thumb that I always, I'm a big, psychologist minded type of trader, where I understand the value of principle when we say discipline or due diligence and discipline equals dollars, right?
Yeah.
The bigger thing that why most traders obviously can't consistently make profit when they're day traders, I'm speaking to the day traders here, is for that very fact, right? They either too soon, too late, right? Or at some point they get distracted during the moment when they shouldn't be, right? In the middle of a high frequency trade, right? Especially in the moment when you're catching a breakout or even a breakdown if you're going short. And so what I like to do, I always tell people, especially when you kind of already mapped your trade, so say if you got your bands on, right? You got your channels in check. And the first thing you say is, okay, well, I know I'm already willing to risk 20%, right, or 30%, or 15%, right?
Yeah.
From the moment you enter that trade, you have to know 100% from that moment what's your threshold.
Exactly.
And you're gonna let the trade work for you. Now, if you're a person who don't use a lot of indicators, if you don't use the 9, the 20, the 50, whatever. Some people just don't do all that. They use order blocks. They use order blocks and order blocks only, or they do channel bands like you're doing, and they just run off the oscillator. In this case, it's the MACD. You're using the oscillator down there, which is a confirmation of when it crosses over. That's a buy zone. People coming in, and the volume will obviously dictate the price action from that point from your entry, right? So you just have to convince yourself to know that if my 20% drawdown is my line in the sand, work off that, right? Even if it come down to 18, you stay in that trade until you get that, unconfirmation as opposed to, you feeling comfortable about the idea that the stock is still, supposed to run and make that, make you move direction of bias towards your, towards where you're going to go.
What I do with that, I was in a group prior before, and they gave me it's like a risk management, like an Excel sheet. So you plug in how much capital you have and how much I'm willing to lose. So what I'll do is 5% or 10%.
Yep.
And then what I'll do, I'll compound the trade. So the trade go in my favor. I'll wait till price pull back and I have a specific strategy how I use to add more orders. So I'll start with a small order.
Mm-hmm.
By the time the order is finished,
you buying the strength.
yeah, I'm already invested maybe 15% in one trade. So then I'm making 3-4 times the amount that's in my account. So what I'll do, like I said, I agree with you as far as with the stop loss, knowing where to get out. So I just watch the market. Like, for example, I have this mark here. So once I see the first candle to open below the previous candle, I'm out the trade.
There you go. There you go, Brandon.
All right. Wow. So like I said, it's another pattern that I'm showing again, and I just go another one. It's the same pattern. So I'm just training my eyes to see the same pattern over and over. Same pattern over and over. Yep. It never changes. It doesn't matter. What I realized too, it doesn't matter what market you're in, whether it's indexes, Forex, stocks, it does the same thing over and over. It doesn't change. The only thing that I noticed that changes is the volatility in the market. Like, for example, if we trade looking at NAS and US 30 and gold, they're extremely volatile versus the Forex market, the Forex market. So I got to be really careful in how much you risk. For example, with gold versus NAS, if I put a standard on the US 30, that's $100 a pip. But on gold, that's $10 a pip. So you got to know how to calculate that to know the proper risk management that you're taking. And I feel like that was one of my biggest hiccup. And for most novice traders just starting in, entering at using the right lot size, because you can enter the trade and you down based on a couple $100 or based on how much you're risking, you know. But I've lost so much money that I grew on a very high tolerance to losing. So I almost got desensitized to money. The way I look at money.
You know, we call that paying tuition, right? Because, you know, I've been at it for a while. Again, you know, not that it matters. Everybody got a resume when it comes to investing and trading. But you realize over time is that, right, you're not so much trying to prove, you know, to the market, you know, how you're going to allow it to bend to your will, more so than you will end up bending to its will, because again, it will definitely force you to change when necessary, right? That's why there's no consistent strategy that works all the time. It's not an exact science, right? You heard that saying before. It's not an exact science in trading, right? If that's the case, Neil Tyson deGrasse would be the best trader out there, right? But he can't. He sucks at this, right? He'll suck at this because there's too many variables in play.
Exactly. You can't use a formula like a mathematical formula.
Right. You cannot. Right. Algos are programmed. They're programmed to trade different perspectives and patterns and trends and news reels or whatever.
It's gonna work a little bit, but it's gonna go.
Accuracy it's gonna change because the market's always in a flux of what? Ebb and flow. It's a sine wave for a reason, right? Peak to trough. So, you know, what you're saying is basically a lot of stuff that a lot of traders, especially new traders, need to kind of home in on, and that's why I want to emphasize that. I don't mean to cut your wisdom, but I want to emphasize that we're very big discipline proponents over here, because we know a lot of people come in with, you know, wide-eyed and bushy-tailed and they're hungry, and they'll just take something they think they can just walk into the market tomorrow and just implement it. Right? There's so many different layers to it. Once you define, once you learn how to define your risk and respect the game, what they call risk management, then you can consistently make better choices, because you'll know that every trade sometimes it's not a good trade. It's better to observe a trade sometimes, even to put your real capital into it, because the markets are not respecting, you know, again, true price action that day, right? So a lot of times when the market is choppy and you just trading inside the churn, right? The churn is eating up your money, eating up your stop loss, and eating up your options theta premium. It's not even worth trading it that day, right? So that's a part where another thing, when you say discipline, is you got to know when the market is right. It's right for.
I had no choice but to be disciplined, because
it forces you. It'll force you.
You force me because I'm 60K in a hole right now. You know, to be personal, as far as what you were talking about paying tuition, I paid $60,000 in tuition. It's not a game, so it just showed me it doesn't matter how much money you put in it. You're gonna eat you alive.
If you're not prepared, right, and you don't understand your risk parameters, so it's very true. Very true, my brother.
But with all that money,
you gotta take gracefully.
Yeah, risk is paramount. That's the only way you're gonna be. You know, again, it's like entrepreneur value. You got to be scared money can't make money, as they say, right?
But
that's
you have to be very
telling Mo earlier.
You could tell me.
I took that. No, I was telling you earlier on the Goldman Sachs trade. I did everything right. but I still lost.
Yeah.
There was nothing
Yeah.
I can do with that. You
Like
know,
for this
with
trade right
everything that
here.
came
The
out.
earnings. You trade the
Yeah.
Goldman Sachs in the earnings?
Traded the
Yeah,
earnings.
yeah.
You know what? And we had talked about that previous training session too, like, you know, because we say financials getting ready to come up for earnings on that 1 Thursday. And I was telling y'all, be cautious for the fact that the financial sector already had kind of ran hot in the earnings, right? Because they had already kind of, you know, kept the the bonds, you know, start fleeting at that point. So they already had make their move basically. So any extra that was going to come on that, it was going to be like we always seen with some of these stocks. When they get the earning report, you're going to get that initial pop, and then it's going to sell off, right? So you really had to been there with your finger on the trigger, right? Right when the bell opened up, to capture anything you can if it didn't, you know, turn on you before the bell opened, and just go ahead and, you know, collect your premium and get out of there.
Yeah, we was looking at it. It shot up. It shot up during pre-market. It went up a little bit more when the market opened, and then it sold off. Yeah.
Well, that's what the SPY did Friday. Remember, I told you that's what the SPY was going to do. Didn't SPY do that? I told you that was going exactly what it was going to do.
Right.
And so I was just sitting there waiting at the top. So I took those the one put I had on that, I left that, and I bought like 2 more up near the peak when it kind of, you know, churned out and started instantly dropping. So I saw the NASDAQ fleeting. Basically what Brother Sway, I guess he's showing. I don't know what. This the one from Friday. Yeah, this one he actually
this
had.
From Friday, I wanted to show y'all.
So if you can see here, it's correlation straight to the S&P 500 from that perspective in terms of the NASDAQ. The tech was the first one that everybody was looking at, because why? Tech had ran hot for the last 2 weeks. Amazon was kicking butt, taking names, right? When you saw Amazon fleeting, that was your cue, right? When you saw Microsoft starting to fleet, that's definitely was cue. And then Apple was definitely one, because Apple have ran up what, near 12%. We looked at doing training, remember? It's up 12%, right? Going into earnings, right? That's already the earnings baked in. So of course you have a down day in liquidity, or a liquidity flip, I should say. In this case, when the NASDAQ saw to kind of show weakness and the SPY was already hurting because, you know, the Fed testimony, that was a recipe, right, to get short, you know, these overbought or these what they call 52-week high stocks or all-time high hits. And then the NASDAQ, of course, was being one. The Russell rolled over easily. It's been rolling over. But yeah, his chart here is showing you exactly what we were watching on the breakdown.
I'm gonna break this one down.
Go for it. Go ahead, sir.
Okay. So I appreciate it. So basically, me and my brother, because it's good to have somebody else that you're trading with, because as you know, trading can be very lonely. You know, it's a very lonely endeavor.
And so we got a clan.
Pardon?
That's what we got a clan.
Right. So I usually just trade with my brother. So he works at a basketball camp. So he tried to sell this, and he ended up still losing money. And it comes back again to show you where it's the same pattern that I was talking about, where how we find out what the trend. I'll come on. This is a 1 hour time frame here, and you can see the volume getting weak as a buy. So for me to sell this, I want to see on a 4 hour and a daily time frame red volume. See, and that's what we have here at the bottom. We had a red volume. And you can see the pattern too. It's very easy. You have an ascending channel. Anytime you have an ascending channel, I'm expecting some kind of breakout, because the thing with trading is
or keep talking about. I'm to interject.
No, go ahead.
No, keep talking about you going or rising wedge. I'm just putting it out there. We talk a lot about rising wedge. We use a lot of rising wedge and falling wedge diagrams, which is the same thing as ascending or descending.
Yeah. So what I found out is what make trading so difficult and what catch everybody is the market not just gonna just run down the page, just go straight down the page. It can't do that. It has to go in a wave up and down. So what I also will look at is if price gone from here to here, it's only a matter of time before price is gonna go the opposite way, where it's a buyer. So maybe this could have actually just been a pullback, but price not just gonna continue in one direction because everybody will get rich. So he has to trick you by pulling back and go the other way. But what I wanted to show you guys was see the volume here is red, and I go to the daily, and I want to see the volume is red also, and that's what we have. So I know now that the overall trend for this particular move is going to be a sell. So what I'll do now, I'll start breaking it down. I wait for the opening bell, which is going to be at 9:30. So I'll be watching the market at 9:30 here, and I want to see the first red volume here. As soon as I see the first volume here, then I want to see that same pattern that we were talking about right before, the ascending channel and price going sideways and then it break out to the downside, right? You go down to the 1 minute time frame, because it's when all this going on, if I'm just looking at the 50-minute, just watching it for the breakout, I'm going to miss it every time because it happens so quickly. It's extremely fast. So you got to be sharp. Yeah, to me, I have 60 seconds to do all of this and to catch the move right in time. Because if you're late, you get in too late, you may get in on a pullback. And a lot of times that I try to go and I go in very aggressive, so I can't be late. So what I also do is I set alarms on my phone for every 10 minutes. So every 10 minutes, my phone will alarm. So maybe sometime I'm on the computer listening to Garfield, and I may get distracted in the morning. So what I do is I set an alarm to, hey, go back on the chart. So you say, check your charts. And then I have a time frame now.
You set your alerts, yeah.
Yeah,
that's one thing about of course trading. If you had the alert bars, you can always set the alert bars. You'll get that pop up or it coming right to you for notification.
So I don't set alert on the actual chart. What I do is set alert on my phone. And then I also, like you were talking about, somebody was talking about taking one trade a day. So what I'll do is once you get to a certain time, I already have a pre-programmed alert that says get off the charts for your freedom. Because if you keep trading, the more you trade, the more mistakes you're gonna make because we're human. So I'm gonna go down to the 1 minute time frame, and the same thing that we were talking about, where I'm looking for the ascending channel. It's actually like if I zoom out, you can see it's actually a really large channel, right? So the bigger the channel is, the bigger momentum it's building up. So it's gonna be the bigger the breakout's gonna be, especially when price consolidates for a long period of time, for a week, 2 weeks. You're gonna expect a really big move. So this same thing here, but we're just looking at more details of that particular move. So I'm looking now, so I cut off at 9:30. So I'll be looking at it starting from here, 9:30. And I just march it down. Soon as I see the volume start getting weaker here, can y'all see my mouse?
Yes.
Soon as I see the volume start getting weak, I know I can't look at it anymore. The volume got to be strong as it is out here. And I got to see the same thing on a 1 minute, 3 minute, 5 minute, 15, all the time frame. So I call it when the stars align. When the stars align, that's what I call it. That means it's going to be raining money. So this here, I have a green volume here. So anytime when you see the green volume here, or it's getting weaker, that's still means forming a sideways channel. And I'm waiting for price to break out. This is kind of like my personal strategy that I came up with. Is very, very detailed. So I'm getting on the first minute of the 3 minute time frame. So I'm going to go to the 3 minute time frame. You're going to see here, this time is 10:09 Eastern Standard Time. And as you can see, this candle, what I measure my cursor at the bottom, and I want to make sure it's the biggest candle in this sector here. And then I'll march back down, and I'm also making sure the candle opened below the previous candle to the left. As you can see here, it's a 10:05 candle open below the previous candle to the left here. On the 50-minute time frame, the 10 o'clock candle opened below the previous candle to the left, right? So what I do now, I want to get in on the first minute of this candle here, 10:09. So I go here and I make sure it's 10:09. See, it's 10:09. So I'll be in this trade now, and I'll just watch it. And my entry, I try to make my entry so precise to the point where price should never come back here. It should never be a drawdown, because it's the same pattern over and over. As you can see, price pull back. Price pull back, but price will never open above the previous high that price structure here. So what I worked on now is how can I compound this move? So this is the compound in here. So the second entry would be in here on the 10:21 candle, this candle here. And how I know that, I'll go back to the 3 minute time frame. And it's the first candle to open below the
first one. Oh, I'm sorry.
Okay. Yeah, okay. So this is 10:21 candle. It's the first candle to open below the previous candle to the left. And as you can see too, it's another ascending channel in price breaking down, right? So my next entry will be here. So I'll go back to the 5 minute to make sure the volume is still strong here. And on the 15 minute, the volume is still strong. So the trade is good. So a normal person seeing this now, you say, oh, look, the market is going down. Let me sell. So my brother, he trades as well, but he was busy. So he tried to sell the market somewhere down here. And soon as he got in, this is what the market knowing really good at. Soon as he got in, price started going the opposite way. So this right here is easily 50 points. So if you get in here and you over leverage, it's just thousands of dollars from here to here. That's 44 points. Points. Based on what your lot size is, you're gonna be in some serious drawdown. So my last entry would be here. So if I go to the 3 minute time frame, as you can see, price never opened above my second entry here. As you can see, price wick above it here. That's what I was talking about, where price would wick, but it never opened above my previous high here. This candle never opened above the 10:21 candle. This candle 10:54 never opened above. So I'll hold it. Fast forward a little bit more. And the last entry would have been here. Right here. So this is the last entry here. Same thing again. The volume is not as strong here anymore. As you can see, this candle is not quite as, and all this matters. This small little detail here is very important. As you can see, the 1403, which is 11, 12, 1, 2. So this here is 2 o'clock in the afternoon, Eastern Standard Time, 2 p.m. The volume here, let me delete this part. The volume here is not as strong anymore. So that tells me that I got to be careful. So if I enter again, but here, the volume is good. Strongest volume here, the same thing on the 15-minute time frame. The volume is fresh. So this is the first new red volume to start. Same thing on the lineup. It's a 3, and then if I go to the 1 minute now, it's more detail. You see, and what I'm also doing here also is I want to make sure when I'm getting in the market, I want to get in as soon as possible, as soon as price breakout. Because what happened is if you wait too long till price get to here, sometime price may pull back and you may be in some drawdown. It's no different than here. For example, this was the first entry here. This on the 1 minute time frame, guys. So say I enter a little bit late. You see how it would have been in some drawdown. So it's crucial of your timing of when every minute matters.
Let me ask you a question. Are you shorting here, or are you trying to go long the pivots?
Short.
So you short? Yeah. Okay. Yeah. I just want to make sure.
I was going to ask.
Because obviously it was a pullback day, obviously in the Nasdaq yesterday and Friday. The momentum was in trend was already set for pullback. Once we kind of failed to break out or failed to push above a certain high that came out of Thursday. Actually, it was Wednesday, the old channel that came out of Thursday. What was that?
Okay.
What was that Wednesday we looked at, guys? It was one of the days when we was looking at the channel. And you was asking that question, Sister Monica, like, how would I trade this chatter? What do you call it? Chatter in the market where it's consolidating. And then we noticed that there was weakness, going into the previous week when you kind of bottomed out, off the pullback we got early in the week from Tuesday with the Fed speech. And then we kind of bounced, where we rounded out a little bit around the bottom of the linear regression band. And we kind of moved back towards at least that 20 moving average. I think what was it, 435, 436 that we kind of plotted?
430, yeah.
It was 435, 436.
Mm-hmm.
And so already, we already had all-time highs obviously in the Nasdaq and the S&P.
Question.
So we kind of, I'm sorry, go ahead.
Yeah. I want to. When you said pullback, you talking about this pullback here?
No, early in the week, we had.
Oh, you're talking during the week. Okay.
Yeah, we have a lot of what we do training every Thursday, but we was talking about sharing some notes earlier. One of the sessions, Sister Monica was diagramming basically what you do on our channel. You're providing the channel outlook in terms of how you want to play the position. Yeah. And she was looking at it from that perspective and trying to figure out, her directional bias, right? What kind of directional bias she would have had. That's void of any kind of news catalyst that may move the market. Of course, that happens a lot, especially right now with all this kind of inflation talk. But nonetheless, coming into Friday, we had already kind of diagrammed what the market was, what we kind of projected it was going to do. We kind of already kind of positioned that we was going to get that early morning bump, and then it was going to sell off for the rest of the day. And that's essentially what it did, right? Because we know what happened the previous days in terms of the weakness, right? That we was getting in terms of the S&P 500 not being able to make that new high. It just had ran into what they call exhaustion of buyers. We was basically at a supply zone. The banks kind of was starting to fleet a little bit because they was kind of sitting at, peak prices. Obviously, NASDAQ, definitely, and tech. Tech had made its run early last week. And so it was just a given. In some cases, if you looked at it from the place that we were kind of falling on exhaustion of buyers, it was just a great short.
You said Wednesday?
Yeah, going back as early as in the entire week, from Monday and through the entire week. But I think we had a session Thursday. I keep want to say Wednesday. Yeah, we had a session Thursday. We was kind of diagramming Friday, but it's the same kind of confirmation that we was looking to get out of the market going into it. And that's especially for people who trade options a lot, myself being one. And then, obviously just regular common shares too. Again, basically what you're doing is exactly what it takes to be a more well-founded option trader, because you literally have to play it from a position of you have to pick that direction of bias, right? Unless you got a condo on, if you're doing a put spread or call.
So about that, right? You see how you talk about direction, right? I look at
bias.
Different way. You're biased. Like you say, you're biased. So the way I try to look at the market is I try to look at it like I don't know anything. Like I don't know what direction it's going. Because the way I trade is it's a price action type of pattern.
Yeah,
so,
price action. I know you're a price action trader. Know why? Because you have no indicators. I've been around for a long time in this. You can probably tell, but I mean, I know every trader to a degree, right? Because I've seen it all in a lot of ways, and I've switched my strategy over the years. And if you're especially more day trader momentum, if you're a momentum trader, basically what you are, a momentum trader, because of price action, you're trading momentum, right? And you need liquidity, right? You need toots and retail, whomever, to kind of honor honor that value of liquidity that you need to get movement or expansion in a lot of ways. And for a lot of traders, of course, that's a different breed of trader, right? Because that takes a person who's on the clock at all times. Meaning when you're in front of the trade, you have to be there. You have to be focused. You have to pay attention.
Super laser focus. Super
right.
Focused.
You can't get up and go get a drink of coffee.
Can't do anything.
You can't do nothing.
I like it that way because
it's great. It's great in terms of you able to
master it. You can really grow your account this way. Really.
Can you
small accounts, especially for small accounts.
Very small account.
Mm-hmm. Can you use that strategy for long-term plays?
Of course, you can because it's still trends and channels. It's still patterns.
I'm gonna show an example, right? Mm-hmm. Like for example, this the NAS trade. So once I got into here, if I had the balls, I can hold it all the way down to the next level. As you can see, I my chart is a little messy, but I just like to dissect the market a lot.
Before you go further, because I don't know this part. I mean, I know when you say the NAS trade, is that like buying another asset? Like what?
NASDAQ.
So you can trade that like in Webull and all that stuff?
No, that's Forex. That's what they call it in Forex.
Forex. All right, that's what I was asking. All right.
Why use price? Yeah. So he had a question, and that's a good point, but it still helps. So brother 123 in the back chat, he asked on YouTube, he asked if I have a question. If you already know how to plot your trend lines, use them. Why include other lagging indicators like MACD? I thought price action is king. Price action is always going to be king at the end of the day, but it also helps brother 123 to have those guidelines and grid lines in play too, because it really does help you guys. It really does, seriously. And I'm saying that even for the most experienced traders, right? It really does help you sometimes to have that direction of momentum change, where you can see it also in real time, right? Because you could trade a candle all day, every day, and just play off the liquidity, off the volume and the volume alone, and just the candle direction. But having that MACD, having a RSI, stochastic or TTM squeeze, and the oscillator, I mean, it's so many of them, right?
Yeah. So
that's just giving you that visual. When you have that volume change, you can kind of spot it faster, from an optical advantage, than just sitting there waiting on the candle to turn. Because again, breaking news happens all the time in markets. What happens when it happens? You can have a candle flip on you, and you can get an S&P run, up a whole, 0.70% on a matter of a 5-minute candle, which is unheard of. Typically, that's an entire day worth of trading the S&P 500, right? That's when you're in a very volatile market. So you have to have those other, guidelines and grid lines, or those, other oscillators, indicators to help you sometimes handicap that unknown, right? And I'm just putting that out because you never want to get to a point where you get too ahead of the market, because what the market always does when you get like that, it'll always bring you back to the square one. It'll humble you.
Hey, humble. That's the word I use. Humble. And I'm the poster child for that one, because
we all are. No, you ain't know one.
You just take one moment for you to slip up. But as far as the indicator, the main reason why I use it is because with me, I try to get the tightest entry as humanly possible that I can get. And the tighter entry that I can get, the more emboldened I am to over leverage and really try to punish the market. That's the words I like to use. I like to punish the market. I like to catch it because I know somebody else on the other side. So that's the side the bank going on. That's the side I want to be on. Everybody else, I want to punish you.
It's like trying to trade a spread, though. That's what it is. A basic spread is it should be in the ass, right? And the lower the spread, the better your entry, the better odds you can leverage, right?
Because you know a pullback is coming.
Late, right? Because now
you know a pullback is coming, up, right?
Right.
So if you're already late, once you enter and you're late, you cannot over leverage. You cannot over leverage because you
got to scale into strength at that point.
You got to slowly scale in, right?
Mm-hmm.
So, like for this, it's so obvious. Like you can just look at this and I can tell it's selling because you can see the same pattern. So you can see now the next level would be here. Then once price gets to here, you're gonna play around then it's gonna go here. So if I go to the 4-hour time frame, you can see. So that's what I do. I just trade it from level to level. So this is a level here, level is here, and overall it's way down to here. But the reason why I like to close out and not holding it, like what Miss Manica was asking, if you want to hold like a long-term trading, I like to close it out so I can use that capital to compound the next move, if that makes sense. Or what?
Definitely makes sense. You're speaking our language, brother.
Welcome
to the tribe. That's all I'm gonna say, because we need more. Again, this is my first time meeting. So again, peace, power, property. But this is. I'm only saying it because I know this is what it takes, right? For a lot of traders who aspire to be. When I say trader, I'm speaking to the day trader kind of energy out there, not their investment, because sometimes that gets conflated in black environments or black talk. Because we're not necessarily too, savvy in our financial literacy when it comes to investing or stock value, right? We just think it's all one big thing. I buy the stock and then I should get paid. Well, it's not how it works, right? Because you have to have, like anything, you think about short-term, long-term, or short-term, mid-term, or long-term. What is your goal that you're trying to do? And what is your time allotment that you have? What time allotment do you have to offer the market? Because if you don't have the time to sit in front of the screen doing intraday action, then you don't need to be trying to place a trade and thinking you're going to come back at the end of the day and say, let me see what it does. That's not how this works.
Right. So as far as like you were saying, right, the compounding. So it's two ways to look at it. I could put a small order in right here when I got in the trade, and I could hold it and close out the first two, like I was showing you. If I go on a 3-minute time frame, if I really felt like, this trade not gonna come back up, the first order that I take here, as you can see too, price never got back to even on this pullback. Once you with the trend, it doesn't matter how deep the pullback is. Once you get a nice tight entry on the market here, this was the first entry at 10:09. It's not gonna come back up to here. If something come up here, then you did something wrong, because the market follow a particular rule. It follow rules. As much as it's chaotic, is a rule to it. And that's what I like with the market, is that if me and you and everybody else on this live now, we all see the market in differently, right? You may see a buy, I may see a sell, or I may see consolidating. But the thing with the banks, they're the one with the money. So whatever direction they say it's going in, that's the way the market is going in. So he's not gonna go one way and then just automatically just go the other way. You have to follow, like we talk about in life.
Well, we have a saying, and I don't mean to cut your wisdom, I'm gonna add to it. We have a saying. What is that saying, Miss Monica? Follow the what?
Follow the money.
What does that say over, Chris?
Follow the money.
Over, Brandon, what is that saying?
Man, you better follow that money.
Right, over Marquise on here, he could definitely say it. And that's the golden rule for any person who wants to become what they call a consistent trader. Keyword trader. Even with your investments too, but if you trade the market, keep in mind who moves the market. Retail traders or institutions. Clearly, institutions move money, right?
Right.
Move the market. So you have to realize how to read their buys, their sells, right?
Way they look at it.
When they making their runs, You have to be on board.
They're not gonna play around. Like if it was
you can't kind of trade them.
Like my friend, right? My brother. Like if he was the one that controlled the market, no one would have made any money. If it was just me, because he got in the market here, and then he realized the market pulled him because he got in too late. Then he closed out and got in as a buy. Then he got in as a sell. So it's confusing. But the market already know what it's gonna do. So if you can take the lens off and look back and say, okay, the overall market is sell. Anytime in price pullback, I'm trying to get in on the sell, but try to get on the tighter entry, you'll be fine. But
you know what? And that's a part of this is so beautiful too, because I watched it, like what a lot of us did. It was a perfect stair pattern to the downside. Oh, you don't just play off the lower highs. It was just lower highs all day.
Yeah.
Once it broke, you had to run on the banks. They lowered, ran some stock. You had that small RSI reset, which typically happens in the peak, and it kind of runs back up by half or a third of the price drop. That's your lower high, right? If it fails to break that, to go higher to kind of recapture what it lost, you better expect that it's going to have another drop, right? Yeah. And if you just played it Friday, it was beautiful. I know a lot of other trade. I moved around a little bit in a couple of Discord rooms I had been in a while, and I was just seeing people that was just like, man, they were just making a killing, because they trusted, pullback that was inherent that everybody was waiting to get, and they just stayed disciplined and didn't run.
Yeah, but you talking about this move? You talking? You have another move?
Well, no, what happened Friday in terms of the market?
Oh, just
the
Friday.
NASDAQ,
Okay.
the SPY, basically a lot of a lot of different individual stocks, but just the entire market as a whole Friday, after we had that kind of pre-market pump, and then when the market opens up, then reality set in that this was going to be pretty much a down day in continuation what came out of Thursday, because we've already broke some certain trend lines. It was just a given
created
that
highest highs too, man.
yeah. I mean, look at your peak there. Look at just
I'm on a daily
you have
now.
up here now. Your daily
Look at
here.
the
I
daily.
just say that. Yep. You see the peak up there? You already kind of topped out right there, right?
Yeah.
And if you look
don't mind my
at
chart, it's messy.
yes, all right. No, every candle.
Yeah,
just zoom into it. Just spread it out a little bit on what. Yeah. If you look from that point at the all-time high, the basically would have a basic double top, clearly, right?
And you see price weaken.
Right, and you got wicks, so that means you got undecisive value in that point.
Right.
So people finna start like, okay, we played musical chairs long enough. Now we're finna have a little pullback, right? And that's basically what you're getting here, because again, you had the testimony that kind of tipped the iceberg at that point with Jerome Powell. Not that really matters, because again, if you're a price action trader, you don't trade fundamental, you just trade basically price action.
And it's psychological too, right? Because it's hard. Like when I got in this trade for a buy, I end up getting out, because in your mind, what I like to do is I like to look to left. So like you talk about looking left.
Yeah, always look to the left to tell the future, the plan for the
always
future.
Leave clues, right? So once price broke this level here, it's like we in different territories. So where do you look? I like to trade from level to level. So then
price discovery. Yeah, when you at all-time high, you're in price discovery mode.
Yeah, so it's up to you now to when you want to get out. So usually I just try to get out early, because you don't know when the reversal will come in, unless you're in it for a while, to where you might losing maybe 30 to 100 points because you already got in so early that you want to see if you want to squeeze everything out of the market. But like what Monica was saying, as far as what I like to do is like, why would I, if you have a small capital, why would you want to hold a trade long term unless you have a large amount of money? Why not close out? Sorry.
Well, you can always get back in too. That's a great thing about it. If you have a lot, if you have a lot of day trades or a cash position. I got to say that because a lot of people on here are new, and I'm saying that because a lot of people on here are like new, and I want to make sure I keep them. Understand this is not just okay, a run on the casino, right? Or I could just buy and hold. You can if you have an investment strategy.
Yeah.
But if you're trading, it's a whole new different beast.
Right.
It's a whole new different game plan. And you have to move on discipline and discipline alone. That's the only way you're going to preserve your capital.
Right. So this is the monthly here. And as you can see, it's been buying. That's the way I was talking about. If you trust in indexes like US 30 and NAS and you hold them long term, overall, you're going to make money in the 20.
Yeah. They are long-term holds.
Long term, 20, 30 years, you will retire with some money. So some people, if you got a lot of money, you got big money, you just buy the dip because you're getting at a discount. So anytime in price pullback. Here.
And the major drawdowns. And the major drawdown, this is good too, because this is a good teaching moment. Do any of you guys happen to know what institutions consider a major drawdown in any aspect of them adding what they call catch up liquidity to the markets? What is that percentage value by any chance? Anybody know?
10%.
And it's important too, because y'all need to realize this. This is when you kind of tell direction of bias or pivot points a lot of ways. What is that percentage value by any chance? Anybody want to take a crack at that?
Are you talking about standard deviation?
And yeah, off the high value, or when we say the all-time high, right? Like some people say, okay, I'm looking for a 1%, right? A 1-2%, and the NASDAQ, that's a good little amount, right? And they're just kind of playing the pivot points, and then if you're going to have continue downtrend at that point. When we talk about when the market hits a flux where that if anything else happened within that window, right, you best believe bigger liquidity is going to come back to the market. So it's a certain percentage that most of the institutional hedge funds work off of in that perspective when they do have a direction of bias change. In this case, we got it, right? The last 2-3 days have been obviously evident of that, right? Now, the NASDAQ ain't really lost as much a lot of the other indicators, especially like the RUT just been getting killed, right? The IWM, the Russell. But for us, the NASDAQ, definitely the Spiders Index, and even the Dow, right? The US 30. What is that percentage that they like to look at to really get them, doing the Birdman rub, right? Sniffing to eat.
All right, it's a 30 here.
Right. They're looking for at least 5%.
I was gonna say 3 or 5.
Yep. Within that window, 3 to 5, but definitely 5. 5, they finna go crazy. They don't care what news, political news, anything. They don't care about that because y'all know at the end of the day, they're still driven by what? Price action value, right?
Fear and greed.
Right. And speculative value that the markets are obviously going to base of what balance themselves out. And any aspect when you have pullbacks of that magnitude, not necessarily all in one day, but if you have a succession of a pullback of a major indice and you get a 3 or 5% pullback, you best believe that there's a trend going to change. And I'm going to show you how it's crazy, how we're going to confirm that. If you look at it, go back to your NASDAQ chart, if you don't mind, Brother Sway.
Yeah, no problem.
Now, if you go to your daily, on that one. All right. So if you see right now off the all-time high, right? We had high, we're at 14,793, I believe, was somewhere around there. Or, no, what was it? What was the high? 15. All right. So from there to where we at now, we at 14.
We at 14.66.
So what's the percentage gain in that? Somebody percentage loss in that. Somebody do that math for me real quick. What's the percentage loss in that real quick?
It's right here.
Right. So you down what?
2.2%.
So that means you got another what? 2.75% before the markets get really greedy, right? So what's 2.75 more percent down until you hit 5%? Come all the way down to hit that 5% mark.
Right here.
Right, 5% on the. Give me 5% on the head, actually, if you can. So right around that. Okay. So right there, what do you see that at? On your chart, you see it's kind of right back at the point where you had this kind of. If you see where his old. Let me see if I can. I can't. Let me see. View options. Annotate. I'm gonna do this real quick on your chart. Right here in this area, right here. This area right here. You see right there? That was the start of the following breakout that took this thing to the all-time highs.
Yeah.
Right. So all it is that if they're gonna back test that move, it's just basically gonna come back and bump, test those holders that was down at that point before it broke out before the last time. 5%. That's like okay, that's erasing all that move that came out of what mid June into where we're at now, July, about a month worth of work. Right. That's just basically a reset. That's all that is. At that point, you best believe the market's going to turn really hard at that point, unless there's some kind of outside extremity news that causes the market to go in the lower at that point.
Yeah, and also too, right? Like I was talking about, like how much higher can the market go before a correction? You need a correction. Look from here to here. It's just traveling. Eventually, you're gonna get some kind of correction before price. If price gonna continue to the upside, maybe it's gonna come down based on news or whatever the banks want to do. Like I always say, I don't know what the market's gonna do. I'm just trading, like I said, price action. I really don't care. It could go up, down. It really doesn't matter to me because I have no bias because I'm not a long-term trader where I'm saying I'm gonna buy and hold long-term. And if the market go down, I'm not doing, it's not doing good for me. To me, it's about I'm just trying to capitalize every single opportunity that I can get in, take out, and then keep increasing my lot size and compound. And then what I could have did on that last move also is, like I said, hold it. If my bias, like I said, I want to take it to the next level. Where I thought, man, last 40, how far it came down. Okay, so price finish right here. Maybe I could have hold it and say, okay, I'll take profit here because I'm expecting price once the market open to get to here. And I could just close out after that. And then I wait now Monday now or Tuesday and reset. Maybe price break it and go even further down. Price could go all the way somewhere around here. I don't know, right? Maybe price can correct itself because overall on a daily, we can see the prices of buy. It's been buying for a while, so you had to correct. Look at how strong this is.
Yeah, and that's why exactly why I was saying that because this is also a help maybe add another layer to your strategy. And again, it's like we always say as in traders forums, right? Take it like a grain of salt because the market always going to dictate what the market's going to do at the end of the day. But for us, we're always trying to figure out how to become more disciplined, but also how to become more what they call intuitive in our foresight, right? And so that's based upon being able to kind of put in that chart work and try to figure out what our level is going to look like, right? So again, if you think about, just like I was saying, even with that, if they get that 5% pullback that they're hoping to get, keep in mind that they want that. Don't get it twisted. They want that because to them, that's where they can add more fresh capital back into the market. They're still sitting on a lot of capital or cash to actually implement into the markets, right? But everybody kind of still playing what they call the inflationary hedge, right? Or they're moving around from sector to sector to try to figure out who's more defensive for this pullback. But at the point where they feel like this thing kind of balances itself out, then they're gonna be all systems will go again, right? So if you are trading again, strictly for the traders out there, it's okay to realize that, okay, if I put, a percentage value of opportunity on the chart perspective, let's say in this case we use the 2.25 that we pulled back thus far, and we're saying we're gonna play the 5% rule. Well, from that 5% rule, anywhere inside of that is a great, I should say, an area of opportunity that you can chart from or play around with to kind of see what the chart, the breakdown levels may look like. Some people use the Fibonacci bands, right? Some of us use the linear regression, channel bands, right? It's whatever you use, right? Bollinger bands, right? That helps a little bit, right? Whatever you use.
What a coincidence, right? That you talk about the 5% here, right? Look to your left.
Yeah. It's all there.
Look, structure right here. So once I pull it down, let me go back a little bit. From the point you were talking about the high, and I go to 5%.
Yeah.
Roughly about here. It's all really a rough ballpark. It doesn't have to be precise.
Right, it's not going to be precise. When I say 5%, y'all know everything overshoot and undershoot in the market.
Yeah.
That's
why I have these levels marked up. You see these little lines, those red and black. Yeah, you just trading level to level, and that's what I do. I just find a level, because one thing with the market, it respect every level. Maybe it respect it where it may break through it, but it's gonna stop there for a while and maybe consolidate based on how strong that level is. So if that level match up on the 4 hour, then the more time frame that level matches up on, the stronger that resistance level is before it break out. So that's what I'll do. Maybe I'll take profit, or maybe I'll just hold it for longer. Like you were talking.
Over Marquise, are you there?
Okay. Yeah, peace over, peace power profit.
See, this is it's way different. Remind me of you, over Marquise, all day, every day. Yeah. Another Marquise.
I just inboxed him and said, "Can you throw some auto block?"
Yeah, another Marquise. That's why I love our community, because again, there's so many alike minds in this industry where it's just sickening. So it's no reason why a lot of our people should not be, I should say, gainfully wanting to learn, right? From number one, your peers, but people that even look like you're not, didn't really matter, but because you got people out there really doing the work. So it's not that, there's not a cadre of opportunity of people that you can pull from. Because again, everything that Brother Sway is breaking down here, and I mean, he's dropping jewels, right? He's dropping some gems, some major gems. A lot of this stuff is what we kind of go over and over for a reason, because you have to ingrain this into your psychological, outlook
into your
about
soul,
the markets.
man.
Into your soul, literally. Because if you go into the market and
you're gonna get rattled,
mentally unprepared, and you kind of went over something like over and over and over, and you say, okay, I don't need that today. I think I'm just gonna kind of freelance it. Well, the market's going to kind of really, it's gonna test you. It's gonna test you. So it has to become a repetition to become a repertoire, right? We have a saying over here, Brother Sway. We say repetition becomes repertoire. And that's in your ground game, in terms of your chart game, your fundamental game, your price action investor sentiment game. You have to learn how to corner all those things. And then you can take your show on the road and work a particular strategy. It could be price action. It could be order blocks. It could be supply and demand. It could be, trend channel bands. Whatever you use, it's still in respectability of what the markets are giving in terms of liquidity, all right, or what they call volatility and expansion or contraction, right? So, Brother Marquise, add some hot sauce to it, man. Add some hot sauce to what you're watching and witnessing here from Brother Sway here. If you can add a little bit to the bill here, Brother Marquise.
I wanted Marquise. I didn't know if he was in a position to share his screen, because I wanted him to show some order block.
Oh yeah, for sure. And the brother been dropping that drip, man. He got the whole flow slippery. When you put a sign down.
Slippery.
I also want to say, guys, before somebody else take over, I just want to say this, guys. What I realized too with the market is you literally have to, at the end of the week, I call it like a detox. So what I'll do is, whether the market move or not. So the beginning of the week was on the 12th, right? Monday. I don't open trade on Sundays. I don't know if you guys do, but so what I'll do is I go to the hour time frame. That's why I like TradingView, and I found the 12, whichever that is. Well, here, and I'll just cut the screen off, and I just bar replay. Because if this is your craft, and that's what I want to do for a living. This literally, that's all. This is what I want to do. And I'll just mark the chart up and dissect it, and I just play and see what I did wrong and how. And then I'll go on my phone with all the trades that I take and look at the prices that I take it. Then I'll go down to the 1 minute and I go down all the way down to the minute. And I say, okay, I enter at 907 at whatever price. And I'll play it and see what I did wrong. What was my mind frame when I took that trade and how could I got better? Did I enter too early? Did I enter too late? Or it was a good trade, but I over leveraged and once the market get against, I couldn't hold a trade. That's what I'm looking at. And I do it every week.
Sister Camille.
With it that I don't even wait till the end of the week. I do it right after the market. Once I get off the chart at around 10:30, 10:45 Eastern Standard Time, I'll go back and do a review. And then I'll write down notes. And then if I see something that happened new that I never seen before, what I'll do is I'll come here to my notes. And I in whatever.
You know what I call that, oversway or brother sway?
Repeat that.
You know what I call that?
What you call it?
Standard practices.
Standard practice, and that's
standard practices. And that's what's gonna make you a beast, you know, beyond, you know, your wildest imagination. Because one thing about the markets, I can say this unequivocally, right? Yeah. It is an equal opportunity entrepreneur environment here, where you are in control, literally, of your capital here. And all you're learning how to do is be patient enough to learn how to make a run on the banks, right? It's a saying, right? Run on the banks. When they make their moves, you need to be right there behind them, right? And if you consistently learn how to be patient with yourself, and again, challenge your discipline, like you saying, working on discipline, that's the biggest thing for everybody. Every trader always deals with discipline, right? Because you're dealing with human emotion, like you said. And so, of course, you know, one of my favorite mentors is, y'all already know who it is, right? Mark Douglas, Trading in the Zone, right? You got to get your mind right? You got to get your mind right first. And you got to declutter and unclog a lot of your misconceptions. You got to declutter a lot of your biases. You got to come into the market every day like, look, I'm at the beck and call of what the price action going to be. And once you move like that, you'll learn how to confine the value of how you position yourself. Not only just your lot size, but again, your entry, your exit, which is everything. It's just say first impressions of everything, right? Just like an entry is. Right? Yeah. Now you can always get back into a trade. It's not like it's over, one and done. But
hey, look, right
again,
here. I have
it's
it
all
here.
about discipline. It's definitely discipline.
So I label them too. So this will be a pattern that I study. So I said, okay, here we have a re-entry for compounding. So this is what I'll use to re-enter the market. Then I have a counter trend trade strategy to go against the trend. And I have an exit. So I try to label everything and organize it so I understand what I'm doing, because you're going to forget something, because the market, it has so many intricacies to it and it's so detailed that you're going to miss something. But it's like, when I look at the market now, it's like, it's telling me a story, you know, and I'm just reading it and seeing what it's telling me. And I'm just trying to catch it while catching the wave while it's going, you know.
The trend is your friend.
Yeah, you can't go wrong with the trend.
Sister Camille back test every week. She do the same thing.
Oh yeah. Very detailed technical traders. Again, like I say, Omar Keys definitely his lane too. A lot of people, again, who find their niche or their niche, as I like to say, in terms of learning how to kind of, micromanage the market. It's only going to make you a more profound trader over the years, because once you've seen it once, you're going to see it again. And see, that's one thing about markets, right? It has a moment it has what they call what's the term they call it? Is it like true value or true price action value, whatever they call it? It's some kind of term they use sometimes, but it's just basically saying the market's always going to repeat itself, right? At some point,
like a pattern, right?
Right. That's what it is, one pattern. And
it does the same thing over and over.
Right. When you see those, those ebbs, those flows, those peaks, those troughs, those rounded bottoms, those flat tops, those ascending triangles, those descending, right? The rising wedge, the falling wedge, and you got all the other ingredients kind of working in your tandem, right? We call it when the stars align, right? We all been in the scenario when the stars align. That's called a parabolic, right? Parabolic moves, when they happen, all the stars align. You know what time it is. Just bring the dinner bell, right? Eat all you can get all you can while you can, because they don't come always. But when they do, you have to be ready. So we have,
for example, right? That
stay ready. Yeah, stay ready, so you don't have to worry about getting ready. So that's very important.
Exactly. So like that NAS move, right? Based on the way I trade, that was the only move he gave the market gave the whole week. So I'd have to sit on my hands for NAS from the 12th all the way to the 16th. The only seller. There's other moves, but it doesn't match my pattern. So a lot of times that would happen where
Good point. And I don't mean to cut your wisdom there, but I want you to say that one more time.
It matches pattern.
You didn't touch the market until it did what?
He sat on his hand.
He sat on my hand. Don't move.
So that's very important. Now, what you just did in that moment, you proved to be what? A smart businessman. Because all money ain't what? Good money. Every opportunity that seems to be profitable ain't always the best one, because if it doesn't meet your setup, it doesn't meet your strategy standard, guess what? You don't take the trade, but you learn more about watching the trade than actually taking that trade in real time and then what? Going through all that ebb and flow. That
I know what I call it.
Very important.
I call it getting your head scalped off. That's what I call it.
That's a way to put it.
Yeah. So you know how people try to scalp the market? You gotta be careful because the market may scalp you.
That's a fact.
Yeah. So even gold, right? So my thing is this. While I like being patient, because I look at 3 different instruments. I look at the US 30, gold, and NAS, right? And what happened is none of them really move. But I can almost guarantee that at least one gonna move, at least one. You're gonna eat one food for the whole week on one of the peers if I just be patient. Sometimes they're all gonna give me one move for those 5 days, but sometimes this week for me was a slow week. It was only that NAS move that dropped. But gold didn't do anything. Gold just kind of consolidated, just really choppy. So if you don't have a particular, like you talk about, a strategy, you're gonna get slaughtered because you don't have any kind of like fundamentals or anything that you're looking at that you following how you go about going to market. Then you're just guessing. So you're gonna be up and down just like the market. You're gonna be up one day, down one day, and it's gonna be a constant turmoil for you. But the first thing you need is some kind of philosophy, methodology that you follow and you stick with it. And everyone methodology is gonna be different. Some people strategy are gonna be more accurate than others. Mine is extremely accurate, but it comes with a lot more stress. You got to be precise. It takes more time. You have to have the brain. Everyone's brain is different. I can sit by the computer for 12 hours straight and don't get up. Everyone is different. My younger brother, he can't do that. He's like, I don't know how you do with all those rules. That's just not me. He always tell me you got an engineering degree. Engineering mindset. So the market have its way.
Well, you do have an engineering degree. You got to realize.
No, I don't.
Yeah, you do. Actually, you do. You just don't. You just wait. You don't need white folk to give you that confirmation.
Yeah.
Right? Because you're making your money on your own time. You learn how to build opportunity, right? Through ideal of what? Pattern recognition, trend recognition.
Yeah.
That's what a house engineering is, right? It's architecture. It's math. Yeah. It's again, physics. It's geometry. It's all those things coming into perspective. But you're doing this with what? The raw materials that you're using is what?
Yeah.
Your capital, right?
Correct.
And the charts. So you are engineer. Don't convince yourself that you're not, because you're realizing that's exactly what you're doing when you're plotting opportunity in the market, especially as an entrepreneur, because all of us are coming into the market as an entrepreneur, period. Point blank, period. Yeah. You're using your capital and you're trying to obviously pull money away from this money pit, right? Exactly. All these high frequency trader algorithms, these bots that are out there that are moving at a higher, different, standard value in terms of a lot of capital underneath it. Of course, you know what's going on there, right? Again, like I said earlier, they're capturing 15 cents, 30 cents, 50 cents.
You know what? And what it is,
that's hundreds of thousands of millions of dollars.
Exactly.
Right?
But their mind will never be like the computer. The computer never gonna be as accurate as a human. The best traders are always gonna be a human, because there's so much. It's more to the market than just numbers and a formula that you plug in. There's certain things that the computer will never know, like with news and motion.
What happened with the NASDAQ Friday?
Like it just plummeted.
What happened to the SPY Friday?
The what?
The SPY, the S&P.
Same thing.
Oh, see, I only look at NAS, so I wouldn't know. I don't look at.
But pull it up right now. This is good, because again, always never be afraid to go outside your boundary. It's all the same thing. It's still all what? It's still what? The marketplace, right? You look at the SPY, the S&P, SPY. Sorry, I'm sorry. You look at the SPY and pull up that daily.
First one.
Yep. Yes. Mm-hmm. Pull up the daily. Or you probably already on the daily. Hit the daily. What do you see? Now I'm finished. Now go to your. Sorry, hit the plus button at the top up there. Do you compare up there with? Hit the plus button on top of your trading view up there.
Look right here next to
go inside your bar, inside the trading view. Go inside the view, the bar inside the trading view.
Right here.
See that little plus symbol up there besides the candles up there? That little plus. Yep, hit that guy right there. Now overlay that with the NAS that you had up, the NAS. Now click on it. Click on it. All right. Now, okay. Close it out. Now you can put it at the bottom or at the top. It doesn't matter either way. But now you have to squeeze it down a little bit. You can see exactly what I'm saying. But you can put it in a separate window too at some point.
Yeah,
now squeeze your price point down, your percentage on your y-axis down.
Okay, yeah, froze.
Yep.
Okay, it's a little bit.
Yep. See the overlay? You see the overlay now?
Yeah.
That's your major indices. That's your Dow Jones, your US 30. That's your NASDAQ, your Q, your TEX, whatever. And that's your what? Your SPY. And also if you want to put in the Russell, but the Russell been wet in the bed. So
they follow one another. That's the thing too.
That's correlation. That's all that is.
You should be playing Sway. You should be playing them both. You be winning both ways.
It's just other ways to open up your strategy. That's all it, because again, all major indices do follow to a degree, and I'm saying the SPY follows the SPY follows tech more so than it does the Dow, because we know the US Dow, the components of the Dow are definitely what they call more industrial based stocks, right? Your Home Depots, your Caterpillars, whatever. But SPY has a myriad of tech stocks banked in there, and we got certain stocks that are hybrid tech stocks that also flow within the realm of what the QQQs, right, or the XLK or the NAS. But I'm just saying that from a place of correlation. When you see that they're all kind of trading under that same correlation or like value, well, guess what? That just opens up your window where you can trade other tickets in the same breath, right?
Yeah.
You can have a NAS trade on and an S&P trade on when you have that correlation there, and you can eat off both, right? It's just more way to look at it from that perspective.
Yeah, I'm gonna touch on what you just said. That's interesting, right? So when I first started, I used to look at maybe 7 or 8 different instruments. So I'll look at Forex, certain GBP pairs, Euro USD, UCAD, and then I also looking at the indexes and gold. So what I found out is it's almost like someone puts you in a room, right? And you have all these, like say, rabbits, and you got to catch the rabbit, but you're trying to catch all of them one time. And then what end up happening for me personally is I end up catching none, because it's so difficult for me personally just to look at one pair by itself to catch it the way I wanted to catch it, that by me looking at too many things one time, it forces me not to be as focused, because I get caught up in looking at one. And that's just my experience from what I do. So me personally, I try to only look at those 3. And then what I like, where I look at them is.
That's a good point. And that's what right, very good point. You got to trade what you're comfortable at. And I use that for a reference to let people know just only, again, find your niche, but, Mason in this case would say find your niche, but steal from everybody.
Yeah.
At the end of the day, again, you're trading what's most comfortable to your what? Your optics, your ability to compute it inside your brain, right? And then the mechanics of what you're being able to do when you kind of, you're moving in real time, you got hot keys or you're hitting your mouse. You have to be comfortable in that setting when you're day trading momentum, right? And so once you know your ticket, when you know your opponent, in this case, I like to call him my opponent. Every stock is an opponent, right? You're trying to get out of it more than it's trying to take from you, right? And that's basically what you're doing when you're going to war every day with these stocks, right? These different
and psychologically too, right? Yeah. The way I look at it is,
it's about it. It's definitely about it.
Like the sell that you were talking about, the SPY and whatever other peers. So say they all selling, right? And the most I can put on this trade is a standard. The way I'm looking at it is, why would I break up that standard into 4 quarters and put 25 cents on each when I can just put the whole dollar in one and just focus? It's the same. It's the same green. So why would I focus? That's the way I look at it, because I've tried that way, and it didn't work for me. So I find me personally the best thing to do is just, you can make, because some people, like some of the greatest traders of all time, they make all their money from one single pair. They don't look at anything else. And the more you look at
gold, commodity traders, tech, it's all the same. And this point that I'm referencing in this, I'm just showing you correlation, right? This is not trade. This is just showing you correlation. When there's market weakness in terms of the major indices, then chances are everything else is going to be in that same level of weakness, unless they have an unforeseen breakout of a weighted participant in their indices that's keeping them afloat, right? There's been plenty of days when the Dow has been up and everything else has been blood red, right? Because again, Apple might have had good news, and this.
So there's some kind of manipulation going on. I see that.
It's not even that. It's correlation. It's what they call when you have
that. You said opposite. Now you had to. I thought.
Right. When the opposite. What I'm saying, when you do have that kind of scenario like that, that's basically what's happening. It's a point where everybody ran from one side of the boat, and they ran to the other side, right? And they run into that only one because that's the only boat that has the better the better chance of staying afloat and not going get sunk. And that's what happened. What they call in a defensive play. That's basically what's happening is a defensive play. You have a money ship. You have people going to the strength, right, or where the strength is at, and they'll pile in over there and keep that afloat. And that's basically what the Nasdaq. The Nasdaq was barely pulling back before it kind of really gave up, its gains a little bit on the back end of the day. The SPY was already showing the massive weaknesses because again, it was already under pressure. But it's interesting because I'm a student of the game in the same way where I'm always focused on the minutia, right? What's in the mind of these traders? What's in the mind of these algos? What's in the mind of the retail traders who are constantly always going to be the ones on the losing end because they're more emotionally compromised in a lot of ways, right? Or they're understudied or they're underprepared for what's going to happen in the market. So it's just a great rule of thumb when you can kind of see the market from a big canvas and you can see all these different indices, whatever. But again, you still trade your strategy, right? That's what I want to make sure.
That's what I say.
Still trade your strategy, but learn everything you can about the market that you guys can. And I'm saying that strictly for a lot of new traders out there. Learn everything you can about this market. And in time, you still will figure out a strategy and you'll stick to that, but learn everything you can. Do not limit yourself in this market because there's always going to be a new value or a value point that they're going to obviously, infuse into the market at some point that's going to throw a lot of people off, right? Because they'll get, one track, and the strategy will break. Then you say, okay, let me change up my setup a little bit, right? Just let me tweak it a little bit, right? So you can kind of, stay within the flow of the money. But learn everything you can.
Can I say something on what you just said? I want to tap in on something you just said. It's interesting. It's another way to look at that too. How you would say trying to learn as much as you can. I agree with that too, but I'm gonna push back a little bit. And I'm gonna say you don't need to know everything. And also what I learned too is, like, you see how you have your style of trading, right? And I have my own style of trading. I feel like if you don't know anything, you want to learn under somebody and learn. It's almost like you learn a discipline, right? Like somebody that, like I have a friend that played the piano, but he got piano lessons, but then he didn't finish. He didn't continue. So then he's so raw, like a lot of things you don't know. So you want to pick a certain style from somebody that you like, that you see they're profitable, or you like their style of trading that fits your personality, and then you want to master the way they do it. But if you're trying to learn the way I do things and the way you does it and somebody else, it's going to confuse you. And that's what happened to me at first, where I was looking at too many things at one time. You want to piece it up. Like you said, maybe you want to focus on the support and resistance, supply and demand zone. And you find a certain particular pattern and you just keep practicing it before you start adding, different things like back pattern, guard.
Right.
I have
we actually call that find your niche, but steal from everybody. That's what we call it.
Yeah. And that's what
we call it on our side. Again,
I do the same thing too.
Find your niche, but steal from everybody.
I practice a little bit of everybody because I get bored.
Yeah.
So
Mo is a plagiarist. She is a plagiarist.
Yep. I do a little bit of. I got
that's the best thing in the market too, over quick, because you gotta learn. You gotta learn how to shake and move. Because man,
hey Mo, you smart though. That's real talk though. Steal from everybody, man.
Yeah,
steal from everybody, but find your own niche. Right?
Yeah, because I get bored, and I'm not gonna do one way because I'll be like, oh, I don't like doing it like that this week. I want to do something different. But that just keeps my mind. It just keeps my mind active. So even though I'm finding my own way, I still go and I'll practice a little. I'll do a little something. I'll try to do a little block order. Now that I seen what you do, I'm gonna try to do a little bit of that. And then what I do is for I do that because I'm just looking for. I do that to look for what I would like my growth stock to be. Even though I could go to the fundamentals and I can find the growth stock easily, but I practice the technicals, the trade and in the technicals of what everybody's doing, and then I pick my growth stock like that. And I said,
let's go, Mo.
This is what I want to put in my my retirement on my IRA. Like Chris, you asked me why did I put Moderna in there? Well, I put Moderna in there because I raised the price action and I did some things with it over the year, like that whole 6 months. So I was like, oh yeah, this is gonna be for the long haul. I'm gonna put this over here because this is how I want to trade that. And that's why I have certain stocks in my retirement piece. But that's me though. I get bored, I get antsy, I get anxiety. I don't want to do it like that no more. I want to change it. And it's not me being inconsistent. It's just that's just how I am. I just like to do different things at different times. So I'll play with a little bit of your style. I'll play with a little bit of AE style. I'll play with a little bit of Marquis style. I'll backtest a little bit. But I'm just in this.
You just want to be the god of trading.
You learning. It's good. No, it's a good thing. Here's why I say that's a good thing. I don't mean to cut your wisdom too. It's a good thing for one reason. You're trying to, again, how long, because y'all know we didn't went over this before. I ain't finna put y'all in the hot seat. But the market has been around for a long time, right? Anybody come into any aspect of time, you're up against the same thing that a person has been in it from 40, 50, 60 years to a degree, right? Outside of the technology infusion, you're still trading the same understanding of patterns, right? Trends, channels, whatever, that's always going to be here, right? So ultimately, again, it's about your optics, right? It's your optics, right? You're trying to match your optics with your mental capacity to be able to, compute all this and make a executive decision from that, right? And so you may see somebody do a little something, you're like, oh, that's pretty neat, right? It could be an indicator, it could be an oscillator, it could be a way that they order block. It could be, you say, okay, that's pretty neat because it agree with your optics at that moment. Well, that's just one piece to it. Then you got to figure out, okay, the underlying, okay, what caused that? What preceded that made this a very monumental moment, right? Or for a breakout or a breakdown, right? And that's why I say, it comes into play where you say, well, if you match it a little bit, take a little bit from this person, take a little bit from that person, meaning, there's some of the intricate part, all you're doing is just refunctioning, rebuilding your own machine. As we say, there's nothing new underneath the sun, right? You ain't going to build another mousetrap. There's already one there. You only can make it better, right?
Right.
It's okay to steal from everybody. Still stay within your lane of what you can as you say, manage, right? And what works for you, but also you can always enhance your armor because the market again is always it's always evolving and it's always changing. And it's only gonna make you better when I say that. When I say learn as much as you can, don't mistake that from saying go out there and try to do a lot of different things. I'm saying you're trying to learn an institution that has a probability of success well into the 90s, meaning where they're taking from retail traders, right? They're stealing from, literally robbing retail traders every day because we're unprepared, right? We come in gung-ho and thinking, oh, I could just ride, this and this is the only thing gonna get me there. That's fine until it forces you to switch it up. But in the interim, if you become a student of the game, the true student of the game, of course you're gonna learn everything you can, right? Because then you know what not to do, right? You know what not to get caught up in. You know what can work, when it will work, because you've seen this picture before. You've heard this terminology before. You've heard this person go in on this, like, oh, well, when this happened and this because of this, and if the bonds start, selling off, what's going to happen with the broader market when you're in a high inflation? All those things do have value and purpose if you're trading those particular indices or those assets. So that's what I mean when I say that. You have to be a student of the game and don't limit yourself, because I know a lot of technical traders. I know a ton of fundamental traders, right? And I know a lot of traders who trade all of it, right? Because they realize that, okay, I want to be able to canvas a market that's not very favorable towards technicals right now. And if they just going to play purely fundamentals and book value and cash, that's your strength, Monica. You deal with money. So fundamentals, right? So you can plan a fundamental trade based upon understanding cash flow, understand book value, right? Again, the importance of that based on how we did with Moderna, right? And we looked at those companies that had those good balance sheets, right? Those balance sheets that matter, and you say, okay, in a day trade and or that of a long-term investment, there's opportunity here because I understand the lingo, I understand the name of the game in this perspective.
The language.
Right, the language. So that's what I'm saying when I say that. And I stress that to a lot of new traders, because in doing so, what it's going to do to your psychology? It's going to make your psychology only stronger. Right? Because you're moving with all this knowledge now. And you say, okay, I know how to now compartmentalize, and I know not to do this. I'm not going to get caught up in that. I know when to press the gas here. That's just making you a stronger person. Just like Michael Jordan. You think Michael Jordan only care about dribbling? You think he only cared about, free throws? He was trying to learn everything he could. He stayed within his lane and he adapted when it was necessary, is my point. But you have to become a student of the game. We hear that a lot because it's only going to strengthen your game. I guarantee you, years later, you're going to thank yourself, right?
And what I also do too,
you're not a trade most all markets when that happens in that moment.
Yeah.
It's just the point I was trying to stress.
Yeah, and what I do,
trading is fun, man.
It is. It's very fun. It's like Christmas every morning.
Even when you understand, the losses, you really understand, the mistakes that you made, and then you can take that information and carry it forward. I'm not gonna lie, I bet it wrong, and I can't beat the market, because I don't have enough money to beat the market, regardless of what's going on. But when you're wrong, you're wrong. You just learn from it and move on. You know what I'm saying? Like you call it tuition.
Tuition.
I took a couple L's this week. They got me back because I was kicking their ass this whole month. Whole month of June, I kicked their ass. And they
that's it.
They got me back. So, I just take it like that. I go.
But you know what I say this too, over Chris? Find me 100% win rate trader out there.
Facts.
And I give you all my properties. I give you everything I own. Find me one that's traded at 100%.
That's facts.
Warren Buffett takes L's. Paul Tudor Jones take L's, right? David Tepper. Insert your favorite trader. Ray Dalio. They take L's all the time, right? The difference is that they have a lot of what? Backup, right? They have, again, to them, a 30% win for them is like, okay, man, that's a wife, sending her on the yacht to Milan, right? 30% is like, okay, I can take this little money and work with it, right?
Mm-hmm.
To try to build more. So that's just a part of the experience, right? That's what an entrepreneurs take L's.
Yeah.
Business owners take L's, right? That's a part of what makes this so great. The great thing about this is, guess what? Guess what makes this so great for all of us, though?
You can come back.
I ask this question to all you guys. What is your overhead? What is your true liability in this?
Right.
It's your skill set. It's your patience. It's your discipline. It's your ability to want to be what? A student of the game. So you don't make the mistakes that a lot of people that come in and have this delusion of grandeur. Oh, I'm going to bet it all. GameStop. You're not going to get a GameStop every day.
Or Bitcoin.
Right. Or Bitcoin every day.
Bitcoin, man. Don't mess with that thing, man.
You just got to be patient. And I'm a part of the Bitcoin. Granted, again, I'm a student of the game. So I'm just looking at it from an asset perspective and that only. Right. That way I never, not see opportunity when I can see it, shaping up to be that. I just trade within the confinements of my discipline that will allow me to do, and also my capital. And
you know why it's so hard for me to look at the Bitcoin is because I'm very meticulous in everything I do. And the thing with Bitcoin, like for example, NAS and US30, it's a US currency, right? So the mark that instrument gonna open up at a certain time, 9:30 Eastern Standard Time. But with Bitcoin, it's not following anything. So you may take off at any time in the morning and you don't know. So it's hard for me to have a specific time to look at it, So that drop that happened, it was crazy. But piggyback off what you said about following other people, what I would do is, we all have traders that we look up to or that you admire. So what I'll do is I look at their entries. So they'll post on Instagram, wherever they post. And what I'll do is I look at the price that they enter at, then I'll go back on my charts and see what they were seeing. And study it and see if I can pick up some kind of gem of what they're doing. Or now I get to the point where I study the market so much now, I know that's not my issue. My issue is the psychology part. So I listen to what they say, I listen to what they say. They have if they have stuff on YouTube, how much money they lost and what they did, and the same issues that they're going through, it's the same thing that I'm going through. So that it's a next level that I'm trying to get over now to take myself to the next level, and it's all psychology. And when I start looking at the market now, it's not difficult. It's really, really easy. But what makes it so difficult is our emotion and our greed and our ego, where sometimes you're wrong and I just don't want to close out the trade for whatever reason.
Yeah. When then revenge trading becomes an issue. Yeah.
Right.
And again, that's one of the things why I like to say again, being a proponent of that understanding. That's for me, I feel like that's one of my greatest strengths. And I'm still learning to get better at it. It's just that Maybe it has to do with people's background because again, let's say you work corporate America, you understand how to work under pressure. Let's say you work a job that always puts you in that kind of scenario where you multitask a lot, right? Guess what they're doing? You learn how to what? Operate under the confinements of the rules of engagement. Well, that's psychologically what? That's your initiative or your intuitive value saying, oh, instead of doing that, work smarter, not harder. That's what you learn how to do.
I agree with you, right?
That's what you're trying to do.
I agree with you, right? But you can say that and I can say that at the same time, but it's a total different ballgame when you put your hard-earned money in this market.
Well, see, that's what I'm saying. When I say that
psychologically.
Right. When I say that, meaning you're learning how to not do the same things over and over that's caused you the mistakes. That's the whole point.
Right. I agree
you're
with
learning
that.
as you're growing. Evolution is still taking place here. This doesn't mean you hit the wall the first time you make a mistake and you say, you know what, this ain't gonna ever work. That's not how this works, right? No person that ever been successful in life ever had that mindset where you just give up, right? And let you know it's just a dead end block where you just know nothing gonna come from that. So you do yourself, all you do is learn how to trick your brain to say, okay, don't try to force this moment at this perspective under this strategy, under this diagram of understand what the market is giving you here. Let me now kind of annotate myself. Let me it may be another indicator. It may be another a time frame. It could be okay, if there's any other outlier within the market
maybe it was the news
overlooking. Let me now look into that a little bit more and be a little more patient with the self, right? So it's always going to be a steady ongoing study, environment. You're never going to hit a point where you just say, I can't study no more. I know it all and I'm good. That's not going to happen.
Hell no. Yeah.
I'm speaking strictly for the new traders out there because a lot of people that's watching too, they're 100% at the starting block. They don't know none of the lingo like a lot of us we're speaking. They don't know half the stuff that you've been breaking down in terms of gems, Brother Sway. And so we got to speak in layman terms when we speak to them because they have to understand that it is a what? Investing and trading is not a lazy man's game. It is definitely.
So my question to you now is: have you broken down as far as like how to mark up the chart?
Yes.
As far as technicals.
Yes.
Yeah, just marking it up. Like for example, if I'm looking at this, I'll just dissect it. I'll just keep just marking up patterns.
Sister Monica, I'm sorry. Go ahead.
Yes, we Sway. So
yes. Okay, so my question to you now. All right, go ahead. Finish your thought.
No. What I was gonna say was a lot of the information that you're stating we do because the all of us who are on here, with the exception of you and the other guy that's on here, we've probably been on the panel together since 2016 doing the same info. Wow. So we also in class with Brother AE on Thursday evenings, and we also live on Wednesdays. So we do and so
we've been doing this a while.
Yeah, a lot of times people come in on a tail end where we sometimes what I'll do like I'll start some training, like a 12-week training or so, and we'll start all over, like breaking Trading View up with the blue screen and teaching them how to do your background, your appearance, and bringing in the kids. Everything you're talking about right now is just that sometimes we've gone past that, and then every now and then we'll go back to the beginnings when we're live.
Revisit it.
We revisit it when we're live. But on Tuesday,
we got some ugly charts out there, bro. Trust me, we got some ugly ones.
On Tuesday,
mine messy, man. Like, cause I can
show you some real messy. Matter of fact, I'm gonna show you this one of my.
Stop sharing for a minute, Sway, because we want Marquis to come
just in. For training. This just one of a training one. This ain't the one I trade off of it too, but I got.
You don't want to see AE charts.
I got some ugly stuff too, bro.
I thought it was mine early, man.
Man, shit there.
Like to me now, right? When I look at your chart, to me it doesn't make any sense. It just look like straight.
Exactly.
To me, I
use
like
it for training, and we use this for training.
Yeah.
It gets, once you condense
that
it,
like
you start seeing what's going on when we start condensing. But that's just on a bigger frame, time frame in that perspective. But that's exactly what we're doing. We're doing just that. We're making moves, and we're making money off these moves. Keep in mind, we're trading options, we're trading comments, and we're making money off these moves. We're diagramming again that potentiality, right? That's what we're looking for every day we come into market. And we understand what's going on. Peak to trough. We got fundamentals, right? Because again, in my understanding how to be better as a trader, I'm going to learn technicals. I'm going to learn fundamentals. And I'm going to learn how to master price, price action, price sentiment, investor sentiment. because those are the three things that you can't escape once you come in as a new trader. You're gonna go through those things. Within that, then you say, oh, I figure out, I'm a better technical trader than I have fundamentals. Let me home in on the craft of technicals, right? But you always gonna come in learning technicals first, then you're gonna learn the fundamentals, and then you're gonna understand the aspect of the psychology of the investor sentiment, how the herd is thinking, right? So you don't obviously get outside of that. And then beyond that, of course, that's really investor sentiment, the bank. But we'll just say that for the camera while it's rolling. Wow. But yeah, we got that. We got all that you're speaking. This is all this. I mean, we got some ugly stuff out there too. This something. I can go back, some years and years. You know what I'm saying? So it's all relevant at the end of the day.
You got the notes on there.
Yeah, we do notes and all, because again, I'm trading what a lot of these people that sit around Wall Street all day, when they program their bots, when we know markets are, like, think about all of last year when Trump was in office, right? When the market really got the movement under Trump.
Oh man.
Think about how that was for anybody that was trying to trade a strategy. You ain't finna tell me that you had the same strategy 24/7, because he would tweet and throw the whole market off by 0.7% or percent. We had 1,000-point moves in the S&P 500.
When he had that one rant, the market was going crazy. That
500-point moves in the S&P 500, unheard of. 700-point move. That was all on a tweet. So if you had a strategy and you try to trade within that, you're gonna get obliterated if you're gonna try to just forcibly try to work your trend or your trade into that. You had to learn how to what? Audible, right? You had to learn how to change the strategy a little bit and be able to deal with that. So you might have had shorter stops, right? Because if you know he was gonna tweet, you gotta be prepared, right? If not, they're just gonna run on your money. They're gonna have a liquidity.
You gotta
break.
follow him on Twitter.
Exactly.
Because if you don't,
you see my point now. That's why I say
he's very erratic. So
you know what that is? That's a part of what? Investor sentiment research or fundamentals to a degree, right? Because the technicals are at the what? The privy of what? The tweet. No matter what your technical was before that tweet, when he tweeted, get what the market did.
You're gonna shift the whole pattern, everything.
Right. So you had to adjust. So that's my mentality. My mentality is that you have to be a student of the game. Period. But still,
it changes too. Like for example,
trade the strategy.
And Marquise, where Marquise at?
Area with my food.
I'm here.
Oh
yeah. Crank your charts up over Marquise. Definitely, he can show you.
Oh yeah, I'm here. I just have to. I just logged in from my computer, so I just have to share the screen. Okay.
I'm in learning mode there. I'm taking notes like I always do, and I'm listening. And then this is on YouTube. Somebody asked this on YouTube, so you can go back and replay this for a lot of you guys who taking this in. But that's it. We do all the indices. We have the normal websites like investing.com. We US 30 NAS. We do all that.
See that part, I don't like doing that. So my
Forex,
the one that does that, and he would tell me like, "Hey, it's fundamental." I'm like, I don't want to see all of that.
You just trade what you know, and that's good. Like I say, but for a new trader, you don't never tell a new trader that they should not learn this though. That's what I'm saying. They need to learn everything about the market so they can get all their what they call the miseducation out the way, because they're gonna find out the hard way by losing capital by trying to see a person do a strategy and they can implement it, and they don't know all the nuances. They may not understand some of the jargon to a degree. You have to be open-minded when you come into this, right? Because there is no exact science to this, guys. It is not. Trust me. And I've been at this for years. There's not exact science to this. You have to be open-minded, and you have to be humble, and you have to learn how to do away with your biases. And the last one, you have to be indifferent to money. Indifferent to money, right? So that's just a part of some of your learning. Ebb and flows that you're going to encounter as a new trader. I'm speaking strictly for the new traders out there. You have to be open-minded in that.
I think Marquise just see all of us have different. Go ahead, Marquise.
I see that.
Yeah, definitely facts. So what I really wanted to do today, right? I just really want to start. I want to start with some fundamentals, man. I want to get back to the fundamentals,
Marquise,
some of the lost knowledge.
Mute your other device. You get the one. Use your computer. One of them.
Okay, I got you.
Yeah, it's gonna echo. Just mute one of them.
Okay.
All right, you good now?
Oh no, I didn't mute it.
There must have been somebody else then. Go ahead, you good?
How do I go back?
No, you good. It must have been someone else that was echoing.
Oh, okay. So because I know I have another device and I didn't mute it. Okay, it's good now. Okay, cool. So yeah, I kind of wanted to go back, to some, classical information, like not a lot of people spend enough time looking at these bar charts. And I think I love Japanese candlesticks. That's basically a lot of what my trading is based on. But ultimately, this is a great representation of the components of a Japanese candlestick. And it also really shows the manipulation that
You
goes
old
on.
school there, Open Marquise. Tell everybody in layman terms what those are actually called, though. You went old school. That's why I came from that too a little bit. What are they actually called? Tell everybody in layman terms. They call the what?
These are bar charts.
Right? Or the ladder rungs.
Or the ladder runs, yeah.
Old school. They call ladder rungs. Back in the old days, that's exactly what they are, ladder rungs.
Yeah. And if you
school.
ask me, I felt like, we done moved away from this because it shows the manipulation a little too well.
Mm-hmm.
If you ask me that. And what I want to look at and focus on, like, all right, this is a euro dollar chart. We on the weekly right now. And if we turn your attention right here, this is the beginning of 2021, January, right here. And I really just want you to look at these bar charts, right? And recognize, actually, I'm gonna, yeah, okay. So, and just recognize the different components of the open, the high, the low, and the close. We know that's really what pretty much makes up a candlestick on any time frame. We got the open, the high, the low, and close. And it's very, very simple, very, very simple information.
What we call it, OHLC, baby. OHLC, baby. T-shirt for it.
That's right.
Y'all keep wondering why I keep saying pay attention to OHLC. Not all right. Let me go on mute. Let me just go on mute.
And it's so simple. It's so simple that I think it really gets a lot of people. They take it for granted. They really take it for granted. And I see one of the issues today is everyone starts off focusing on the indicator first. They literally derive their trading ideas centered around the indicator. And if you're doing that, you're working backwards. Like that's off rip. This right here is what institutions, this is what big money is using. These are facts. This is not beliefs. This is not assumption.
They use the ladder rungs. They 100% use ladder rungs. Matter of fact, all the data that goes through the tape through Wall Street, the NYC, they're using ladder rungs. That's what they use. I'll show them. We've shown this before many times. Yeah, through some of the books and publication, you see the ladder rungs in there. You don't never see the candles too much sometime in summer.
Exactly. Yeah, you're right. And it just really represents the information well. And even if you think about it, the open, high, low, and close, when you think about what these indicators are programmed with, they're programmed using these levels on some time frame. A lot of these indicators are using this information, the open, the high, and low, and close, right? And when you look at these, I want you to think about like whack-off theory, right? With whack-off, we have what? We have accumulation, and a markup, right? And then, actually, it'll be just green candle. It'll be an accumulation right here, and we'll have the markup, right? And then you have, distribution back down to that close price. And here you will have, distribution marked down or distribution marked down, like just showing. But I want you to look at it like this. Like, look at this candle right here. I want you to look at this like accumulation, right? And you see this line right here. I want you to look at that as manipulation. Think about all the manipulation that go on, in our country and this world. It's always some manipulation that really moves everything some way, somehow, and there's going to be some accumulation. There's going to be some manipulation, and then price is going to go where I want to go. Same thing, vice versa. It's going to be, it's vice versa to look at it, but, it's like, accumulated here is going to be distributed down here. But before it's going to be accumulated, right? Then it's going to be manipulation this way. And then we're going to push down and close. So it's just really important to understand this manipulation and the purpose of this manipulation. So if we look at December, the first of that year, right? And we look as, think about when traders are trading this throughout the year. This is obvious short. This is an obvious downtrend. People were shorting this like crazy. We're shorting this. We're pulling back and we're shorting again, right? So there's people who get in long term. There's big money and little money getting in big long term positions way up here, shorting all the way down, right? Until it reaches some type of point where the market feels like this is oversold. When big money sees like, oh, this is a come up, and they jump in and they start to move price the opposite way, right? With that accumulation, manipulation, and they push the price up. Accumulation, reaccumulation, manipulation, pushing the market up. And while they're doing this, remember all of these traders that went short, all of these institute big money went short all through here, right? Their stop losses are resting in these points. Because when you put on the trade, they have stop losses, here, or they have, points where they're going to trick, their risk is too much. So when it gets bought down here, and one of the reasons for this manipulation as well is you have to think when big money moves their money around, they move the market. You think you get in some of these like really, really small penny stocks and you got enough money, you can move that market. You get in and put some money in there, you can shoot the price up, and that can also cause slippage and things like that. You have points where as you put more and more money and buy more and more, you are pushing the price up. So you got to think somebody come and take 10 million, 100 million, whatever, and trying to buy, at one time, that would push the price up so fast.
Jerome Powell.
As the time passed.
Jerome Powell, them bonds, them bonds.
they will. Exactly. You push. Wait, yeah. If you're getting in, like you think, put yourself in the mind of you a fund, and you're trying to jump into an asset. If you put in that much money in it, and let's say you just go ahead and buy 20 million at one time and hit that buy button, what's going to happen as you're buying this? It's going to be moving the price up. For let's say each $1 million, you might move the price $10. You know what I'm saying? $10 or 10 units. So much so you would end up losing money with your entry because you push the price up and kind of price yourself into higher prices because you have so much money and so much liquidity. So what these funds like to do is move price to a level and trip other traders' stop losses so that it nullifies their slippage. So these traders who have their stop losses resting at these textbook levels, they go down there, reach down there and steal all those positions so that they have cheaper entries for themselves.
Half dollar and whole dollar marks. Those
Exactly.
are the most universal stop loss places for all traders to get chopped up at.
Exactly. And that is something I keep on my charts, those whole and half marks. You have to be looking at that level. If you zoomed out this far on the chart, these are the levels that you'll see. So it's good to mark those levels out as well. But yeah, that's what they have to do. And the same way as they are moving price and they're looking to take profits, they have to find some people who are willing to buy from them at a price that they probably don't want to, but they have to. And those are people who have stop losses. Those stop losses are buy orders. I'm sorry. Those stop losses are, those are orders resting here. I'm sorry, I might have said that backwards. But these stop losses are resting here. So they go and trip these stop losses so they have willing participants to buy back from them by tripping their stop losses. So, what you saw happen, at the beginning of the year, we went on this nice downtrend. They supported this level here, and you have continued. If you look on the weekly, and you got to think price is cyclical, right? in nature. So when we see on this weekly how this bar looks with this accumulation, manipulation, markup, close, this is on a weekly. So if you looked at like a daily, you would see this same thing happening on a daily very often. If you looked on an hourly, you will see they are made up of a whole bunch of different bars, but there are a lot of bars that are going to be the same type of proportions, if you will. So they are pushing this price all the way up here, and taking these, right, we return to the open price of the year. That's this line I have drawn out here. This is the yearly open. And then again, while they drove this price all the way up, these were stop losses were resting. Stop losses are resting here. So when they bring price down, what are they doing? They're using these people's stop losses as liquidity all the way down, until they get to a level that they wish to support. And that brings us to talking about the order blocks, So right here on the weekly, when we define order blocks, that comes from ICT, shout out to ICT, it really happens. What I'm going to do real quick, I'm about to bring a visual that represents a high time frame candle. This represents a monthly candle. Okay. This is from month to month, March, April, May,
Mark,
everything like that.
I swear I hate you. You got the most crafty little looks.
Yeah, exactly. So this right here, I want you to look here. This is February. So one of the things about order blocks, a lot of people, get mixed up because a lot of times it's mixed up with supply and demand, which are different. They're not the same. They have similar concepts, but order blocks are very, very specific, form of supply and demand, if you will. Right. And when you have an order block, I'm sorry, what you say?
Go ahead, finish your point and then show it to me with the candlesticks because that's what I'm used to seeing you do it.
I got you. I just wanted to make that point of showing that manipulation. Okay. Because this is what I'm showing you right here. This is a representation of a candlestick, right? Same thing we got here. We got the open, the high, the low, and the close. Same thing.
It's more detailed with the OHLC. This is the original OHLC instrument, to be honest. Because you have the rungs, see the ladder rungs in there, those little lines in between the horizontal lines, Sister Monica?
Yeah.
Those are your distinct opens and closes, right? So as opposed to the candle, you look at the candle, you can't tell without kind of hovering over it or seeing what that candle did in real time, right?
Right.
She put up a presentation of this before.
Here you see it clearly. You see it, so you already know if a candle opens up lower than the previous close on the previous candle, it's going to obviously be what? Red. Here you can clearly see distinctively. You have no issue about that's why this thing red. Look where it opened up at, right? Because the ladder rung is right there to show you where it opened up at, right? Yeah. So this is old school trading. They ain't lying. This is but no, this is the proper way that Wall Street trades. This is how Wall Street trades down in the pit, right?
Oh yeah, because
we got all that video with candles, right? We got them Glade candles.
No, remember that video of the British dudes that was talking about using the bar tradings that you was showing one night?
Yep.
That you got, I think you got them from Contrarian. You got them from
in one of those training forums.
Yeah, this is how Contrarian trades. I just asked him where he was at.
Yeah, that's facts. And we'll turn your attention right here. Okay, that was January. This is February, right? And remember when we was looking at these individual, now we're looking at this on a monthly. This is that cyclical nature we was talking about. And what you see in this month of February is, what I'm saying? We opened up here, we moved down, and we have this manipulation to the upside, right? That came right up to this yearly open price, which is an open, high, low, and close of the year. This is the open price of the year. So it came right up. You see how it hit that open price? Do you see how? Y'all see that, right? So
yes.
yeah, so we went and hit that, and then what these blue things, which I want you to look at, I want you to see that as liquidity. I want you to see that as liquidity, resting stop losses. So we came up here and tapped these stop losses, right? And what are the next stop losses we got on this candle down here? Right here. And we got some right here. And what happens? We trade down through both of those. Trade straight down through both of those. And then we look to find some support here, right? And this is where price is supported. So let me take these off real quick, and then we're gonna move to these regular Japanese candlesticks.
Don't put them sticks in there. Don't put them sticks on there. Don't put them sticks on there. Every time, take out the training wheel. Take out the training wheel. Put them rungs back up there.
You don't have to.
Now you go to that's now. Put
No,
them up
we
there.
good.
Now you can see
I'm
it with the
gonna show
candlestick. What this is good because the ladder rungs are so great for OHLC. Right? Remember that time? Like literally about the last 3 months, I've been going hard on the OHLC doing the training sessions.
Yes.
Like, look at the OHLC. Look at the OHLC. Well, that's what I'm trying to condition you to see. You have to be able to see exactly how the markets are kind of setting up, right? Or what they're really doing, right? Because with the ladder rungs pattern that you have up here now, you can see that pattern there so defined. You can see clearly that it hit resistance after it tested resistance again and failed, right? And then it just kind of downtrended back down to where the bottom or the whale or the pivot point, the fry pan bottom or the point where it kind of bounced at before. It's back down there again, right? In terms of this pattern here, of course, if I was to annotate this, let me just do this for a hot second over. I don't mean to slow your chart up here.
Oh yeah, do your thing.
But literally right here, right?
Mm-hmm.
Clearly you see what's going on there. And then clearly you see that here's where it failed, right? So people, that's a cup of handle building. But guess what? It failed, right? Cup of handles do fail sometimes too. It's not a 99 or 100% sure pattern in that perspective. This is on the monthly, so you can imagine what it looks like on small time frames. But clearly here, you see it's doing exactly that. It's marching all the way back down to that pivot point again. So again, if we use the sine wave theory, right? You see what's going on there?
Yep.
This waters of noon. I'm just noon, right? Noon. Right? I hope you saying noon. So if it failed here, you know what it's gonna be. All these guys over here gonna be next up for lunch, right?
Exactly. That's what that rest of liquidity at.
Yep.
And I think that is the issue with a lot of traders because we're so bent on our microwave culture and wanting everything right now. Most traders operate on the small time frames. They're not about to go to the weekly and do this. They're not about to start top-down analysis for real. They don't have that discipline.
I can see Sway's technical in here too.
Yep. Yep. I was saying mirror. It's a mirror value there.
There.
Clearly within that, and keep in mind, and he's because he's a 1 minute trade. He like 1 minute charts, right? We all came out of 1 minute charts. I was over Marquis, over Brandon. Y'all know this old school Discord. 5 minutes. No, that's for them option traders. We trade momentum stock. We trade strictly 1 minute, and then we can have a 5 minute up on the side just to kind of give a perspective. But we trade off that 1 minute, and some of us even crazy. Right? Yeah, I was crazy. I used to trade off the tick chart, 133 tick chart. That was to be my itch, right? I've been there like the eyes like in the matrix, like I'm getting downloaded. Like they're like, how do you trade that, bro? Like,
too,
I want to see every move.
Using these higher time frames will make it a lot easier for you trading those lower time frames. Once you find that confluence and those places match up, then you really get some real explosive moves. Okay, so
Marquise, I got a question.
Go on.
I want to cut you off.
Marquise.
Oh, go ahead, fam.
Yeah, my question is, when you find your move on your weekly and your daily, do you hold it long term? Like, how are you traded to a particular level, or you're scalping, and how are you going about entering the market and as far as our level or taking profit?
Yeah. Well, to be honest, I haven't really done any really long-term trades on a weekly, in this way. The most I've traded maybe a weekly or maybe like this many of these candles. So, you know, we can,
because I know it takes a lot of patience, like you said,
so,
patience, and to hold it that long.
Yeah, real quick, I'll show you how they will be defined, you know, right here. Let's say
discount. Inverse discount.
These will be my targets. So,
yes, sir.
You know, let's say I went ahead. Let's say I was buying here, right? My first target would be right here. I had changed the color of my chart so it's black, but it should, you know, I had to make it. But this will be my first take profit, second take profit, third, fourth.
Okay, so you just trading to level, basically.
Yeah. It just really depends on, you know, like the pattern I'm trading. Let's say I was trading this swing point, you know, right here. So if I took a short right here, this is the optimal trade entry, as you know, defined by ICT, right? I would short here, and I would take my first profit, you know, here. I mean, realistically speaking, I would take my first profit at 20 pips. I mean, that's just realistically speaking. I usually break my trades up into 2 or 3 pieces, and I make sure I lock me in some profits just to make sure that I'm doing my job. And everything after that is just love. You know, I just kind of trail order blocks, probably like on the hourly or the 4 hourly. I would trail that down. But, you know, I would take my, I would short here.
Do you get stopped out on often, or it's pretty smooth flowing where it doesn't wick you out? As far as,
I mean, as long as you got your market structure, you got everything right, you know, most of the time I'm gonna at least get my first take profit. But you know, there are times where you know, the market goes against you and, you know, you don't get those other take profits. But most of the time for me, I usually get my first take profit, which is at 20 pips. You know, so same thing I do right here on the weekly, I can do this on a 1 minute, 5 minute chart. Same type of concept.
But like you said before, it's I don't know how you trade off the one. It's really different. I mean, I tried it when I just started, but it's extremely different. It's pointless. Like on the 1 minute, like you need some kind of higher time frame to get.
It's those time frames. I look at them as like tools. You know what I'm saying? And the 1 minute is like that scope for your sniper rifle. You know what I'm saying?
Exactly. That makes
super
sense.
Zoomed in scope to, you know, when you got set it up just right.
Yeah. But just to look at a minute and 5 minute and 15, that's nuts, man. Like,
yeah, I would use like the minute or the 5 minute to catch that manipulation, you know, to catch that quick change in momentum just to kind of verify. But most of the time I'm trading off of 4 hour daily, you know, and I'm framing it off of a monthly and a weekly.
Yeah, I don't want to go higher than the daily personally, because I'm trying to do intraday. So I don't really care. Like I said, the market, like African, right? That's what you go by? Okay.
African import or AE is fine either way.
Pardon?
Either AE or African import, either way.
I'll call you A. Like what you was talking about, where with the daily and the monthly, I missed my point I was gonna say, but yeah, go ahead, Marquis.
Yeah, no problem. But you see how these lined up perfectly with these take profits, you know?
Yeah.
That's because this is, you know, these are certain Fibonacci levels.
Yeah, I see.
What you say, over Chris? What you say?
Yeah, that optimal trade entry.
Oh yeah. And we can even say, you know, the golden ratio, you know, the 618. This is
618 retracement.
Yeah, but that's a T-shirt. I keep telling people about 618 for years, and because you know, back in the day, you know, especially when we came out of the Discord, 618 was something that like Lord, maybe Connor, and Cali Rod, them type, you know, or maybe Mag, a bad scientist, right? They definitely, you know, was big proponents of that. Even Mr. Lord a lot. And they're doing that with options trading too, which is crazy sometimes too, right? And I'm like, guys, you know, but that's what you know, you got weekly contracts, whatever. But 618 is definitely the ratio for us.
It's like a psychological level, man. It just always get there, man. It's just amazing.
It's just it's magical, man. It's nature. That's the pattern of creation. That's just how we think. That's just It's in our DNA, literally.
and those same retracement, right? It match up a lot of times. It matches up with structure, you know.
Oh yeah, exactly. Like you know,
like
right here, like we
plugged
said
into
with
the
this
formula. Go ahead.
You know, like we said with these levels. I mean, you know, again, the reason why I'm taking the field from the top because this liquidity got taken out. You know, so that's what I wait for that manipulate. A lot of people they don't have the discipline to be patient and wait for the manipulation. They gonna FOMO. It happens to the best of us. And our job is to create trading systems that disconnect that emotion that we tend to operate by protecting us from ourselves, by creating systems that have, you know, that are set before the trade. Because once we get into the trade, our emotions will change. And emotions are temporary, but the decisions you make based on them are forever.
It's like Willie Beeman on All About, what was that movie he played? When he get throw up every time when he get ready to call a play. What was that movie? Well, Jamie Foxx, he go out there the quarterback and he can throw up.
Oh, Any Given Sunday? What was that?
Yeah, he threw up before he get his emotions get the best of him. And I know traders like that. Seriously, well, I know traders just like that. It's everything solid before they get in that trade. When they get in that trade, palms sweaty. It's like Eminem. What that rap song? Y'all sweaty. Look,
lose yourself.
Yeah. This is why it's important when you do formulate a strategy and you get comfortable and learn how to trade. That's just one factor. You still got to get you hit that buy button. It's game on, right? It's game on. It's a whole different perspective now because just like he's speaking about terms of manipulation is the number one cause why a lot of traders lose money because a lot of these institutions know people dealing with what under the PDT rule. And we just stopped them out. They only got so many day trades out the week. They ain't trading with $25,000 account. They finna get tripped up or a cash account. They finna get tripped up. And they just eating their lunch. They see the stop losses already set on level 2, right? Or level 3s. They sitting there watching them, right? Placing them. Because they think, okay, we finna make a run. I'm not gonna worry about getting stopped out. And they get stopped out. Right? That's just more money that these banks are collecting that perspective. And they're moving on to the next level. They move to the next level. From block to block to block, they just raiding a lot of these stop losses, stuff like that. So very important that you focus on discipline. Once you've been able to kind of again compartmentalize your chart. You know, I use that a lot, that terminology of using the fibs. If you just got support resistance lines up there, channel bands, like Brother Sway, you trading the ascending and descending triangles. Again, it's a given. Once you start to see that pattern unfolding, you have to understand your threshold. I spoke about that earlier. You got to know what your threshold is. If it's 20%, 30%, whatever, and then if you do have any leeway within that, then you trade that strictly by you sitting there watching it too in real time. You can't get up and walk away, right? Because they will run your stops, you know, and get you caught up if you're not paying attention.
Oh, I'm just over here looking at another little optimal trade entry real quick. That would have been a nice zone that I would buy into. But speaking of that psychology that involves, in a sense, having to do the opposite of what everyone else do, doing the opposite of even what your mind, you know, would initially tell you, you know, and sometimes I do things like that just to detach me from the reality that everybody else be on, right? Case in point, one of the things I do, you know, before I do it real quick, we're gonna talk about an order block real quick. Now, the order blocks, like I said, you have to take out a previous, you know, high time frame, low or high, and then we want to find some type of support or strong resistance that the institutions have sponsored, and they move price rapidly away from it. And we're going to go with the idea that when price returns to that level, or at least to, you know, a Fibonacci version of that level, they're going to defend that level. So remember, what we're going to say is the last, you know, major red candle before the up move. That's the bullish order block, right? Mm-hmm. Yep. Right. Oh, what'd you say, Oba?
Oh, you right. Go ahead.
Yeah, definitely. And when we look at these, like right here, this is one of interest right here. You know, this can also, you know, is also an order block here, but I'm more interested in this one because it really has a lot of meat on it, right? Mm-hmm. So we have that open, we got that high, we got that low, and we got that close. And we don't really got that much of a wick either. You know, that's just straight body. You know? So when we creating these order blocks, right now, bullish order block, which is that last big red candle before a big green move, right? And then a return, many times, a return back to the optimal trade entry or the 618 and support being found there. And how we mark it out, we market everything from the top of the candle, the top of the wick, down to the midpoint of the bar is the most, is pretty much what the order block is. If it goes below that, it becomes less reliable. But, you know, relatively, you know, generally speaking, we want to look at the equilibrium of that candle all the way to the top of that wick. And the most sensitive part being the top of that wick and the open price.
Right.
So let's go ahead and draw this one out. We're gonna go right here to the open price. We on the weekly. I like to color code my weeklies as green. First, let me go ahead and draw out this Fibonacci so I can make sure that I got a good 50 level. Or maybe I've been doing this too. When I double tap it, it kind of brings up, oh, that's the equilibrium of that swing. Okay, hold on. So I'm gonna take this fib and draw it from the top to right here. And we know we got this equilibrium right here. Okay. So we're gonna take from the top of that candle here and down to that equilibrium. And you know, I kind of draw this line over. So right here. Bam. And what we can see when it kind of, you see it returns to this price and supports it. I mean, we dip a little low in here, but you know, it's the way that wick was bought up, we saw it was support there. See that was just bought straight up. And then, you know, that little manipulation, you see that little manipulation come to that open, that equilibrium level, and we taking off to the sky from there. So this is an example of a bullish order block. Remember, it is when, you know what I'm saying, high time frame candle, which is the month. This is the month of October, when a top or bottom gets taken out. The bottom got taken out. You see this manipulation here? Open it, ran it all the way down here to take these people out. Look at these stop losses here. These players, they hurt. They hurt. They thought they just got in on it. They got hurt. They got knocked out ASAP. How many times y'all been that person? I got in, you good, you thinking I got in? And they just come and just snatch a soul real quick and then take off. That ain't that the most frustrating thing for a trader is to know you know you got in right. You know you had the direction right. You get in, you get taken out, and then the price goes where you want it to go. Ain't it the most frustrating thing in the world?
That happens at least a minimum of 70% every day, intraday for intraday traders.
Yeah.
Yeah, it does.
And it's just fascinating that you know it's going to happen, especially early, because we talked about this before. What's the rush hour hours of trading the market? That rush hour period is when most traders get churned up. And once they out of day trades, whatever, they got to sit with their hands like this here, and all the big money start coming in and just start eating.
Yeah, and we're gonna see that when we go down. You know, we're breaking out this high time frame level. We're gonna get there. We're gonna show y'all how they get ate up the same way. Yeah. When we talk, price is cyclical. It's cyclical. A lot of people not understanding the once you understand the manipulation. So you see the manipulation here, taking out these levels, take out these stop losses, right? And we have this, you know, they bought it up here. They made a move down. Well, look, if I take my fib from here to here, what you think about to happen? If I take my Fibonacci from the bottom of this manipulation to the top of this candle right here, what you think the retracement gonna be?
At least quarter that move, about quarter.
And if you want to be, you know, precise, you can just use the body of that high time frame candle, and we right there into the 618. So they came, manipulated these traders out, brought price up. The candle closed. They did a little manipulation to the top to take out everybody who maybe thought it was going short here real quick. You see the traders resting right here on the monthly, took them out real quick, then retraced back to the 618, and then took it where they needed to go. where they formed a block of orders. And this whole, they done consolidated here, and they've traded and accumulated orders. Then they take the price up, take out some liquidity, take out some trades, come back down, support that level again, do the same, rinse and repeat. Rinse and repeat.
Got him.
So we can also see, like, let's take this out real quick, right? Now, remember, this is where other support at. So based on what I just said about the bullish order block, in this area, who can identify the next bullish order block?
Right here in this area?
In this area. What did I say the bullish order block was?
When the open and the close is close, right?
Well, it's the last red candle. Let me switch up these candles.
Last down
I
candle.
think that's what it just doing. Hold up.
No, you can put it back.
That's okay.
No, put it back.
The last red candle, remember, this is the last red candle. And why is it a red candle right here? What did happen? They came and they took out the low from right here. They came down and these red candles formed, and it's the last red candle, right? The last red candle before a big move higher with green candles.
Mm-hmm.
And one other thing that qualifies, well, a lot of the people get wrong with order blocks is you want to take out a previous level of liquidity first, especially on a higher time frame.
Yeah, whether it's a high or a low.
Exactly. So based on that, where do you see that bullish order block at?
Oh, last red candle. Well, you just did it. You just showed it.
I showed a bid. I showed a bid. Yeah. So it would be this candle here. And remember, we have the open, we have the high, the low, and the close. And remember, we said with the order block, where do we visually represent the order block at? We said from what point to what point do I draw this order block out at?
Well, what do you mean? You're talking about in dollars? Or are you talking about the
visually?
top?
If I make this box, where do I start the line and where I end the line at? What points am I using? Remember what the little red time? What we've been talking about?
Top of the candle, right there.
Open, high, low, and close. I want y'all to say that. Open,
high, low, and close.
Hey, yes. Open, high, low, and close.
OHLC, baby. What set you from OHLC? OHLC.
Facts.
Okay, I see now.
So we at the high. From the high.
Yep. To the low
to
close.
The midpoint of that open and high.
That's right, halfway, right?
Yeah. So and that's of the body. So we could say our midpoint is like right here. I can pull the fibs out, but we just don't. We ain't gonna do all that real quick. So all right, but when you actually doing this, you should. Matter of fact, I'm gonna do it.
You fired. I still don't know how to use those.
Oh yeah, we can. How I use it, there's a lot of different ways to use Fibonacci. For me, you can use it from the bottom to the top. That's how I like to use it, from a bottom level to a top level, or you can use it from the bottom. From the top to the bottom. Of swings. So right here, I'm just using it to visually show equilibrium. So. I can't really even see it. So it's like right here. It's like right here. But we're gonna draw that because when you trade, man, you gotta be precise. Hey, it's petty, but hey, it make money.
Take it.
All right, we're gonna draw that out just so we got that reference point. And yeah, from right there to right there. That would pretty much be that weekly bullish order block.
So basically, all right, so going forward, you got the order block that price is already, it hit it at the end of the day, I suspect, Friday.
Yeah.
The order block.
It sure did.
And so at this point, because it hit in your order block, it's the price is probably gonna, so since we're saying that it does the same thing over and over. It's just one big pattern. 9 out of 10 that price is possibly could be back on another uptrend. Is that what we're saying?
Yeah, that's correct. We definitely can possibly, this can be a level of support here. We definitely, what we would do, which we're going to do, we have to, move down into smaller time frames to get some confirmation of some bullishness, the same type of bullish patterns being formed and bullish order blocks being formed on a smaller time frame.
Okay, so do that.
But before we do that, we also going to look at a bearish order block example. Another bearish order block example right here. We got the month of April. We took out the highs of the month of April up here. And if we had the bullish order block being the last red candle before a big green move, what would be the bearish order block?
A green candle before red.
Yep. So which one would it be? Which one?
Right here.
Huh? Tell me when to stop.
Right there.
Right there. There you go.
Okay, so, Mo.
Yes.
So, and what we drawing this out at?
I'm paying attention in class. We gonna go half. You stop this. I'm about to get this drama.
Remember, open,
right
high,
here.
low, and close. This is inverse because this is, So what we
going up? You're going up.
Up?
Yeah, halfway.
Halfway up?
Wait a minute. No. What you doing? Down to up.
Down? Right here?
Yep, that one. And halfway, right?
All right. So yeah, exactly. We were doing the opposite. So we're gonna take it from this will be the bottom wick, it's the low.
Yep.
We're gonna take it from here and we're gonna bring it to that's the open price right there.
Yep.
But we're gonna take about halfway between there.
Between that one and that one. Yep, right there.
And this time, what I like to do, instead of making it primarily green with white outline, we're gonna make it white with green outline, just to kind of show that this is something that's bearish, right? And we see what happened right here. We came, we traded through it, we went down here, we opened up, we got some manipulation right into it,
and rolled out,
and we straight off a cliff.
Nice.
Off a cliff.
What is this? Oh, this Forex. I was about to say, boy, did
off
you
a cliff
on that?
And let's see if we took.
You can do equities too. You can do it in stocks too.
If we took from the top of that order block to the bottom right there, we'll see we also retrace into the 618 right here as well. So you have to understand the symmetry of the market. All right, so that was just the example, showing that bearish order block and how seeing these levels on a high time frame can really set you up for some real moves. Because what you think happened here on a low time frame? If you seen this right here coming, when we broke into here, and you were able to, to be ready for this to happen, imagine what you could have did on a short high. Imagine how you could have ate off this for the whole week. Imagine if you had a couple parts and you just bought it and took your profits, after you broke, the liquidity here, and you just let the rest ride and trailed it. So
excuse me.
Before we move on to a lower time frame and look at some more, we have any questions real quick? Any questions?
I'm tracking.
You gonna plug in the fair value, I guess next over?
The fair value gaps?
Yeah.
I honestly I use them, but I don't necessarily use them. It's just like, I don't know, I automatically see them. So yeah. I don't, that's, everybody have concepts that they gravitate to. I never seen it necessary in my trade to delineate them.
I got you.
You know what I'm saying? That's that's one of the aspects I don't necessarily use. But one thing I do use, let me show y'all. All right, so remember we talked about how the bullish is the last red candle and the bearish is the last green candle. Yeah. This is one of my hacks that I did that really helps my psychology and really helped me, right? Boom. What do y'all notice about those candles?
What do you mean?
You know how they got pictures and be like, which one of these is out of place?
One of them don't look like
These
you.
candles look perfectly normal to you? They look perfectly normal?
That's for
Oh, somebody. I'm waiting for somebody to get. I know we got some bright, obas and yobas in here.
Wait a minute. I'm talking about Hangman.
Tell them 3 red candles. That's some
That's them black
a lot of money right there.
First rule of thumb: always look at the very large candles first.
Yeah.
Because in doing
that big green one, and then those 3 big red ones, that ain't retail. That's not retail.
This chart.
I ain't really hear nobody get it yet. So I'm gonna tell you.
No, don't tell us.
I will tell you.
I'm sorry. What was the
question? What is weird about these candles? What is out of place about these candles? It's something very out of place. Very, very odd, like completely opposite to what you know to be true in this world.
Got me.
Well, for me, again, as a little seasoned trader, if it depends on how I'm trading, especially if I'm trading. Let's say if I'm trading a momentum trade, right, and I'm directional bias with the money, right. If I'm directional bias with the money in this case, even if you look at these red ones right here, these 3 red candles run on reds over here. If I annotate, I'm gonna just hit the annotate for a hot second on your chart over. If I see these 3 red charts like this, candles like this here, and you see they are red, but they what? They're an incline, right? Right? They're red, but they're an incline.
Exactly.
That's weird. That is weird.
But we've seen this before, but we don't necessarily notice it because this is the importance of OHLC. OHLC really dictates how this anomaly is in terms of nominal value, as opposed to what you're seeing optical.
I say this, but you have right. What the truth of what's happening is I have my colors inverted on my candles. All my red candles are going up, and all my green candles are going down.
So, and that's why I make that assessment, because if I'm looking at this here and I see these three candles like here and they up,
that's how it don't look right.
It don't look right. But here's the deal.
That's a good trick.
That's really good, because at that point of where this right here will be, if it opened anywhere at that point or lower, then clearly, it would be a red candle, which would denote it would be, somewhere playing in this area here, as opposed to being up like this here, right?
Exactly.
So again, very, very good moment, good teaching moment there, over.
Yeah. And the thing is, right, the reason why I did this is to be able to see the order blocks better, for one, and then number 2, to kind of just disconnect myself from the psychology that everybody else got going on. Because it just, when how certain people hear certain things and it really click with them, like it just hit all the way home with them. And the one thing that hit home with me was hearing that 10%, 90% of traders lose 90% of their account in 90 days.
So you
know what I'm saying? So when I'm doing things, I need to be doing what the 90% is not doing. Literally, I would do the exact opposite. And this is one of the ways that I do that. Everybody looking at up candles going green, I'm looking at up candles looking red. So to me, honestly, I've disconnected myself from the psychology of a color code. I can look at red candles going up and it makes me no difference. Now, it took me a little bit to train myself to that, a couple of days to really get used to it. And I was tripping like, hold on, what the heck? I forget I done did it. But the reason why I do it, because now when we look at these swing points, we can easily see these order blocks. Easily. Those last green candles now represent the support, and the last red candles represent the resistance. Everywhere we go, right here, this is resistance. We trade down, we come back up to that midpoint, resistance. You see what I'm saying? As we going up, we go and trade, that's support. We go up, we go and trade, that's support. So it's one of the little tricks and hacks I came up with to help me see these order blocks on the fly a lot easier, a lot better.
That's real clever, man.
Even smart keys.
Clever. I was gonna ask you where you learned that from, but you said you picked it up.
Yeah,
That's really
yeah, I would just, I think it was kind of a mistake. I think I had to mess around and I was setting up, one of my indicators with that colors my candles, and I think I had mixed up, and I had it. I'm looking like, what the heck?
So what it does,
like,
it shows you when price gonna reverse, and that's the hardest thing for traders. You think it's gonna keep buying, and prices go the opposite way. So it really shows you when that candle close reverse.
Exactly. So you can do things right here, like this is an order block here, but this is also an order block too. So I'm gonna go from the bottom or the body of this candle, Fibonacci, up to the top of that candle right there. Like actually to the previous candle, my bad, right here to the top of the body of that previous candle. And you'll see we retrace to equilibrium. So for me, everything in this zone is kind of a buy. This is like a buy zone for me. Once we get up in here, we're at, this is how you define discount and premium. Once we get up in this, we're in a discount, and vice versa. And you'll start to really, once you start looking at these open, high, low, and close, you start to see the symmetry. When you start testing, just go play with these levels. Break it. It ain't nothing wrong with getting there and messing up your chart. We all got ugly charts. Let's go and mess them up, play with them, mark them up, see things you don't never know what you might discover. But let's go ahead and go down to a smaller time frame so I can talk about one of the higher time frame strategies I use to find the weekly bias. So, yeah, we on daily. Oh, yeah, before we do that, I'm going to just introduce some other, hold on, how do I move this little thing right here, what we have? Okay, there we go. Yeah, just so y'all can see right here, these purple lines. How do I zoom in? Well, I can't zoom in.
Squeeze it.
Oh, okay. You see right here, like this is an indicator. I think it's pretty useful. Where is it at? This one right here. It basically lines out the open prices of each time frame. This is the yearly open. This is the monthly open. And as we go down, you'll see other prices. And to me, I like it. It makes it really nice and neat. Helps you see those levels support. These also act as support and resistance, especially when they line up with whole numbers, half numbers, order blocks. They act really, really good as support. Another indicator I like to use that I put in combination with this is the Poseidon, swing high, swing low. So what this indicator basically does, it looks at when previous level highs and lows are taken out, and it gives you a buy or sell entry. Gives you a buy or sell. So like right here, we see before price traded down into here, we see it will create a horizontal line that shows you once it trades down under that level, we've kind of taken out that liquidity, and now you can look on a lower time frame to kind of get short. Same thing on the high. Once we take out this, now you're looking for maybe a high time frame order block, i.e. right here, to get short on. Same thing. Once we got to that high level, we taking out these levels, we came here, it works really well to show those extremes. Like I don't necessarily like to take a lot of trades in these small, I'm kind of waiting for price to get to that external liquidity. Either I'm trading retracements or I'm trying to catch that manipulation to the upside or to the downside where that liquidity is resting. If I'm trading consolidation in ranges, I have a different strategy. I use more of those retracements. Like this right here, this is a consolidation range. If you was looking on the higher time frame, you'll see we don't enter, a consolidation range. In this type of situation, you can do these retracements all day to either side. You just kind of have to wait for them to get to one, or you can do this kind of high-low. Right now, I have it based on a 48-day, but if I bring it like to a 24 days, it'll also show these signals for down and up on these candles as well. But I more have it on a high time frame. While I'm on this, one more thing, another thing that's out of place, this yellow candle right here.
I was just about to ask you that, brother. I was like, what does that represent?
So let me kind of move this, right. This is something that have to do with options. This is IV rank. This represents the implied volatility going from up to down for options, right? And right here, this is basically similar to like a tick chart in a way. and it basically shows when they institutional money moves the market, when they move price very fast in a short amount of time and create a wick. It kind of shows.
If I could add to it, it's kind of like quadruple witching.
Yeah.
A lot of people who might not be familiar with quadruple witching, when you ever watch a quadruple witching day in the market, when everything just kind of just goes, it depends on where it is, whatever it is, set the rotation. That's what's happening in a lot of ways too. You will see that kind of movement.
Yep, exactly, and we'll see how this indicator too really helps once we get down to
Chris, your Goldman Sachs.
Huh?
Your Goldman Sachs play.
What about it?
That's what it did. Went up and down. Went up and right back down.
Yeah. It was nothing I could do about that. If I didn't sell immediately, nothing I could do. Because they killed their earnings. They killed everything on their earnings. If it was just a regular day and there wasn't nothing going on, I would have made a good bag that day. Maybe $600-700. I would have made that easily. I didn't account for all of that. So, I gotta do more due diligence on my side for that. So I played that perfect outside of, the news and all of that. So they killed their earnings. I was supposed to make a bag. that's facts. Ain't that, hey, I got.
Was this a shorter time frame, Marquise?
Yeah. This is, we over here right now. We looking on a daily.
You
gotta take the whole. You gotta take. Sometimes I forget. You gotta take the economy, the macro into account too when you trading as well. So there might be, jobs data, consumer price index, PPI, that type of stuff that you got to take in account of when you're doing trades too. It's not all about, if the company did so well, I'm saying, that it's supposed to go up. I mean, logical and common sense wise, you would think that, but there's other external factors that go into that as well. And, obviously I didn't consider that, because they beat the hell out of their earnings. But it doesn't matter if, the economy is not performing well, and then, your Fed chair he lying about inflation and all this other stuff. You don't account for that. So when you do get that full picture, what I'm saying, you understand like why, a stock would go down even though it performed well due to its own business matters. So, you have to take the economic data into account as well for that.
And therein lies the importance of understanding even how market value, when I say market value, is dictated when you have a Keynesian side of thought and an Austrian side of thought. Austrian is more free market. It really is more connected with fundamentals, balance sheets, reality, organic growth, stuff like that. When it's a Keynesian marketplace, when it's manipulated, and there's a lot of different weighted issues on the market that are being propped up or held up by, again, obvious manipulation in terms of the Fed's buying bonds. Well, even in that space, you're dealing with Goldman Sachs there in the financial sector, right? Mm-hmm. The financial sector at that point had already made their run into earnings, right? Yeah. Because they got off probation. Obviously, the Fed released them in December. They beat the bonds back down, right? And so they just start, doing a lot of brokerage deals. Basically, because Goldman Sachs is more of an investment house than it is a bank, a real true bank, right? Right. So they actually run into earnings too. I was just looking at the chart when y'all spoke about it. So 3 months. So you think about the end of March, right? End of March into where we're at now, June, July. It had basically went from 310 all the way up to like what 390, right? Yeah. And it kind of got outside the linear regression band, came down, hit the bottom, ran back up, right into earnings. As you probably saw it like I did over Chris. You saw it make a U-shaped bottom, and then it just stalled out there. It failed to break a new high off that double top off the previous move, and then from there it just rolled over because at that point the XLF was already kind of overweighted. It was a defensive play when tech was kind of slipping the bed, wet in the bed. As soon as tech started getting, money, what did everybody do? They ran to tech, Apple, Amazon, those types. And they just kind of pulled the plug a little bit on some of the financials. So And I've seen that happen so many times with the banks when they open up the earnings season, because the banks always lead the earnings season, like from cycle to cycle. The first thing you will see if they're already not in a, you know, I don't know, money pit moment when they're kind of struggling, they'll get the benefit of that. Wall Street's okay, yeah, we need the banks to, to work. In this case, it's like, okay, yeah, the banks ran already in the earnings. They was like, okay, yeah, and we got inflation on the table, and the Fed still talking about keeping rates low. That means banks still can't really make any true money because they can't tax people on interest rate. They just used it as a great proxy to take profit. That's all they did. And unfortunate too, because let's say had you hedged it, yeah, that's always a strategy, but it's a part, you learn it as you go. You could have hedged it, and played it from that perspective, right? Or play the condor, play the butterfly, play a box somewhat, like Brother Mark you speaking about, even with the order block, and just kind of trade it within that, but good lesson, just markets are nutty when everything is disconnected from reality. And right now markets are still in a Keynesian marketplace. So it's being propped up by the government, the feds, quote unquote, until they get out the way. And then we can get back to some real, quote unquote, somewhat real trading or investing trading.
Yeah, that's 100. So Mo, when we was talking about finding those lower time frame order blocks as well. So we see a lower time order block right here, right? You can map it out right here. We can use this one or this one, but we're just gonna be more interested, more meat on it, and we're gonna color code this one red because I like my dailies to be color coded red. So right now we see, some overlapping of these daily order blocks. You're seeing this confluence here. Even if I draw this one out as well, you see this confluence here. You got all this confluence right here. Plus, remember this Poseidon indicator that lets you know when the liquidity gets taken out is giving you up signals all through here. So you just kind of sitting waiting for some support to form, right? And this is where that support formed. You got the weekly support lining up with the daily support. Once we go down to the 4 hour, all those, you're going to see the same type of thing, this confluence in these areas. But one thing I want you to also look at is this right here. It's a bearish order block, right?
Mm-hmm.
Matter of fact, like, this is the more, dominant one right here. This bearish order block right here. And as we trade up and we trade through it, one thing I want y'all to understand is when I'm using order blocks to define support and resistance. And what's one thing about former resistance when price trades past it? What happens to it?
It becomes your new support.
It becomes your new support. So I'm gonna change this. I like it, and we call those breakers, right? Because like it broke through an order block, and now that order block is now becoming support. So we're gonna color code that blue, with that red background, because we know it was a bearish order block, but it became blue and now became support. Another thing you see around that level, this is some institutional activity. And we also see right here another daily order block as well. These things lining up. Got the daily order block there. We got liquidity resting above here. We can start mapping out some of this stuff. Even before any of this happened, we could have been mapping out all this. Look at that. How these candles, look how equal these candles are. That looks artificial, right? They don't really look natural. That looks artificial. It looks like some funds done, was every time we got to that level, they were just pushing it down.
Mm-hmm.
So,
rejecting. Is rejecting those prices.
Yeah. And let this right here also Even when we draw out this liquidity, we don't really have to use the wicks. We can just use the bodies as well. Drawing this out because these are targets what price want to reach at. This is liquidity that needs to be taken out. You can't just let these people just run away with the bag. You know what I'm saying?
Basically, like if it's at $5, they said they stop loss to $9, and the price it goes up to. So basically, it hits the 9 and then drop. That's what you mean by taking that price out.
Yeah, they're gonna trade up into this level,
up until they get to it, and then their stop losses gonna go off. So all of those trades are gone, and then they bring it down a little bit and then go back up. That's what you mean?
Yep, those are buy orders.
Oh.
And this stop loss, what do you have to do when you short? You gotta buy it back. But if it don't go your way, you're gonna have to buy it back up here.
Oh,
or wherever you got your stop loss at. So for a person who I say it like this, for a person who wants to buy down here and find someone who's willing to buy it from them at a higher price, even if they're losing money, that's what stop losses provide up here. So they taking it to here. This is straight liquidity. They might use the liquidity to get in the trade, to nullify it, or they might use the liquidity to catapult them into profits. They come down here and keep going, and we can look at, again, what is this? This is another bearish order block. And what happens to that previous resistance?
Become support.
It becomes support. And look how it's pivoting right up in there. Look how right on top of these equal lows as well. Look at the symmetry. Right? Look at the symmetry. So if you're trading, you have these levels already kind of, delineated, and you're seeing these things happen. That's why I say I can trail my position behind these order blocks for real. Wait for them to leave that level, have my stop loss here. As it moves past this level and forms a new consolidation, I can move my stop loss here. As it go here, then forms a new consolidation, I move my stop loss here. As it go here, form a new consolidation, I move my stop loss here, and then I might get taken out here. If I'm being too aggressive, or I might wait for it to move a little bit further. Just that's one of the things you got to kind of, me myself, I'm still mastering how to, give it room to trail. And still not psychologically deal with I'm missing out on all these profits, if it does come back to this level. But that's why when you lock in that money already, and if you're breaking your trade into 4 pieces, you can take profits gradually as it's going up, so you can psychologically, be healthy enough to stay in this trade because you already paid. So now you just letting your profits ride, at that point. So it's really about just understanding what the institutions are doing around these levels. Look at this take profit. Where you see these yellow candles, what are they doing? Price was going higher, they pushing it lower. Yeah, they're pushing lower, taking traders out. These people were short here, they're gonna take them out before they short, but then they're gonna come back for everybody else who thought they was gonna hop on, they would come back and get all them. And you see this, a lot of this manipulation. Look over here near this order block where you see here some institutional manipulation right here. It was going down. People piled in, thought we was going short. It's going up so much. We're going to get short. Market going down. They pushed them up, finessed all of them, took them out of their stop losses, took all of them out. Then when they ready, dropped the market down. Again, pushed it up again, took anybody else who, got high. Then they pushed the market down. And then what we have here, we have bearish order blocks here. Got bearish daily order blocks as well. Yep. Well, we have that. We got a weekly order block, bearish order block, layered on a daily bearish order block. And what happens to price here? They push price down, and then what happens? Pulls it back up right into that order block. And then we drop. We saw that happen on the weekly, but if we was trading daily, we could even saw it on the daily. You know what I'm saying? And the way these lines right here, that's also mapped out, this kind of represents that same Fibonacci premium discount concept up here. This was at a premium. You know, this is letting you know, this is a short territory, and this is a smaller version of it right here. They in short territory right here. Down here, they're in buy territory. So, on the smaller time frames, you can be scalping this little stuff. You see, we're getting these up. After we take out this liquidity, we're going up. Take out that liquidity, we're going up, or you can be trading it to the downside. Oh, go ahead.
Yeah, the question was where you had the order block. So anytime when price get inside our weaker order block, that's when you add orders in for the sell.
Yeah, I would short like right here.
Yeah, like
I would be anticipating price to move back up to this level, and this will be my resistance. And so this is where I would enter the trade. Literally, once it hits into this box, I can even go on a smaller time frame, which we can do now, and you can see the same thing happen. Go on a 4 hour. And this one, we're going to start seeing other things like how that's standard deviation. If people familiar with that. Same thing here. What is this? This is this right here is a 4 hour order block right here. It's a yellow candle because it's an institutional move, but this is, the same candle nonetheless. So we can take this here, which just lines up perfectly with that that daily. So this is just giving you confirmation. You're seeing the symmetry on multiple levels. I like to color code my 4 hours orange. Seeing the symmetry on multiple levels. And what price did. That's why I love the fractal nature of price. We can go break it all the way down. And remember I told you this Poseidon, you can kind of be trading, these little levels, But we see what, price came back up. And what happened was this is institutional support. Institutional resistance. Price came here, back, it pushed the price up, then shorted the brakes off.
So with that institutional pullback, is that through the actual Poseidon indicator?
No, that's this indicator right here. This one right here. Let me see if I can move this. Hold on.
Chris, mute.
Excuse me. Sorry.
Yeah, I'm trying to grip on to that level so I can move it down so y'all can see it better. This is actually my secondary setup too. I have this way neater on my other computer. Oh, I don't know what I just did. I done combined some stuff together, but I moved that to the bottom. Okay. So I need to move this one down as well. This is also just these are daily. This is the daily time frame down here in the indicator. So I can also see these order blocks from this right here on whatever time frame I'm on, as well. But let me move that out of the way. Okay, this is it right here. So it's basically showing where the direction of manipulation is going to. So right here, this represents a wick that this moved really within a certain amount of time, it moved a certain amount. That's why it's highlighting it. So they basically they pushed it up and they shorted this down. They were supporting this level, suckering people in, and then they shorted the brakes off of this right here, and then continued to short it, bringing it down. So that indicator is called. Oh, actually, it's on the thing. Hold on. This right here. We combine the indicators too. It actually got multiple ones. You can't see what this is doing because it's on a small time frame we're gonna see. But it's right here, wick sentiment and stop hunts. So it's telling you like they built the indicator around stop hunts.
Question.
Wick sentiment and stop hunts. One of the most useful indicators I don't find on TradingView that at least shows me that manipulation, because that's what I'll be looking for.
What's it called?
Huh?
What did you just say?
The indicator is called wick sentiment and stop hunts.
Oh,
You know.
out here.
Yep. And okay, yeah. So this is just showing y'all on a daily level and how, you know, and look, I don't really even have a lot of stuff going on with my chart. I got like, you know, little stuff, but for the most part, it's just these boxes.
I have a question for you. So
what's good, fam?
Yeah. So as far as you entering the market, right? So do you have a specific time after price got inside an order block? How would you go about executing?
Well, I would execute it, you know, based on, so once we go into a smaller time frame, we're gonna see how I have the different. I trade a lot of forex. Mostly, I trade forex, as you can see while we're looking at euro dollar.
Yeah.
Which we can still see some of the same things, like with the SPX 500, which represents the SPY. You can still see that London, Asian, Euro session. So I also use that concept. I guarantee you this is happening during a certain session. So I would look to see that I would see what this session will be playing out, and I would wait for that another session to open up and give me that manipulation here. And I also see is right here at one standard deviation. So I just see I see the institutional support. I see a lot of confluence. I would literally shorted this thing right here. I would either shorted this thing right here, but if I missed it, I would have just waited. I would have got in probably when this order block right here, once it traded down here and then came back to the midpoint right here, which I can map out. It's a 4-hour order block. And we can map out that open price as well. So once price traded above that, then traded back down.
So that's the next following day, right? If you missed it, you talk about when it wicks, you wait the next following day.
Nah, not even. I mean, it just not necessarily the next.
Because it's a 4-hour time frame. That's what I'm asking.
Yeah, no, I think this is the next day. Let me see. This was at
it's a 4-hour
day. And that's at 21 hours. So you can call that the next day.
Okay.
You can call it the next day, but not necessarily. You know, I take the trades when the opportunity presents themselves, unless the structure is lining up for a move that I know that happens in a certain session in a certain way. You know. So let me go down right to time frame I use more to really show y'all.
Let me see the time frame you enter on. Let me see the details on it.
Oh yeah. Shoot, I enter on 5 minutes.
Let me see the 5 minutes.
But the 30-minute, I do a lot of operating on the 30-minute. And let me just show y'all something real quick. Let's stretch out a little bit. I'm gonna take off this Poseidon real quick so y'all can see this a little clearer. Okay, and you see the standard deviation. You see the oversold. Overbought, oversold. You know, by these lines, equilibrium at this point, right here. But I want y'all to look at the bottom two. You see, I have the days of the week. And we have these weekly lines. These represents weeks. We got Monday, Tuesday, Wednesday, Thursday, Friday, right? So we're gonna take that high time frame candle indicator we was looking at that was showing a monthly, right? And we're gonna go to a weekly. We're gonna change this to a week. All right. So what these represent, right? Basically, with these high time frame candles, I have the bodies taken out. Like it would, they usually show a body, whether it's green, red, but I took them out because I only want to see the wicks, right? I don't want to see the bodies. I want to see the manipulation. So depending on your high time frame, you know, bias and levels of support and resistance, and we didn't map it out, but let's just assume right here this was a level of support as well, some type of order block, some type of whole number, et cetera, right? This represents the weekly candle, right? We have, this is the open price. This blue line represents the low. And this right here is the close price right here. And this is the high. And we can see that same way over here, right? And even right here. So what I look for is for when on the week we open up on a Monday, right? Let's say we trade on a Monday, and I look for us to reach down and take out liquidity from Monday and go into, into these wicks. And I look for divergence with, let's say like the dollar, which I have, here in the background. Look for some type of divergence or confirmation to show a change in trend. If it was to drop down there, and that will let me know for the rest of the week, the price is probably going to rally. At least until Tuesday, price is going to push in one direction, because it just did that same concept we talked about at the beginning of the candle. We have the accumulation, we have the manipulation, and then the markup. And same thing, vice versa. We have, the distribution and markdown. So what we're really doing is seeing which, we're looking at how price trades into the next week and where it forms the liquidity at. Right here, we see we got some liquidity right here. So we would look for price on Monday to, sometimes it trades down and sometimes it does what it does, but we want to look for Tuesday to trade and take out that liquidity. Oh, hold on, let me put my charger in 1 second.
Oh my God.
Okay. Yeah, so we're gonna look for price to trade down into Tuesday and go into a discount. Like, remember, we have this grid here that's representing premium and a discount. So we want to look for price to kind of trade into this discount area and then expand. So this week, it didn't happen. On Monday, it did come down and touch this zone here. But on Tuesday, we didn't really get a trade down. We kind of, for this concept and this specific strategy, it's strict. If it doesn't happen, then, you missed it. It's wherever. So, we go to the next week, In this week, you kind of have the same thing, but you have price coming from the top. And on Monday, we kind of do a little trade here. On Tuesday, we never reached back up to the manipulation. So let's go to the next one. But on this day, we pretty much did on, even though it was kind of a tight range on this Monday, just like on that first week we looked at, we came down, our liquidity is, resting right here, and we have some liquidity resting up here, but we also have some liquidity resting right here too. So let's delineate that real quick. So on this Tuesday, we opened up, we got that manipulation we wanted. We got that accumulation, they accumulated right here. We got that manipulation up to take out some liquidity. Plus we done fill all 3 standard deviations. So now we have this short move that can take you short from Tuesday. It brought you all the way down to Wednesday. Now, this type of pattern can run all the way down to Friday, with Wednesday most of the time being a fair value gap type of situation. Like Ovo was talking about with the fair value gaps, kind of a return, kind of a return to that open price on Wednesday, this Wednesday open. Matter of fact, let me turn on this real quick. I have this indicator that shows the open for Asian session, those blue lines. See this blue line right here? You'll see, Wednesday, a return here. And if it shouldn't trade, back past that level. If it trade back past that level, you should be getting stopped out. You should have your trail, like right here, your trailing stop loss right here. You already done, took your first profits right, down here, and you move your stop loss, and you kind of trailing it like to probably like right here. So it would have came back, and eventually took you out. Or you could have took profits down here. but it traded back, to this level. So let's look at another week.
So basically, you enter at the bottom of your box. You enter at that price point or anywhere in between that box, and then you set stop losses above it up until the next resistance set.
Yeah, exactly. We kind of have the same thing, happening right here on this month. Like Monday, got the accumulation. Tuesday, it's kind of a fine line when it kind of went, you didn't get that real taking out the highs. So I might not even take this trade because, this range is tight. But let's go back and look at, some other weeks because, a few of the weeks it really didn't play out that way. And it can vary from asset to asset how it plays out. Okay, all right, let's look at this week right here. This is what we got. Remember what we got, all this high time frame order blocks and all these things. This was when these concepts work really, really well, because now we see that concept working with the order block levels we laid out. So we got right here on that Monday, got the accumulation. Tuesday comes up, Asian session, into New York session, London session. We got this accumulation up. Matter of fact, let me turn on this so we can see the different sessions. Bomb. So this basically delineates our Asian session, which most of the time is some type of accumulation, consolidation. You have London session, which oftentimes is manipulation. A lot of these, these type of situations where you see that it takes out New York's or Asians high or low is London session. And then you see New York a lot of times be that mark up or mark down that we experience when we get up in the markets and, that market kind of move. So we got right here, Monday comes up, got Asian session, nice consolidation, London session, we pull up, New York session, we kind of consolidate. Then we got Asian session on that Tuesday. And what happens? We're watching London session. When it gets right to the London session, we're watching the liquidity on both sides of these here. We're watching for one thing about these sessions, a lot of times one session likes to take out the high or low of the previous session, especially when it comes to Asian and New York. So what happened here with this Asian session? London took the liquidity out to the upside, and New York took the liquidity out to the downside. What happened here? London came and kind of tapped the bottom of their liquidity, but took it out to the upside. Even here, what happens in Asian session here? London comes and takes the liquidity to the upside and the downside. So you're going to see that a lot right here. Look, Asian liquidity taken out to the downside. New York takes it out to the upside. Asian right here. London right here, we had, kind of confluence of these order blocks. So, sometimes it doesn't, it did. It took it out at the top. It didn't take it out the bottom, but it took it out at the top, continued to New York. But back to what I was saying. On Monday, we got this consolidation range. We see, we can mark out, like a high and low consolidation range. We got the manipulation on Tuesday that comes and takes out these previous levels and reacts at all these order blocks we got here. And it gives you the chance right here to get short on this Tuesday. So you take here, you could have even took your first profit here. That's how many pips that is. That's what's that? 21.44 down to 21.02. So that's like 40 pips. So you could have short here, take your first profit at 30 pips, and then let that move your stop loss to break even and let the trade sit, which is one of the hardest things to do. But when you're using this type of strategy, that's what you got to do. You just let it sit. If you would let your stop loss sit where you shorted at, you see price never came back to that level. We came to New York, consolidation, then drop. Just imagine if you had a lot sitting on this right here. And we went from, how many pips is this? Hold on. Let me look at this. So I had a 20 pip stop loss. And how many pips is that, yo? Oh, right here. What's that, 165 pips? That's 165 pips on one day. And that ain't even it. It dropped even lower than that. Look at that.
Did it one day?
Yeah, this Wednesday. This happened Wednesday into Thursday, but this first drop happened Wednesday. Then this is on Thursday, and then it ended on Friday. That's 200. That's 300 pips. That move was 300 pips, and we could have had all that mapped
I'm
out.
just saying, sometimes fundamentals do matter. In comes Jerome Powell. That's why we
Hey,
curse them
team
places.
technical over here, man. Team tech.
Exactly, and you can combine those. You can combine that.
See, I trade both. See, that's why I say I'm like, see, it's okay to be a Marvel character, be with a certain power. I'm like Thanos, right? I'm gonna do it all. I'm gonna do it all. Shout out to our brother Stargard, right? He definitely know that Thanos character.
Hey guys, I'm about to log off, but I appreciate y'all time and the knowledge. I'm gonna finish. I'm watching live a little bit later, but I'm gonna watch this game going on right now. So
Yeah, the finals.
yeah, I'm gonna watch it.
All right, thank you for
You
jumping.
enjoy it. We appreciate you, brother Sway. Look forward to seeing you on again, man. When we come
definitely,
on,
definitely.
You definitely welcome to get with our little. We got a little Facebook group. I don't know if you're on Facebook, but Sister Monica, she might get hit.
Miss Monica Lamb.
Yeah, message me a messenger, Facebook Messenger. I add you to the group.
Okay.
Somebody gonna get the boot.
All right.
Yeah. So I can go back here to some other weeks. You see the same things happen. You got that Monday accumulation. You got that Tuesday manipulation, and what happens? We go down to Wednesday. Wednesday comes and creates that fair value gap where it kind of comes back and returns to that open price, and we continue down straight through where liquidity. And let's say we took our fibs. It's all different types of ways you can measure this out. Oops. Let's say
y'all put it down, boy. Y'all, this is archive right here for them.
Yeah.
For the book.
But yeah, like I would, of course, I would have all these high time frame levels mapped out as well. And you're looking at these, things to trade under and above levels, like we said, when support can become resistance, all these type things. Let me get rid of this real quick. But I just challenge y'all to go through charts and look at this concept. Look at this concept, right here, Monday comes, Tuesday, we got that manipulation. Price trades back here, but again, on Wednesday, we continue down the same way. You at least got your pips from that New York session. And let's say if you move your stop loss to your entry, you may or may not got a trip depending on where it was at, or you could have got back in. And then another concept I also want you to understand too is the Asian session retracement. So if we can look at these Asian sessions and then chase them up into the London from one session to the other, a lot of times we'll get retracements into certain levels. It didn't retrace all the way into there, but a lot of times we would. Look at this to the upside though. Right here. We go ahead, we trace that to the top. Put these wicks. Look at that. So, right here, we got Asian session. One of the things about Asian session, often London, of course, wants to take out these levels, but Asian session also just kind of sets the tone for the day. It's like it's where the price is anchored to. So, as it moves away, it wants to return back to the midpoint of that Asian session. You'll see that a lot of times. You'll see movements like right here. When it returns back to the midpoint of Asian session, look how it moves up. So having these sessions on your chart can really help your trading and understand how price is moving and what's being done in one session can give you hints of what's going to happen on the next session. Look at Asian right here. We got this line that represents the Asian open. London comes up here. You got some institutional manipulation trade all the way back down into that level of the open price, this represents the open price of the week on Monday, which I showed y'all the Tuesday strategy, which is a little different from, trading this on a Monday, which you can that strategy I was showing y'all, that's just a very specific strategy to really get some good, nice long-term gains. But you can still trade on a Monday and use concepts like this. When price moves to this, the weekly open is a very important level. The monthly open is a very important level. The daily open is a very important level. So having these laid out on your charts, can really help you. They can really help you. And real quick, let me show y'all something else real quick. All right. This is how I map out my trades with that on TradingView, right? This is my battle station. This is how I get in and out of trades. This is what I use to pinpoint my trades, right? This is Hugo's way. This is MetaTrader 4. I have certain custom indicators. I have certain things I have people build for. One thing you can realize when you're looking at this chart is these different color lines that have what? London, Frankfurt, New York, Tokyo, and it shows the open prices of these sessions. This is let's look at on a Monday. We got Tokyo. This is Tokyo open price. We have London. This is the London open. This is Frankfurt. Actually, Frankfurt opens up first. And then you have London and you have New York. And then this is like the New York close, if you will. Then Tokyo, Frankfurt, London, New York open, New York close. Tokyo, London, Frankfurt, New York open, New York close. And you can see how these lines really act as support and resistance in a lot of ways. You see how prices reacting off of these levels. Look at this London open. Price came up, traded through here. Price came back, hit off that London open price, came up again, hit off that London open price, and moved up. And one of the other things you can see is I have the weekly, this kind of boxed out as a weekly level right here. It's like a candle. This is just the body. I know the wicks would, lie at the extremes. But we have right here, you can see when we take out previous weeks, liquidity, that's the move we were just looking at, Again, we was talking about the whole levels. That's what I have right here, these whole levels and half levels. I have them right here. They're very helpful with showing support and resistance right there. That's support. I also have these sniper marks. This is showing what liquidity is being taken out, and it's kind of showing market structure. And what I can do a lot of times is just take my pivots. When I break the previous liquidity, I can take my pivot from one to the other. And right here, I actually got the optimal trade entry and all that stuff laid out. I messed. I don't know why the target's not on here though. I got to reset that. But we have right here, look, the retracement into that optimal trade entry. We can even let's look at the top to bottom. We go from here to the bottom of there. And what happened? London comes right here to the optimal trade entry. Retraces right here, shorts all the way down, right? So these little sniper marks, they're also ICT, structure. They turn a certain color, like they're white when they take out previous liquidity, and they turn blue when they take out other liquidity, and that turn white when they show me like that optimal trade entry. And we can see delineated as well the open prices of the last 4 days. We see Mondays open right here. We got Tuesdays open right here. We got Wednesdays open up here. We got Thursdays open right here. And we got Fridays open here. And each one of these open levels, they acted as some type of support or resistance. Each one of them. Now, I'm gonna take them off real quick, just so we can see some things a little bit better. so we can see some things a little better. The daily open, close. Nope, that's not it. Oh, there you go. I don't know how long I searched these forums to find these indicators. Man, I was digging through some stuff. Y'all have no idea. Trying to find indicators that work the way I see price action. Oh my goodness. I'm talking about, I'm going through 1,000 pages and forums looking for stuff. Y'all understand. But again, I took that off. So this is another line, right? This is the month. These are monthly levels. It creates a horizontal line that's showing you the previous month's high, the current monthly open, and the previous month close. You know, kind of this confluence in this area. And you see how price came down. That remember what we talking about, that high time. Think of these monthly levels as a high time frame candle. You know what I'm saying? You know, you kind of came down, did a manipulation up, you know, came down, found some support, and manipulated back up again. When we came back down, we found some support at these levels.
Now, is that so far within that month?
This is say it again.
Okay, so I'm saying like for the price, so for the close, I think it's 29 point was that 25? Is that so far within that month? So for like this month?
Well, this is the previous month's close. So
okay.
This is where it closed last month, and this is where it opened up. You know, there's a small gap, you know, between, you know, one that from one month to the other. Okay. But it kind of creates a fair value gap in a way. For that, when look, I'm over here talking about, and I don't really use no fair value. It's just that it's just so automatic. I don't even necessarily think of it as that, you know. But you know, we kind of leave it and returning to those levels. Okay. And another thing I can show you here. Okay, well, that was the monthly. Let's look at the weekly. Draw the weekly lines. Okay, previous week's high. And this is the previous week's low. Let me see. Is that it? Let me see. I think that's, yeah. Okay, I think I have that black, the Texas black. I have to change that. But this is the previous week low. And why I got them red and green? Because it lets me know once we trade above this level and take out this last week's liquidity high, I'm bearish, and vice versa. Once we take out this previous week's low, I'm bullish because I'm looking at that accumulations, going back to those ladder charts. You know what I'm saying?
Yep.
We're going to that accumulation, manipulation, distribution, right? I'm gonna go. Dang, I don't have. See, on my other one, I actually have something real cool. Let me see if I have that here real quick. Let me see if I have this here. Y'all don't. You know, I got a lot of indicators. I know. Let me see if I have the one, because I actually just set this one up so I can have one to look at the dollar specifically on this computer. But on my other computer, I really have everything. So it's a certain indicator that I don't think I have on here. Let me see. This is very, very useful. Nah, I don't think it's on here.
Did all these files come with the actual would you call it, Hugo?
Oh no, not bro. I told you how I was going through all these forums, bro, finding all this stuff, bro. This come from digging. Some of the stuff you can't even find with Google searches. Like I found them on just like some weird forums where one person was talking about it, giving it to another person.
Man,
for real.
I'm happy you got it organized, but God, just look at that.
All right. I don't see the one I was looking for. So I do have this one indicator, right, that will show right here the high time frame candle right here. And I usually have like two weekly candles right here, and it shows in proportion with the size and everything, like the wicks. I have a bar one that shows the high time frame bar, so I can see literally when it goes down into that manipulation and all that, like right here in this panel, but I don't have it here. But anyways, that was that weekly. That's that weekly line right there. And then I have a daily right here that shows you that daily high, the current open, and the low. And agreeing, again, when we getting under these low levels, I tend to have bullish, and we getting above these high levels, I tend to have a bearish look, depending on the market structure. At the open level, this is really important. You see how that kind of that fair value type of situation where we move, we came and moved, we hit that. This is the close in black too, so I don't think you can see it, but it moved off of this, ran up, and returned to that open price, which is also Tokyo's open, which you can't see that line because this white line is overlapped, so you can't really see it. And we have a move higher. So you can see these same concepts. Now, another thing that I have here is I can this is how I see these order blocks easily, right? For one, I can do this is a 4-hour candles. So you see how in the background it's showing the candle, like this is a green candle, red, 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 green here. So right here, this is literally a bearish order block. And the New York, close is that open price, right? The New York open is that midpoint. And you can see, that kind of acting as resistance. Same thing here. These open prices, line up with the order block that's right here. It's this 4-hour green candle right here, going up. Now let me switch this to the daily real quick so y'all can see the daily as well. There we go. All right. So, bam. So this is how you see the daily candles. It shows the outline of the candles, open, high, low, and close of the daily. So right here, what is this? This is a daily bullish order block. So let's say if we went ahead and inserted a shape from this order block, from the top of this right here, there's the open price right here to the midpoint, which is like right here. And let's color this in. It's going to clash with some colors and stuff, but I just want you to really see it, how it looks. Oops. Oh my goodness. All right. You see that? Yeah, see that, right?
Yeah.
Which is also, there's, order blocks. These are order blocks right here that lines up with these open prices. Literally every session opened up in this area creating support. And you have this order block right here. So mainly the London Open and the New York Open is really lining that confluence for that order block perfectly. And if we, let's look at the bearish tip. This would be that bearish daily order block. And we can turn that red. Okay, and we can take our field and let's draw a field from the body, the top of the body of that red candle. Oops. Draw the field from the top of the body of that red candle down to the low when it took out the liquidity. And that's how you create a technical trade idea using this strategy. And what session is this? London. We had this from Tokyo going to London. We got this manipulation up. This is Frankfurt, New York Open, London Open, all lining up as resistance. Price trades into there, reacts down. And you can also see rectangle properties. You can also see right here, this red candle, this is that 4-hour order block that lines up with it nice. From right here to that midpoint of that candle. Y'all get the point. Yeah, I get the point. Yeah. So I created this to make things easy for me, to make it 1, 2, 3. And I'm about to show y'all something else kind of crazy. I gotta show y'all this too. Hold up. This right here, like I say, I love candlesticks. Oh yeah, let me explain a little bit of this down here. Right here, we got this simple RSI that gives me a color for overbought, oversold. Makes it easy on my eyes. How'd
you do that?
The RSI
colors.
Oh, it's the indicator is coded like that. It's coded to have once it gets overbought, oversold, to turn a certain color in that area. You know, this is also, you know, like a smooth stochastic type. You know, it'd be there. I don't really use it like that. I do use these cycles and these entry points. A lot of them just represent when liquidity is taken out. So like we got a red move here. If you see, this is the top of this here. We got a green here. We see right here. This is right before the liquidity. If that move, we got a red right here, which is when it made a little move, but you know, we're still going higher. And the way we would know that is we can look at these 4-hour, you know, breakers. You know, this right here, this resistance that became support. This is a 4-hour, this is a red candle on Tokyo. And this is like the concept I was talking about when former resistance, you know, becomes support. Right here. And you see what it did off that level. That's why it's going higher, because it untraded to where that former resistance, they traded above that former resistance. So now when it came down, it's acting as support. And if you took from this pivot here to the top, you will also see optimal trade entry. Actually, it's from the bottom pivot. Yeah. You'll see an optimal trade entry, which also lines up with, let me see, you know, again, remember that order block? All that stuff lined up. This is a smooth, this is another Skitax that I had, you know, do make, like when, whenever you have this red, whenever it becomes red like this, that's mean you're having a breakout to the downside. Liquidity is being taken out to the downside. So we're technically bearish on a breakout. So, you know, this to know like this is more of a short-term breakout trade. But, you know, as we return up, soon as this green line pops above this red line, that's when we bullish. Same thing when we got this green here at the top. When this red line pops above this green line, we bearish. So it's just, I really wait for all these things to kind of line up. It really just makes it a lot easier for me to trade, honestly. That's that. And I do my manual analysis again, you know, with the order blocks and really lining up the higher time frame on TradingView. And once I got that higher time frame levels that I need, I'll come here and define it all the way down, you know, on these levels. And let me go down to, let's say like a 15-minute. Let me erase this real quick first. Even on a 15-minute, let me take off this daily level real quick. I also have on a 15-minute, I have these levels like, all right, this is Asian session. And you have Asian low, Asian high, Asian open. You know, London low, London open. I mean, New York low, New York open, New York high. Asian high, Asian low. So I kind of have these delineated, and why I do, because remember I was talking about really good, you know, you can take little scalp trades, just trading these previous session low highs being broken. Like, see, when we trade down under Asian's low, we get immediate reaction and pull up, you know, when we get underneath, whenever we trade through these levels. You know, same thing with Asian. When we trade through these levels, let me take these 4-hour candle, make it a little harder. Yeah, so we got these New York levels. When we trade above it, so we bust through this New York, then that would let us know we can get short. You know, and also if we put that Fibonacci's, you know, you can trade any time frame. And when we combine it with those high time frame order blocks, weekly, daily, we can really do some damage once we get on top of one of these order blocks. And we can, a lot of times I'll just scalp, I can get in and out, get my pips, take my first profit, and then let the other one ride. When it comes and gets taken out, I do the same thing again, just like over and over, because I know I'm getting that reaction. So I can trade inside these ranges and kind of build up my capital and make a nice move, What else? One other thing. Oh yeah. Let me see. I have the breakout. Do I got a breakout over here? Let me see. I'm putting y'all to sleep, huh? I ain't putting y'all to sleep, man.
Nah.
All right. So this is basically an indicator that gives you targets. That gives you basically a trading style, open, an entry, stop law that based on candlesticks. So right now I'm put on a 4 hour. And then I'm gonna put that other indicator on the 4 hour as well. So it'll stay. Hold up. Matter of fact, we put this on the 15 minute. Okay. Okay. So let me scroll over here. So this indicator right here, we put these 4 hour candles off. So this indicator works right here. It works. It shows you the open price. It shows you that high, the previous high, price. And once you break past that, it'll give you a sell order. Once you break above that, it'll give you a buy order. So like I use, and it gives you, this is, 618 extension, 100, 170. So you got your entries here, and then you have your targets here as well on a 4 hour. And I can change this to work on a 4 hour. I can change it to work on an hourly, and I'll wait for all of them to line up. Let me change where is X targets. So we go to the hourly. You see now it's basically a target for the hourly. And let me see. Let me change the hourly candle so y'all can see what I'm talking about too. Hour. So let me go to a 5 minute chart. So we done went down to a 5 minute chart. And now we have this thing that gives us basically targets for the hourly. You see, remember before it was showing like the 4 hour. Now this is showing me the hour, and where we have that, that open up price is showing a high. Once we cross under here, we're kind of in the sell entry. We might look for, like some type of order block or, higher time frame type of situation to get that extension at least to the 100. The first target was right here, second target, third target, fourth target. And I'll have 3 charts with 3 different time frames with 3 of these targets at the same time. I'm gonna have the hourly one, I'm gonna have the 4 hour and a daily, and I wait for all of them to line up with order blocks, with hold levels, with maybe some of my you see we got a sell entry right here on the indicator. We got sell entry. Wait for those things to line up. Wait for it to line up with like those open prices or whatnot. Hold up. Yeah, so and even right here on the 5 minute, you can really see these levels better, like this New York high, low, and that open price, same thing. This Asian, I don't know why I don't see London. I gotta go. I don't know if I got a black or I gotta edit it or what. But yeah, I just wait for those levels to be taken out. Right here, see this New York London, we took out that New York level. Took a short entry. We also got a short. We oversold on the RSI. And hold on, one more thing. This is the last thing too that I do to make this easier so I can see this a little better. So now you can actually see the session. This is Euro session. This is USA. This is Asia. And like I say, you're waiting for, these sessions to line up with these open prices, and when they take out one level, you're gonna have reactions. That reaction is either gonna be a reversal or retracement to a 618. And yeah, man. If y'all got any questions, let me know. I know I'm gonna talk to y'all to death.
No, this is definitely one for the books. Y'all teaching tonight.
Yeah, most definitely.
Yeah, and I was just trying to show, it's different. I look at price different. I created my own strategy, around this. Like I literally, like Oba say, I done took from everybody, that, I hear from, Oba AE, Anton Krill, ICT, Mark Douglas, like, all these people, and then just created something that showed me price the way I see it. And this is something that I created to make it easy for me to trade. Like to somebody else, it might look kind of like Chinese, but I guarantee you, once you understand how this works, a child can see when these things line up. Especially if somebody didn't know a lot about trading, even though I tell nobody to start with an indicator, you need to learn how to trade these open, high, low, close. I would tell them to start there. But let's say they didn't, let's just say this is the only thing they would do, and they wouldn't do nothing else. I would just tell them simply to look at these entry points and wait for a run on liquidity and hop in. Sometimes, it'd be that simple. These right here, this is the most reliable indicator I got. These entry points.
When you hopping in, you putting a certain dollar amount and it coming out with a certain dollar. Basically.
Yeah, for example, let's say I'm trading a standard lot. I'll be trading a standard lot, and I would look to make 20 pips, sometimes 10 pips if I know I'm doing some quick scalping. But for the most part, I like to put my trade into 2 or 3 parts. I take my first profit at 20 pips, and then I move the rest of it to break even. So that even if it goes against me, I at least made that 20 pips, and I now have the psychology to, the psychological freedom to allow this trade to run because I already made my standard amount of money that I aimed for. This is just ice cream on top, So I'll take that profit at 20 pips, and then I'll let that second one ride to my profit targets that I have on the Fibonacci or that I have on that candle indicator that show my targets. And it depends. If I'm trading something smaller, then I'm using that hourly target thing. If I'm trying to trade that whole weekly range like we showed, then I would be using a daily, or I use the weekly one. I can put that whole thing on a weekly and show the same thing. And when especially these session open prices, like that, for me, it just made it so much more easy with that, because it just really shows me that support and resistance. I mean, I know something's going to happen at that level. I just got to wait for it to happen. Line it up with my analysis,
Come here. Y'all gave AE a break tonight, boy. Y'all.
Well, AE, what you saying? AE sleep or something?
AE probably. Y'all check his cabinet. Hey,
Brother Marquise, I don't know if you want to switch gears right quick, but I want to ask you some questions on those credit spreads.
Oh, for sure.
And then, is it possible if you could, you can go to or if you can open up your Thinkorswim and then do a dummy account and see how it forms.
I'm not sure. Did they let you do it on weekends? Like they'll let you,
or input the you was gonna set up actual credit spread.
Yeah. Oh, okay. Let me see if I can do that. Hold up.
You can paper trade options on Thinkorswim.
Yeah, it was. I thought it was talking about if the market is open or whatever. Do I have Thinkorswim on here? Yeah, I do.
Getting in.
Yeah, those credit spreads, man, they're very important. That's how I make my. Honestly, that's the most reliable thing thus far for me.
Yeah, I know.
Not only reliable, it's just it's not stressful.
Don't you have to put up a certain amount of capital to do
Yeah,
those spreads?
you have to put up a certain amount of premium in order to do it. Because you're basically, you normally couldn't sell these options, right? You don't have enough shares to sell them, right? Especially on the SPY. You don't have enough. Most of the options I play is on the SPY, but I don't have enough shares to sell the SPY. You need 100 shares. So what you're doing is you're buying 100 shares and then you're selling at the same. So now you're basically middlemaning and being able to get those shares as collateral to sell. You're able to sell because you're using the contracts that you bought as collateral. If that makes sense.
Yeah.
Yeah. All right, let me type this in. Yeah, I'm trying to set it up now. Shoot, I should have pulled up Tastyworks. That's what I actually use the most. Let me see. Oh, let me see. Paper Money. Do I have to create an account for the Paper Money?
No, it should be like a little leather, like a switch back and forth. I mean, like if you want to pull up Tastyworks, I just don't want you to show your actual account or anything since it's being live.
Yeah.
You could change your account. You don't see it where it says live and paper.
Yeah, when I go to live or paper, it asks me a username and password. So do I need to log in mine? Then can I switch to paper, or how do I?
Hold on,
yeah, you can log in regularly and then switch to paper.
Yeah.
Okay. Let me do that.
Dang, what is mine?
So sometimes, man, I got too many passwords. So. I'm trying to stay. Trying to stay one step ahead of these hackers, man.
These fools getting on my nerve.
Yeah.
It's those same people who ask you about like that car insurance.
And the thing is, once they get, if you're a type of person who use the same password for everything, they get one. They have a field day. Okay, I'm trying to. Okay, I think this is it.
I'm trying to get in mine too. I'm the same way. Shoot.
And then I'll just have like slight variations, and then trying to go through them.
I think I got you beat.
Okay, there we go.
Oh, you got it at the same time.
All right, I got it up. Let me hold on, let me accept this agreement.
And thank you guys for still hanging out with us out there in YouTube world. Like, share, and subscribe. I forgot to tell y'all, hey, we be getting it in. Hope y'all learning something.
I'm telling you.
They putting it down this evening.
Yeah, I'm just telling you, they ain't breaking it down like this on these other channels. I tell you that much. They just gonna show you the most simple 1, 2, 3 stuff.
I'm in my paper trail and Thinkorswim, but
Okay, let me see. Go to trade.
I'm in paper.
Let me see. We can go here. Where is I'm trying to find indices? Well, I'm trying to find a SPY. I don't know if I can type on my. I just spilled some coffee on my keyboard. So buttons ain't working right now, so I keep having to put it in tablet mode and use the keyboard, the internet keyboard thing. There we go. I'm about to hit Amazon tonight.
Alcohol on it, old Marquis. Use rubbing alcohol.
Oh, it's a rubber alcohol?
Rubbing alcohol, it helps because that rubbing alcohol doesn't necessarily it's not necessarily water based to the point where short it out because it's gonna pretty much just I forgot what it dries up on its own. Right? Alcohol, like rubbing alcohol.
Okay.
Try rubbing alcohol. A little bit, try to get between it with some Q-tips and a rubbing alcohol or cotton swab.
Thanks for the tip.
Facts.
I'm looking to see where you he got to change all them colors.
No, I'm about to see about studies. Oh no, I was trying to see if they maybe had my studies in here, my setup. I was going to just go to it real quick because we could have saw it. But okay, as far as the options is concerned, let's just say
I see where yours says single spread. Let me see. Mine don't say that.
Let's just say.
Why mine don't say that? So maybe I have to close some of this stuff. Close that.
I don't know if I got my right levels now. Oh, no, that's not right.
Oh, I can't do it. My screen don't look like yours.
No.
No, talking about over there where your options, where you have option chain, filter, spread, single. I guess that's where you're gonna change it to the credits.
Mm-hmm.
But mine don't say that. I just got call and put. Maybe because I'm not.
You got the trade tab up.
Oh wait, let me check again.
All the way at the top.
Yeah, his screen trade. What you mean at the top? Hold on. Let me go back. Let me look at this.
That's trade right here.
Of course, Marquise. Yeah, I clicked it on the side, but I don't even have all those options like that. He must be having a more advanced account. Yeah, I can see that. I just don't see. You see where it says where you had that blue where it says the option. Hold on, I'm gonna show you.
Change.
Yeah. I don't have none of that.
Oh, you saying right here?
Mine say calls and puts.
You type in the ticker, the SPY ticker.
I think they just over just circle something up there.
Yeah.
Then you gotta type in SPY. Like you have to type in the ticker.
No. My screen, my whole I have the SPY, but I don't have all I have is calls and puts. That's it. Maybe never mind. I see covers. No, but okay, but if I hit maybe I hit options trade. Oh yeah, mine just look different. It just looks different. My screen looks different. I found it, but I don't have the credit window. I only have um um
my
options
Fibonacci look like that?
trade. Huh?
No, I'm saying, why my Fibonacci on the left like this? I don't like that.
Wait a minute.
I'm sorry, I be OCD with this sometimes. I gotta put this on the right. On the left. Yeah, hold on. On the right. So why is it on the left? Oh, that's the price. Okay. So extension right on show
It ain't the same.
on the right.
I thought that was the same thing. Oh Lord. Now these get over here.
There we go. Okay, I like that better.
Oh, I messed it up.
Okay, I like that better. Okay.
No, I don't have that. My screen is totally different. I'm gonna figure it out though.
So hourly real quick.
Like mine don't show nowhere near the way Marquise will show.
No?
Nope. I can get that chart like that and the options, but I don't get those little. I don't get the extra stuff. I think I swim.
Are you on a paper or is it your live account?
I'm on paper. He over here changing everything.
No, I'm just drawing out these order block. I'm trying to draw a daily order block.
I'm there. Do your thing.
No, hourly order block real quick. So I can just show like an example of like, okay, this is where we would have the resistance at. Oh, I don't know what I just did with that line. Okay. Go back to the 15. Okay. Okay. So looking at this day right here. All right, we see where this order block is at right here. Let me change the color because it's not clashing well with the red candles.
Like a pink.
All right. I think that's better. So what I did is this is an hourly order block right here. And I drew the Fibonacci from down here to right here, right? From here, from this swing to this swing, taking out these lows right here. So like we came here, took down these lows and retraced back into the 618 right here. So, and we also have, this will be a little 15-minute order block right here. And right here we got, so let's call this a 30-minute order block right here at this 786 level. So I would play a spread right now that right here, where this price reacts here is at the 618 level. And that is at 434, right? So I know usually the SPY, you know what I'm saying, it can move, but for the most part, $5 is usually a pretty decent level when you feel like it's extended as far as really it's going to extend. It's going to react the opposite way to do your spread. So if we at 434, I would be looking at the 440 level. Which is right here, all the way out here to this extension. So honestly, this is the level that I will ultimately be looking at. Like, I feel like this is safe to take a spread up here. Now, you're not gonna get the best premium up here, but this is where you can just, on a given day, pick a trade where it's really more than likely not going to really have the odds in your favor. So let's say I wanted to sell the 430, the 440s or the 439. So if this is July 19th. So a lot of times I do same day expiration. I like to wait for a day to expire to trade that day of the expiration. Sometimes I'll do the day before and let it expire, but I'd rather just get the easy money where I know, okay, price should stay within this range today. I don't have to worry about overnight or anything else happening. I'm just trying to catch that volatility. So let's say this was the same day, hypothetically. Oh, I haven't got that many options on here. No.
Yeah, look, go to the right. Oh, you got to change your.
Oh, I got four.
Okay, open it up.
Yeah.
I got four. So when you're doing options, what you do right now, we're on single. So you go to vertical, right? So it automatically shows you that put side and that call side, and it shows you the strikes. Now you can, a lot of times what I do, I'll pick a strike, and if I can go and edit it. Like once you pick it, you can change the date of the strikes, you can change the numbers of the strikes. But generally speaking, let's remember I said I was trying to sell the 440 calls. So I had to extend more.
It's gonna be on the left. I mean, the right side.
I had to extend it more out because it didn't show.
Yeah, because you're gonna sell it more.
440, huh?
You're gonna sell the calls or sell the puts?
Yeah, I would sell the calls because I'm trying to sell to a trader who wants to buy a call, who thinks the price is going to go up, but I think that it's going to go down. So I'll sell you a call with the assumption that you're not going to be able to meet your target. So right now, the premiums is only really 1 cent for the 440s because how it works as you get closer and closer to expiration, you start losing more and more premium. It becomes least and least more probable that you're going to be able to reach that price.
Right.
Yeah. So let's just say hypothetically the market was moving. Once we were at that point, the price wouldn't be zero because after we go and we take out that level and we're pulling back up, the perception is that the price is going to be bullish. Like everyone think they think it's time to buy that dip. So, the premiums will be in your favor. People will be willing to pay more for the calls because they think this is a bounce and it's going to keep going higher. So this price right here would be more probably like this price. You know what I'm saying? It'd be more like 5 cents per contract worth of premium. Right? So let's say you went to this one and you see we have it selected on credit. The price is 4 cents per contract. So that'll pretty much be $40 that you can make, per contract. I believe so. Yeah. Like, no, hold on. No, they don't sound right. Maybe you make $4 per contract.
Yeah, I was about to say, that's $4.
Yeah, more like $4 per contract, because usually what I end up doing, I end up getting more. Like this is 10 right here. So I end up getting 10, 20 contracts. So we're just gonna have it on 10 because it's easier to work with that number. So 10 contracts, I would be this is the strike, the 36. We having it right here, because just so we can see the premium represented more accurately. Of course, we wouldn't be, short and so close right here. That's a lot more risky to do that. Just depending on the time. If it was like right here, you only got a couple hours left and you see the premiums up there, sometimes you can, but it's risky. But okay, what we're gonna do now, we're selling the 436s, which will be right here. Should be right here. And we're buying the 437s, which will be right here. And I could take this Fibonacci out now where, you know, it kind of served its purpose. Okay. So like when you've done this, of course, this would actually be up here because remember I said we will play it a little more safe, especially like out the gate in the open, you know, as it's going up in that rally, we got a lot more time. So we would want to play a little more safe. You know, sometimes you might even take one right here at 38. It just depends. But me, if I can get the premium that I want and have a far away strike, I'm gonna take it. I'm gonna take it. So right here, essentially, your sell, when you sell to open, you're selling a vertical spread, and you're selling the calls. You're selling calls, the 436 calls, and you're buying the 437. So let me change this to a green color. So yeah, I can better represent what we're doing.
I was going to ask you, but is there any significant difference from buying where you want to buy it at like the 40s, like you said, versus at the like the 437s? Is there, besides like premium?
Well, it's that it gives me a better probability of being able to collect my premiums, and as price moves closer to your strike price, because this is like your roof and like your attic. So right. Like your roof, you know, price can come up here, but once you cross this threshold, it really starts eating into your premiums. Gotcha. And you know, once you cross this threshold, this is pretty much like your stop loss.
So it's lights out basically.
Yeah, this is your ultimate, you know, kind of stop. You get into this in this area, you don't want somebody to mess around and execute that option on you. You know, right. So your whole goal is to not let price, you know, kind of cut. It becomes very risky once price start getting into that area and crosses like this threshold. It becomes a lot more risky. But what a lot of people might do, they might have this a little bit stretched further out, which would cost more collateral because you're playing more with the eyes on your side. Like you really collect more premium for doing something that's more perceived as a little more risky. So if you're doing things that's less risky, you're not going to receive as much premium and it's going to cost you more collateral to get in. Sometimes it won't even make sense to get in. It costs you like $15,000 to make $70. You know?
So that's why you did that's why you did your fib in the beginning, right?
Yeah. They just kind of, you know, delineate where I feel like that real support and resistance at and make it safe. But we're just doing this, making it this close because we can actually, because this is more of the average of what I try to get. I try to get 4 cents. You know, think of it roughly as 4%. And on a trade, to me, I could take 4% already, even if I cut early and get 2 or 3%. You know, because I'm running some risk or I'm just ready to get out of the trade. 2-3% is beautiful on a trade.
I need to see you do this live not live on.
Nah,
we can do that. We can do that.
It is something that more
do the simulation.
Can
you play back the simulation?
I want to see.
Yeah. I was just trying to kind of explain, visual representation of how these coincide.
I want to see you in a maybe on Tuesday in the Zoom do this live.
Yeah, we can definitely do that. I like to trade that Tuesday because maybe we can play that one little concept we was talking about. Like we get, you know, a break under that Monday, you know what I'm saying, price, you know, and we would grab a spread, especially if we grab a spread that's maybe a couple of days out to expire, we can collect them premiums as it moves, you know, as time passes. But yeah, this would be, you know, like your roof, and this is like, you know what I'm saying, your attic. You don't want it really to go past here. So ideally, you want price to either move away from this point where you start collecting this premium, just like if you was going long and it start going away with you, it'll be eating at your premium. Okay, you now the other side of that when it's going against you, you actually making money. You know, so ideally you want it to either go against you or even if it stays stagnant. You know, you still make money because if you was trading naked options and that price start being stagnant, what happens? It start eating away at your premium.
Yep.
Right.
So in this strategy, it works to your advantage. Mostly everyone who's trading options, especially the naked ones, you're working against, time is working against you. In this situation, time is working with you. It's working for you. So you want it to either consolidate or move away, the faster, the better in this situation. So let me see if I can go to confirm. So what this is basically telling me, with these 10 contracts, I can collect $40 premium, and my max loss, which is also my collateral, is $960. Not including possible dividend risk. That means getting assigned. You know what I'm saying? Things like that. So you would get a $40 credit, which is basically like it will be put in a coffer, and as that time in a decay ate away, you would get to collect more and more of that. Minus your fee for this option will give you $27 for 960. So let's see what happens when I go up on these contracts more. Let's see.
So you paying $960 to do that?
No, that's what the potential loss that you can have.
Oh,
yeah, that's the collateral that you use.
Oh, Lord.
So now let's look at it like this. This is more of what I do. Now I'm gonna actually give you an example of like a lot of actual trades that I do. I'll do more contracts than this. Hold on. I do like 50 contracts. Because a lot of times I'll be putting up like $5,000 collateral. Yep, see 48. So right here, you're putting up $4,800 to collect $200 minus a $65 collateral, minus $65 fee. And the reason why that fee is so high is because you're getting charged for all of these contracts. That's where it's more advantage depending on your broker and how much they charge. You can call and negotiate these prices if you trade often. But, a lot of times we'll eat this fee up. If I can put up $5,000 and run a risk of, hey, if price goes against me $135, I'm going to get out the trade. So I'm really only risking $135 to make $135.
Mm.
You see what I'm saying?
Hold on, say it again for me one more time.
So if I have my collateral at $4,800 and let's say price started moving against me, moving towards me, and I start incurring a loss of $135, which is, I know that's what I'm collecting in premiums, then I would exit the trade and take that loss.
Got you. Okay.
That's my break even. It's not really break even, but it's just like, I'm losing how much I will be planning to make. I'm not willing to lose more than that, because if I let it sit, I done messed up before to where I'm just experimenting to see what's gonna happen. If, I'm tripping sometimes. Just like, I wonder what's gonna happen if I just,
And you made a donation.
You paid some tuition.
Big
That's
donation.
What he did.
Big donation. But yeah, this can literally take out all of this. You can literally have all of this 8 if this went past here, because once you get past here, it really amplifies. Just like if you're buying options and you get in the money, and that guy start moving, it's gonna go up. That money coming from somewhere. So same thing, vice versa. When that person coming up, whoever you sold that call to, they eating, and they eating your money. So you have to be very, very careful with your stop losses in this type of situation. But if of course, if I did this correctly, and even if it goes up to this and I only take a $50 loss or a $100 loss, I'm still sitting in that trade. And as we move lower, especially as we get closer to that expiration, you will see your premium start to collect fast. Even if you went way down here and we're towards the end of the day and it spiked all the way up here, you'll see your premium still sitting there. They ain't really go nowhere, because it's very unlikely they can, because we're so close to the end of the day, it becomes less and less unlikely that we're finna go up here. So even if you're moving up, you're still not making no money. Just like if you just running naked options and you getting close to your expiration, and I don't care if you in the money, whatever, that thing ain't really moving. Because
my fault. I'm sorry. So for this, when do you actually execute this? Do you do it like Oba does, OBE does, wait for the back end of the day? Or do you do like in the middle of the day when everybody's at lunch or?
Well, you remember this is when I did the Fibonacci. So when I had that retracement, when price, because this is still in that rush hour. So, this is kind of like Oba said, around that 10:30, we had that pullback. So, that's basically that retracement. And I know that's when the volatility is kind of going to come. So I'm trying to get in at the peak of that volatility so I get the best premiums and I can allow price to move away rather quickly so I can collect my premiums fast. And if I want to exit a trade early and not have to risk eating away at some of my position or price shooting up away at me. If I get around like 80% of my premium amount collected, I'll just, a lot of times if I feel like there's a risk, I'll just get out the trade because I don't need to collect 100%. I'm okay with 80%. I'm cool with that. But then, I move to the next trade. So this is typically, typically I'll say, this is $5,000. I don't always go for 4. It's just like, kind of the bear. A lot of times, a lot of times I might get, 6 or 7, you time that guy right. And in this situation, you paying 4,650 to collect 350. You see this difference minus that fee, 285. So that looks a lot more attractive, right? Like on a trade, collecting 285. This is routine. This is routine. People who got $5,000 collateral and understand, just some basic, price action, they can routinely put in, around $5,000 and pull out around like 250, 300 every day. They got an expiration 3 times a week. Definitely, you can make. What's that? Let's say it's let's call it 250. Let's call it 250. Let's call it $1,000. Well, you can make about 750. You got $5,000. You can conservatively, make around 750 if you were very conservative. And again, you can double, like I say, double up. You got 2 accounts. A lot of times I do this in 2 different accounts. Instead of collecting, 200 or instead of collecting 135, I'm collecting double that. But I am risking double that too. But let's say if you was making, 135 times 3, I don't know, that's like 390, it's about $400. A lot of people is not making $400 a week in options. A lot of people got $500 worth of collateral sitting somewhere, probably sitting in their dusty bank account somewhere, just sitting, but they're not making $300-400 a week off that. You know what I'm saying?
Yeah.
And honestly, in a nutshell, that's pretty much it. Like you can do this to the upside, down. You just got to make sure it plays out with your price action. And when you do something conservative like this, yeah, you only collect the 135. Yeah, feel like you're risking that much or you got that much collateral. Tell me how many people got $4,000 sitting in a trading account, but they really only trade 100 or 300 or just play an option here and there. But they got the collateral. It's sitting. But they could be conservatively playing way out of the money, collecting, a nice cool $100, $200 every day.
That's the strategy.
That's facts. And if you go to Robinhood, they'll even show you, you can see the percentage of probability of expiring worthless. So if you go to Robinhood and you look at the same day, what is this, the 19th? If somebody can go to Robinhood real quick and look on the July 19th and hit sell the 440 or even the 436s.
July 19th and sell?
Huh?
You said July 19th and sell?
Yeah, if you go to Robinhood, go to July 19th, go to the calls, hit the sale, and you'll see by all the strike prices, they have a percentage. And that percentage is like percentage of like basically expiring worthless or, percentage of expiring out of the money, if you will.
So what, you talk about the 436?
Yeah. So what percentage does that say?
So you got an 89% chance.
90%.
Yeah, basically 90%.
So that's what I go for. I'm looking for something that gives me a 90% chance of expiring worthless. So I only got a 10% chance that price is really going to come back here. When you combine that with technical analysis, you know, it gives you a really strong probability of collecting those premiums. And it works just like that. I really collect 90%, more than 90% of my trades. You know, some of the ones I didn't collect on, I think I only really lost two spreads for real. And that was one of them was more of like an experiment. And the other one was I took somebody else's trade without doing my own due diligence. Somebody just, you know, suggested it. And I just was like, I trusted their analysis. And it took me a while to get over I did that. I was mad at myself. Because it's like it always happens. Whenever I be taking other people's trades, and especially if I don't do the analysis after they give it to me, I'll be losing. I'll be mad because I'll be like, I just took my own trade. But yeah, you look for those ones that have a 90% or higher, if you get 92, whatever, you can get the expiration that's a 90% or better. It's lining up with the technical analysis, plus it's giving you the premium that you're willing to collect for the risk. And you gotta think, your risk is what Mark Douglas tell you. Your risk is not your collateral. Your risk is what you're willing to lose, what your stop loss is. So realistically speaking, how I look at it, at least, I'm risking $135 to make $135. So that's 100% return. But it's also 100% loss. It's like a binary. But it's a 90% chance that I'm gonna make money. I'll take those binaries all day.
Yep. Thanks. Okay, so you went over the intricacies of how to get in the trade. How do you get out of the trade?
Well, you would do the opposite.
Okay,
so you know what I'm saying? Let me see. I don't know if they'll let me actually execute this.
You could probably go back on the simulator and then like pick a different stock or pick the SPY and then run it and then do your actual option.
See, I ain't never did that before. You telling me something new here?
Hold on, let me see if I can open
think
up
I
mine.
ever did that. Simulating. I don't know how I go back. And plus, I haven't even dove in because like a lot of traders I know, they know how to use all these other tools in combination with options and spreads. Like some of this stuff is really useful. You know how to go and look at some of this stuff.
Yeah, look at the analysis.
Yeah. And what I also would do, I don't know, it's probably not going to show it now, but I'll be looking at, you know, this stuff here shows me, you know, like the outstanding calls and puts and, you know, where a lot of the largest levels and stuff at, time and sales, you know, just like, you know, like level 2, basically. They can help you. You can really see when certain traders are getting in and out.
Are they showing you other people's spreads right there?
Yeah, it's showing people's orders. Some of them can be spreads, some of them can be straights, all that. See, yeah, spreads. Yep. So what I basically looking at that specific spread. Let me see, is that a specific contract? Nah, it's just spread. It's different days, but yeah, these are spreads. It's showing you other people's spread and their price. So yeah, if I wanted to get out, I would literally do the same thing. I don't know if I don't know if it's working right now. Yeah, I don't think it actually put through, but you know, you could probably go here and oh shit, nope. Oh, excuse my language, but yeah, you would just do the same thing. You know, you would go to the order, and instead of selling that one and buying that one, you would just do the opposite. You would buy the one and sell the other. And you would they'll just tell you they'll give it to you like close all positions. You could just hit that button and it'll basically, you know, kind of preset the orders already for you to get out. You know, it would be the same way that you exit out of naked, but you're just doing the opposite. Like if I bought a call, you know, I'm gonna get out by selling that call.
I mean, you said go where again?
Like when your order is down here, let's say if you did put in, you let's say you did buy that order. So let's say you bought that order there, but because it's not like executing, I can't exit out of it. So you would like literally just kind of like go down here and just right click it, and it should have like close order.
Okay.
It's just pending right now, so it's not giving me the option to close it. But yeah, it'll let you close both of them at the same time. So yeah, I mean, it's really just doing two strategies. One of them is just buying a regular, call and selling one. You're selling one that's closer in the money and buying one closer out of the money as a hedge. And it allows you to sell because it gives you 100 contracts to be able to sell because you just bought 100 contracts. That's the whole reason why you can even get in these spreads, even though you don't have thousands of shares.
Man, I appreciate it. Thank you.
Yeah, for sure. We can definitely, do one live and really see how it works. It works a lot better when you see, because honestly, it's like magic. The work it don't make sense
Right.
in a way. Like, you know what I'm saying? In comparison to how you used to buying straight was regular. Like it's literally everything you're doing, you're flipping it to do the opposite.
Right. Mo. So Mo, you said Tuesday? Look at that. She went to sleep on me. All up in that snuggie.
I'm telling you. She said she got the snuggie.
She in the snuggie, bro.
Oh my goodness. Oh my goodness. But yeah, I'm really gonna be that's what I really just been doing, bro. Like just playing these spreads and both of my accounts collecting, you know what I'm saying? Like on average now, bro, I've been collecting like $300-400, a day, just doing the spreads. And then I take those profits from the spreads, and then I just do after like a week of profits or whatever, I take some of them and then just do straight naked calls and puts.
That's awesome, man. That's awesome. I've been doing leap calls and options on low beta stocks. So
okay.
Coca-Cola, was it I told Mo, I think I put it in the chat, I was doing Coca-Cola, Verizon, and Waste Management. So
yeah. Nice. Yeah, that's nice, bro. Like I used to, do like some leaps too. I was trying to set up for some leaps, but then one day I just thought about it. I'm like, how much, like me calculating how much I'm trying to make off this leap, and like how much I can make if I put this money to work over and over again.
Right. And that's where I only do that because I got a Roth IRA and I use my old job's money to fund my Roth. So I mean, when I'm playing around with it right now. So when I put it up in the actual in the chat, I just did one for Coca-Cola, but I'm planning on doing probably 4 or 5 contracts later on.
That's perfect. That's perfect for a Roth. Yeah. Especially, I'll say this, like the level what I showed y'all today, as far as those monthly and weekly lows being taken out. Like I think those are really good entries for those long-term pack trades, because you're getting it at a discount. You're getting at the bottom, of these candles. Understanding that how these candles work with the accumulation, manipulation, and then the distribution. a lot of times within the next, you know what I'm saying, at least like 3 candles, you're gonna be higher than your open price if you're buying it at the bottom. It works really well with the SPY too. SPY pretty much just trends up. It has never goes down for too long. Like even like there's certain like weekly order blocks on the SPY, and it would react a little bit, and then they never follow through on a higher time frame. Only on a smaller time frame it looks like it's following through, but on a higher time frame it bounces. What it usually does is it breaches that open price of the previous candle, like to the top, and it trades down into a 618 retracement of that previous candle, and then it rallies up over and over again.
Yep. What Obu said, they don't know how to take an L. And I think they're scared to take an L.
It's inflation. It's inflation, bro. That's really what it is. It's simply inflation, in my opinion. You know, like you continue to divide the buying power, it makes the assets worth more. It inflates the assets, which the stock market itself is an asset. So as we over time just continue to print money, the value of these companies just continue to climb. You know, because it takes more of these dollars now to buy, because the dollar has been divided.
Facts.
And one thing I meant to also put on too is I meant to show y'all the euro dollar seasonal chart as well. Like to a T, if you look at that from a month to month, every month, like, you know, I print out that chart and I put it on my desk, and I wait for those patterns to play out for that month. It's pretty accurate. A lot of people be sleeping on the simplest stuff that these funds use. I'm telling you.
Let them sleep, man. Go ahead, collect their money.
Facts.
I hate to sound crash, but yeah, let them sleep. Go ahead and get their money.
No, that's right. But yeah, if y'all got any more questions, let me know. I'm probably gonna take it down.
That's cool. Y'all did great.
You taking a nap like Mo?
Yeah.
Oh no, it's gonna be sleep. This ain't gonna be no nap.
All the time. And
You grown, you don't take no naps.
Yeah, nah.
Sleep. Brother Mathis asked, would it play better? Would it be better to play this towards the end of the
I'm sorry, y'all. I wasn't even looking at the chat the whole time. I'm over here talking my head off. I forgot we was live. I don't know.
You was in the zone. Listen, go back and listen to yourself when you first started. Listen, when you first started, I said, is he talking like he in a movie or something?
For real.
You was in teaching mode, like you had this little swag about yourself. I was like, look at Marquise.
That's hilarious.
Well, what I want to talk to y'all about today is, and he bring up board. I'm like, what the hell is he about to do?
That's facts, man. Just trying to, learn from the great teachers we got around us, man. You know how they present it, it rub off on you.
Yeah. Well, listen, you guys did great. I appreciate you all. This is impromptu. I was just like, you know what? I need to get back into my streams and get these charts and practice a little bit. Y'all took over my little stream, but it's all good,
Yeah, it's all good. I appreciate y'all rocking with me.
Sorry, Mo.
I definitely,
Sorry.
And yeah, Brother Mathis, the closer you are to expiration, the better, because it's just less time you have to stay in that trade. The more those premiums you collect will be amplified the closer you are to expiration. But the further you are from expiration, the more premiums you have to collect overall. The closer you get, the least premiums you can collect too. So like if you, did something, that expired 3 days from now, if you got in that trade now, the premiums that you collect then could be significantly more than if you got in that trade on the last day, because it's just a higher probability for it to reach where you don't want it to reach 3 days prior versus on the day of.
Okay.
Yeah.
With that being said, listen, thanks for tuning in. Make sure you guys subscribe to my channel. And I'm gonna go to sleep because I gotta make smoothies in the morning.
Yeah, peace, power, profit, y'all. And I see Brother Mathis too. I didn't even know you had them guests talking about the big candles and the red candles and the green candles. He had to
Yeah,
say
he
it.
did. Yeah, I see him.
But all right, y'all, man. Y'all take care. I see y'all. See y'all later. Monday we can make this happen.
Who knows?
All right, thank you.
I get workout in early tomorrow. Maybe we come back in right when the what's that oh man, this the thing we normally watch on Sundays at 6:30, 6 o'clock. What's that called? Oh God,
You talking about the futures?
the futures market open. You
Oh,
remember
yeah,
something to talk about?
Wow.
I know. I'm gonna
Nah, it's just late. That's all it is.
it is. It is. Peace, power, and profit.
Hey, peace, power.